outperform every other stock in the market.
And Peter, final word here. Are you on the same page?
Yeah, relative to the latter point, absolutely on the same page. I think the one distinction that's important to draw is that I see the consumer credit card data and the consumer credit data overall at 50 billion change on the last print is actually something of a negative, because the savings rate is falling and consumers are being forced to reach into to spend on their credit cards because of inflation is so hot.
Peter Cecchini, Savita, sticking with us. Going into the opening bell about 20 minutes or so away. Futures slightly negative. With more, here's Abby. Hey, Abby.
Hey, John, welcome back. And we are seeing a little bit of a slide here for U.S. futures, a bit of a pause after last week's big rally. And one of the reasons Apple, after the best week of the year, up more than 8% last week, Apple is taking a break, down about 0.5%. Not a big decline, but we do have yields pushing higher, so that could pressure tech in terms of valuation. American Airlines is down 2.4%. This, of course, after oil higher is helping pushing airlines lower. Carnival Corp travel down also as oil is lower. And then finally, Snap lower, John. This, of course, as Vertical has cut these shares to a negative. So the negative spending around ad spending for social media in question, causing Snap to decline.
Abby, thank you. Good to be back with you. We'll get you some morning calls a little bit later in the program. Coming up, an inflation summit from the Oval Office. President Biden, Chair Powell, Secretary Yellen in the same room this afternoon. That conversation up next.
Countdown to the opening bell is brought to you by Crypto.com, the world's fastest growing crypto app.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 96% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
The all-new LX600, ready for any arena.
We have unique economic strengths right now, the job market and the labor market being chief among them, which position us well now to focus on this challenge, which is bringing prices down. Obviously, the Federal Reserve plays a primary role in that, but fiscal policy and the economic choices that we make with Congress play an important role as well.
The main event today, President Biden, Treasury Secretary Janet Yellen meeting with Fed Chair Jay Powell today to discuss inflation. The White House writing in a statement the following. Yellen will join President Biden and Powell to discuss the state of the American and global economy and the president's top economic priority, addressing inflation. Joining us now from D.C. is Bloomberg's Anne-Marie alongside Maria Tadeo in Brussels. AMH, straight to you. What can we expect from this beyond just the photo op?
Well, Politico is billing this June for the president as a pivot to the economy. But, Jonathan, as you say, many are just guessing this is going to be a photo op. So maybe it's a performative pivot. What is left for this administration to do when it comes to inflation? You heard from Brian D. speaking to you, Tom, and Lisa earlier. Similar sentiment we heard from the price controls, and he respects an independent Fed. So that's really likely kind of the tune and tone of what the start of this meeting is going to be. The press will be allowed in for the top of that meeting. But it does show to the American people that this is what the president says, his top economic or top domestic priority.
Anne-Marie, forgive the snark if it sounds like there is any. But to pivot to the economy, where have they been for the last 6 to 9 months?
Well, I think the economy has obviously always been top of mind, but really it's been framed over the past few months as a lot of the price pressures Americans are feeling is because this war in Ukraine, the Russia's invasion of Ukraine. And the president's opinion piece last night mentioned that, but he said inflation was here and the war has exacerbated it. And that's exactly what we've been talking about. This was always going to be a problem coming into the summer and the fall of this year, but Putin has exacerbated that. And really, Jonathan, you could just feel it today, right? It's the day after Memorial Day, and it is another fresh record for Americans filling up at the pump, $4.62. It's about 50% higher than where prices were last Memorial Day.
$4.62, and it could go higher. Driving season starts. And Maria, in Europe, I believe there is a plan to pursue a ban and not a deal. What have we actually got in Europe?
Yeah, and you know, it's funny because to pick up on what Anne-Marie just said, the line that we hear in the European Union is very similar, that yes, inflation is going up. We see that prices, particularly to consumers, are going through the roof, but they talk about this concept of imported inflation. They say all of this is happening as a result of the war in Ukraine. So it's a very similar line that they take here in Europe too. Now, when you look at what was agreed yesterday, this is a partial oil embargo. Of course, it will affect seaborne imports of Russian Federation oil coming into the European Union. They say just this ban alone will put an end to 2/3 of the purchase that we see of Russian energy, of oil in particular, coming to the European Union. But the other thing that's interesting here is that there is an exemption to pipeline oil. But yesterday we had the Germans saying they want to put an end to this by the end of the year. So if they do what they say out loud publicly that they will do, we could see a reduction of Russian oil into the EU of 90% by the end of the year. What I would note, however, is that after this today, I've spoken to a number of officials, and they all kind of hint when it comes to energy, particularly going back to the inflation story, we've probably reached the limit for the European Union for a while.
Maria, great to catch up. Inflation surprise after inflation surprise, and a wrong kind of upside surprise in Europe right now, that's for sure. AMH down in DC, Maria Tadeo in Brussels, back with us, Savita Peter. Savita, on energy, you say the pain trade in energy is up. Why?
Well, it's interesting. Nobody owns energy. They want to own energy, but it's really hard to hold because of, you know, the emissions and the sort of the negative optics around the sector from just an overall, you know, the idea that oil has a terminal value of 0 over time. First of all, we think that's not necessarily true. We think that investors who are looking for ways to own energy without accessing energy are paying up for energy like industrials or materials or stocks that act like energy but don't have the emissions risk. Second of all, we think that energy companies are actually, they kind of got the ESG memo, and a lot of these companies are on a path towards improving their emissions, as well as, you know, the idea that we need oil to get to net zero. We're not there yet, and we need oil along that path. So I think, you know, what we're seeing is a lot of investors that want to play this oil price, this commodity upcycle, but are still fearful of owning the actual energy companies. We say own energy. It's still super cheap. It's still really underweight in the average long-only fund and the average hedge fund. These are companies that are returning free cash flow that is 9 percentage points above tips, which is another way of getting inflation-protected yield. So we think it's cheap, it's reviled, but it's really the best way to get exposure to the commodity price upcycle.
You can see why they're nervous, though, Savita. We've had a 60% gain on the S&P 500 in energy names, close to 60%. And Peter, for some people, they believe this could be the part of the world, of the market, commodities, energy, that takes down the cycle. And if the cycle rolls over, that's the last place you want to be. That's the view of some people, Pete. Is that the right position to take?
Well, you might have asked me that question because that's my position. As you know, for many months, I've been coming on your show and I've been saying, equities, especially tech, overvalued. In an inflationary environment, get long energy, get long commodities. And I think it's an important bifurcation that's going to begin to occur within the commodity complex where reasons, the conflict, the war in Ukraine being chief among them. That said, there is now a reflexive impact of inflation on demand, and that's going to start to affect hard commodities like copper, like lumber. We're seeing a reversal in their prices as we speak. And so I think it's going to be, it's going to be very difficult just to say be long commodities, be long energy, be short hard commodities. Soft commodities like wheat, for example, will probably also have a bid given the supply chain disruptions from the war. But again, I think we've moved past that sort of pivot point where hard commodities are now a better sale than buy, in my view.
So, Vito, I just want to finish on that, the risk around this story, and I guess the counterpoint, the other side of the argument, the other side of the trade, this view that the winners of this inflation story would ultimately be the victim of the rate story, of slower growth. What do you say back to it?
Well, okay. So first of all, I think that the idea that all commodities are created equal is absolutely false, and I agree that hard goods and lumber and metals, where we're seeing actual demand for big ticket items taper off. That's an area you probably don't want to double down on. But I think the idea of oil kind of killing the economic cycle, I mean, certainly we've seen that in the past. We have seen stagflationary environments where, just the spike in oil prices was enough of a draw on consumers' wallets that we actually saw declining oil demand and declining demand for everything else, and that threw us into a recession. So that's obviously what we're watching very carefully. I think what's interesting right now, and the reason that I think that energy has more upside than downside risk, is that China is completely offline. Let's think about when China comes back online and reopens. That's going to be even more of an upward pressure on oil prices. So I think, what we want to make sure of is that we don't enter a stagflationary environment. Just in case we do, the best sectors to own, which we're overweight, are energy, consumer staples, and some of the more defensive areas of the market. So I think that's the sort of appropriate positioning as a hedge against that stagflationary environment.
Savita, to your point, just the hint of China coming back online. Crude making new highs again, WTI and Brent. Savita, Peter, great to catch up with both of you. Thank you. Coming up in the morning calls, and later, Michael Purvis, a tallback, and expecting the robust volatility to continue. Futures down 0.4%.
Countdown to the opening bell is brought to you by Crypto.com, the world's fastest growing crypto app.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
At Fidelity, your dedicated advisor will help you create a comprehensive wealth plan for your full financial picture with the right balance of risk and reward, so you can enjoy more of this. This is the planning effect.
Hey businesses, you all deserve something epic, so we're giving every business our best deals on every iPhone, including the iPhone 13 Pro with 5G.
That's the one with the amazing camera.
Yep, every business deserves it. Like ones that reopened. Hey, we have an appointment. And every new business that just opened.
Like aromatherapy rugs.
I'll take one in blue, please.
It's not complicated. AT&T is giving new and existing business customers our best deals on every iPhone.
What if value and values could coexist? They can. ESG investments are changing the world, powering the shift to a fairer, more sustainable global economy. Bloomberg helps investors and businesses navigate the changing landscape and adapt to evolving regulation with data you can trust and insight you can act on to unlock ESG opportunities.
Stocks recovering just a little bit going into the opening bout. That's the price action. Here are your morning calls. Truist upgrading Dish Networks to a buy, highlighting the company's discounted pricing and potential partnerships. Morgan Stanley downgrading American Eagle to underweight, expecting the retailer to fall short of lofty second half targets. And finally, Vertical Group downgrading Snap to negative, pointing to weaker than anticipated ad revenue. Coming up, Torbakin's Michael Purvis expecting monster volatility to continue through the summer. Your opening bout this Tuesday morning is up next.
Countdown to the opening bell is brought to you by Crypto.com, the world's fastest growing crypto app.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
Print, this is Lisa. Hi, I'd like 50 welcome wows and 300 customer I love it.
Promotional products from 4imprint are certain to deliver ooh yes.
Wow.
I love it. Find some wow now at 4imprint.com. 4imprint, for certain.
Do you listen to the TV on high volume or have trouble hearing conversations? Then you would benefit from hearing aids. Don't waste thousands on expensive hearing aids when you can get Nano's revolutionary technology for just $397. Don't be fooled by higher-priced hearing aids. The CIC Recharge is a true hearing aid, not an amplifier. With rechargeable technology many customers say is superior to more expensive models. Call now and get not one but two Nano hearing aids for just $397. Plus, we'll add a portable charging dock and ship your order absolutely free. The CIC Recharge has a tiny in-the-ear canal design that is nearly invisible. Why keep missing out on important conversations or waste thousands of dollars? Call and get two CIC Recharge hearing aids for only $397 and free shipping.
800-833-9735. Again, 800-833-9735.
What does the future of strength look like? It's a personal trainer that assesses your strength and adds weight as you progress. It's dynamic weight that adjusts for you in real time for a more efficient workout. Come on! And it's a roster of coaches that motivates you to get stronger, faster. The future is strength you can feel and results you can see. And you can only experience it on Tonal.
Learn more at tonal.com.
I'm taking a quick work-from-home lunch break, so I just made these fried eggs with sourdough toast in my Brava. It took a few minutes, and all I had to do was press a button. Brava's cooking technology allows you to cook things that normally require very different temperatures, all in the same tray at the same time. So you get perfectly cooked chicken thighs or New York strip steak or salmon with vegetables that are tender on the inside and crispy on the outside.
Coming off the back of the biggest weekly gain on the S&P 500, going back to November 2020. Kicking off this week after a long weekend stateside, Wall Street gets back to work with futures negative about 0.4% on the S&P. On the Nasdaq 100, pretty much dead flat on the Russell, a bit softer by 0.4% as well. Let's get opening bout in New York, switch up the board and get to the bond market. Yields drifting higher by about 9 basis points now. Off-session highs at 282.78. And this started by Governor Waller. We'll talk about his words over at the Federal Reserve a little bit later this morning. Over in Europe, upside surprise after upside surprise. It is very much the wrong kind of upside surprise for Europe. Inflation, another record, 107.11. Call it 10 on euro dollar, negative 0.6%. And crude Keep repeating this. I think Bank of America and Mr. Hartnett over there called this the sneaky rally in crude. It continues. WTI 119 and Brent cleanly through 120. Top of the pile this morning, as you might expect, it's energy up 0.9%, about 30 seconds in. Here's Abby with the movers you need to watch. Hey, Abby.
Hey, John. Well, we'll be talking about that sneaky rally in crude in just one moment. But first, we do have a little bit of weakness here for stocks at the open, well off the pre-market lows. But the big laggard here, some of those big tech names, even with the outperformance for the Nasdaq 100, Microsoft, similar to Apple, down about 0.5%, just cooling off a little bit after last week's big week. Now, the airlines are very weak. United Airlines down about 3.6%. That could have something to do with that rally in crude, with WTI crude close to $120 per barrel, up for a third day in a row. On the other hand, as you were just mentioning, energy the best sector. ExxonMobil is a big winner, up 1.4%. And then Bitcoin, after being below $30,000 per Bitcoin for quite some time, now popping back above, taking lots of those names, including Riot Blockchain, up 6.7% with it. Bitcoin, John, technically confirmed to go back to $40,000 per Bitcoin. Let's see if it happens.
There we go. Abby, thank you. About a minute and 30 seconds into this, we're -0.4 on the S&P. Bottom of the pile, utilities down about 1.1%. We talked about what's top of the pile. Energy up by 1.8%. Over on the Nasdaq, also coming off the back of a decent week of gains after the longest weekly losing streak going all the way back to 2011. Ed Ludlow has more. Hey, Ed.
Good morning, John. We're down 0.1% on the Nasdaq 100, despite that weekly gain of more than 7%, the biggest weekly jump since March on the Nasdaq 100. The narrative is still there that the bear market in technology stocks has legs to run. The pain that we've seen is far from over, and kind of the loudest among the voices saying that is Bank of America quantitative strategists led by Savita Subramanian. 4 issues, right? The prospect for higher rates, slowing global growth, peak globalization, call it what you will, tough comps with the boom era of the pandemic, and then finally, you've seen dip buyers coming in at a time where institutions still have pretty strong overweight holdings in the technology sector. Growth and recession fears interesting. You look at valuations, we're trading at 21 times forward PE, 12-month PE on the Nasdaq 100, and I heard one of your guests earlier talking about how valuations are still too high when you consider this inflationary environment. Look on the Bloomberg terminal among the most read stories, Morgan Stanley's Michael Wilson saying the key fundamental call they're focused on, slowing growth, and their view that earnings estimates are too high. Too high, John, at 21 times.
Ed Ludlow, thank you. We got that quote from Mike Wilson over at Morgan Stanley. Ed, thanks again. I'll get to that quote now. It's difficult to construct a case for more than a bear market rally, Mike goes on to say, which could carry another 5%. But this is the punchline, the bottom line for Mike Wilson and the team over at Morgan Stanley. He says inflation remains too high for the Fed's liking, and so whatever pivot investors might be hoping for will be too immaterial to change the downtrend. I'll get Michael Purvis's thoughts on that in just a moment. We're down about 8 or 9 tenths of 1% on the S&P. Kaylee Lyons, Wall Street is always divided. It's still divided.
Yeah, and it feels like Mike Wilson of Morgan Stanley is always on the bearish side of the equation, and others always lean in the more bullish direction. But so goes the story, and it takes two views to make a market, John. Now, of course, the market we have seen has been more in the ballpark of Mike Wilson being white so far this year, and that the S&P 500 is down more than 13%. Worst start to any year since 1970. For the NASDAQ 100, down more than 22%. Worst start to a year ever. It has been very volatile as well. The S&P 500 has moved in a daily range of at least 1% in 89% of the trading sessions so far in 2022. That is the wildest start to any year since 2008. So it begs the question, are we in for more, or is the worst over? Of course, we already ran through what Mike Wilson of Morgan Stanley says. Yes, he could see another 5% or so in this current bear market rally, but ultimately he thinks the index will trade close to 3,400 by the end of the second quarter earnings season in mid-August, which would imply about 18% downside from Friday's close. JP Morgan, on the other hand, one of those that's a little bit more bullish. The team there pointing potentially for massive month and quarter end rebalancing flows at the end of June. They say that could see about $250 billion moving into stocks coming from mutual funds, pension funds, as well as foreign investors, which could, they say, trigger a sustained rebound in equities. And it's worth noting, John, JP Morgan also made a similar call, expecting a significant bump in equities due to rebalancing at the end of the first quarter. And we did see that rally from mid-March through the end of the month, John.
Kelly, thank you. Speaking of the rally last week, that was sparked in many ways, in some ways, by President Bostic. These words from him: I've got a baseline view where, for me, I think a pause in September might make sense. That was last week. Governor Waller said this yesterday: I'm not taking 50 basis point hikes off the table until I see inflation coming down closer to our 2% target. Which world should we be living in, Governor Wallace or President Bostic's? Let's get into it with Toolbacker's Michael Purvis. Michael, your view on that. Governor Waller or President Bostic, who are you listening to?
Look, I think the both and none, I guess, would be the short answer to that question, John. I mean, look, I think that the Fed is dealing with some incredibly complex issues facing the inflation story, the economic picture there. And I think they have to air out every side there, to kind of, in a way, to keep their credibility through this extraordinarily unusual cycle there. I'm not saying that's going to be enormously successful in preserving credibility, but I think it's to be expected. If you think about how unusual this cycle is, you're going to have accusations of policy mistake from both sides throughout, everything the Fed does going forwards here. So, if you have someone, net dovish coupled with someone net hawkish there, I think that's just to be expected here. We're just dealing with an enormous amount of uncertainty, through this, very unusual transition we're going through.
Well, Michael, which policy mistake do I want to trade? And that's the problem I have. A lot of people will criticize the Fed. It's a sport. I'm a part of it. I like to play it sometimes too. Forgive me for it. But when you start to talk about policy mistakes, I think you've got to be clear about which one. Is it a policy mistake because they smash growth to get inflation down, or a policy mistake because they're too late and have to accept a higher level of inflation for a whole lot longer? Which one is it?
Well, look, I would say this. I think one of the themes that's really developing is the divergence from core to headline inflation here. And if the headline inflation is going to keep getting even more robust with oil prices, rising again today, that the more you're getting towards food and energy and supply chain specific issues, the higher the propensity for policy mistake is, policy error is going to be, or put it another way, the more you're sort of swatting mosquitoes with a sledgehammer there, right? So I think, look, I think, my view is that we may be, they're probably going to be hiking pretty aggressively. I think the Eurodollar curve has it right, where you're probably going to see a relaxation next year. But then you may see, that may be temporary, and then they'll start hiking, yet again. How do you want to be positioned, in the bond market there is very hard, because I think, you're dealing with not just the Fed, but, the ECB is getting very active right now. And that's going to put upward pressure on term premium and all that kind of stuff. And QE is just getting in gear. That's going to put upward pressure on term premium as well there. So it's hard to be, sort of a strategic bond bull right now. But I also don't know how, I'm sort of, both not bullish, but not, super bearish on treasuries right now. I think they're going to be kind of range bound as these sort of forces collide. It's important to see that there's, the inflation story, John, is very, very complex. There's a lot of deflationary, disinflationary forces occurring. At the same time, you're having resurgences of food and energy prices here too. So it's going to be a very, very complex story here. I think, the easier trade, I think, is what your prior guests were alluding to, which is that, the anti-ESG trade is the best energy hedge. You're, long materials, long energy. That's going to be better than buying tips, with this kind of, backdrop for the Treasury market and the Fed.
Well, energy is the story that's working out this morning anyway, and on the year too in a big way, close to 60% higher on the year on the S&P 500 energy names for that industry group, that sector. The energy story this morning up by 1.6%, the S&P down about 1%. If you're just tuning in, a lot of this coming off the back of the move we're seeing in the bond market by 9 or 10 basis points through the curve, up about 9 now on a 10-year to 282. On a 10-year, on a 2-year, up about 6 basis points to, let's call it, 254. Mike, I promised that I'd bring up the words of Mike Wilson again for you over at Morgan Stanley. Came out with a note this morning, just said upsides limited. I think we're all pretty familiar with the view of Mike Wilson now. He said this: it's difficult to construct a case for more than a bear market rally, which could carry another 5%. He went on to say inflation remains too high for the Fed's liking, and so whatever pivot investors might be hoping for will be too immaterial to change the downtrend. Do you agree with that, Mike?
Not necessarily, no. I mean, look, there's a lot of two-way volatility. We're at, last week we added 1 PE point onto the S&P 500. The week before we took off 1.5 points in a week, right? So you can get, you get up a couple hundred points on a stable bond market. You can get the equity risk premium, down to the points where you don't want to own it, right? It's a very fast-moving market here. The valuation arguments change as quickly as the prices do. So there. But I would say this, so I'd actually agree with Mike that I'm tactically bullish for another couple hundred points, maybe 300 points. I think there's, where I would disagree with Mike is that I don't call this a bear market rally. I'm not saying it's like this is going to go back to 2021 where every dip gets bought. No, I'm not saying that at all. What I am saying is that I'm expecting it to be very range bound in a high volatile range, maybe 3,800 to 4,800 throughout the balance of the year. And it's a very, it's an annoying condition, right? It'd be easier just to say, oh, it's going to be, one endless series of lower highs and lower lows, or higher highs and higher lows there, right? That makes everyone's job easier. But I actually don't think we're going to get that. If you go back to 2011, it often felt like you were in a bear market. We never really got into a real bear market, and we never really got into a bull market, but it was an extraordinarily volatile year. I think we're having a variation of that theme playing out right now. There's a lot of good things going on in the forces, but there's a lot of, obviously a lot of, problems economically, and also with, reversing this extreme, monetary policy, gracefully. It's a very difficult thing, and it's a global story. One thing I do want to mention, though, is that the China card, I think your guest from Bank of America just a few minutes ago was talking about the China factor. That is, I think, an incredibly important sort of force here. If it's hard to imagine that Chinese inflation would be 600 points lower than U.S. inflation, right? I don't think a lot of people had that, on their playbooks, coming into COVID.
Hard to imagine also, Michael, this might be a year where the U.S. outgrows China, given the growth fears we have domestically here in the United States as well. Mike, I've got to run. It's awesome to catch up with you as always. Michael Purvis there of Toolback, and mentioning the China story. That's a factor behind the rally we see in crude. On Brent at 124, on WTI just short of 119. A factor behind what we're seeing in the equity market as well. When you just break down a sector composition this morning, where the performance is, energy equities up by 1.9% and up about 60 percentage points year to date on the S&P for that industry group. Elsewhere, the story in the bond market, yields higher, much higher by 10 basis points on a 10-year to 284, on 2s to 255. I promised we'd talk about China. We're going to do that next. Up next, China's daily COVID cases falling below 100 for the first time since early March.
We're probably still a bit cautious. I mean, it's good news, and we still think you will get to a living with COVID situation in China, but probably not right away.
That conversation up next.
The opening bell is brought to you by Crypto.com, the world's fastest growing crypto app.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
Another crazy day? Of course. You're a CIO in 2022, but you're ready because you've got the next generation in global secure networking from Comcast Business with fully integrated security solutions all in one place. So you're covered, on-premise and in the cloud. You can run things the way you want, your team, ours, or a mix of both, with the nation's largest IP network from the most innovative company. Bring on today with Comcast Business, powering possibilities.
If you invest in the S&P 500, your portfolio may be too concentrated in big companies. This can leave it imbalanced and exposed when performance varies. Invesco's S&P 500 Equal Weight ETF RSP is spread equally across the S&P 500, which reduces potential concentration risk and helps keep your portfolio in balance. Stay in balance with Invesco's RSP. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
What have we got to look forward to?
I always think about this William Gibson's quote about the future, that the future is already here. It's just not very evenly distributed.
I'm more interested in parallel versions of what might happen. My practice in art and research is just posing some of these questions to imagine more of these different singular possible futures.
Hyundai Motor, connecting art and technology.
My first options trade?
Well, let's just say I did my homework. I loved the courses, enjoyed the videos, studied all the strategies, but I still wanted someone to walk me through it. So I called up TD Ameritrade. That's when I met Eva. She's an options specialist who talked me through the process and helped me learn all the tools as I made my very first options trade. Eva, thank you.
Feel confident making your first options trade with a passionate trader community, personalized education, and devoted trade desk support. TD Ameritrade, where smart investors get smarter.
At Southern New Hampshire University, you can reach your goals faster. That's because you can transfer in up to 90 credits toward your online degree.
I was able to cut my time in half.
Apply free at snhu.edu.
This is Bloomberg's The Open. I'm Ritika Gupta, live in the principal room. Coming up, Randall Krosner, the former Federal Reserve Governor. That's at 11:30 a.m. New York time, 4:30 p.m. in London. This is Bloomberg.
We're probably still a bit cautious. I mean, it's good news, and we still think you will get to a living with COVID situation in China, but probably not right away. And the big concern that we have is, even though the infection rates are falling, they have been falling, that should permit a reduction in some of the restrictions. If you look, however, at the vaccination rates, they're still pretty low.
So what we're hearing from China is that their daily virus cases are falling below 100 for the first time since early March. Beijing loosening COVID restrictions on mobility, allowing some workers to return to their offices and shopping centres to reopen too. Mike McKee across the story. Mike, an important development for the global economy in the last few weeks.
An important development, but we're not sure how good it's going to be because, as was just pointed out,
we've got over 1 million now into this affirm. All right, so we had the PM, that Chicago PMI number come out. But that same strike and expiration with contract
came in great.
going up
Chicago
for
PMI.
AFRM.
That's a good number.
Is that good news is bad news? Good news is good news. Bad news is bad news. Or
I think you have to look at everything, that, not necessarily what the news is, but what the price action is around it.
for sure.
I know it's a good joke. Yeah, it's like I totally get it.
It's like, who the fuck knows if good news is bad news today, or Boeing crash a plane and we go up, or they crash.
And the composite. So the Chinese still have a ways to go, and their economy is still shrinking. Now, the most interesting chart I saw about the whole thing over the last couple of days, John, is this one. It shows liquidity in the Chinese markets, basically. And what it's showing you is interest rates so low because nobody wants to borrow. And if companies are not borrowing, the economic engine isn't revving up. And at this point, China still has problems ahead.
And yet what we see on Wall Street are people lining up to pitch the Buy China story. Two quotes for you. One from Amundi, who say, to be underweight Chinese equities today is risky. It's better to be overweight because medium term we think there's value. Mislav Matejka at JP Morgan put out a note in the last couple of days. We think the China outlook has improved, given poor prior performance, policy turn, key risks moving into the open, and potentially better tariff news flow. We're now overweight EM versus DM, including China for that matter. Now, Mike, that's the Wall Street call. That's the market call. Can you give me the economic call right now? Because I've seen numbers, GDP forecasts for this year in China with a 3 handle. Where's the team at here at Bloomberg?
They're close to 3, but I think a little bit below that on the 2s, because at this point, so much damage has been done mathematically, it's going to be hard for them to get much higher. Plus, the risk remains that they still have to do some more lockdowns. Beijing isn't locked down, but restrictions are very severe there in terms of moving around. And so at this point, the Chinese economy still faces a lot of tests ahead.
Mike, before you run on China, just a couple more on the United States. We talked about this through this morning. You and I have done this offline as well. This meeting later on this afternoon between Chairman Powell, Secretary Yellen, and the President of the United States, Joe Biden. Your thoughts on that?
Well, some people are suggesting that this is a change in perspective or a switch in views by the White House. It's a switch in views by the political part of the White House that wants people to know the president is on top of this. But it isn't much can be done. Jay Powell is going to stay out of any kind of fiscal decision. He makes that clear every time he speaks. And the president has already said he's not going to talk about monetary policy. So where did they go from here? The Fed's told us what it's going to do. The president's told us what he's going to do. So, yes, they're both focused on it.
A photo opportunity a little bit later this afternoon at 1:15 Eastern Time. Mike, thank you. As always, buddy. Mike McKee there breaking down the global economy for you in the equity market. If you are just tuning in, about 20 minutes into the session, we're down a little more than 1%. Top of the pile's energy. Energy equities up by 1.8%. Bottom of the pile, real estate, healthcare. Healthcare down by 2 percentage points. Off the back of some of this, fueling the gains we see in energy is the crude story, again up by 3.3% to about 119 on WTI, and Brent crude 124. Travelling higher by about 2 percentage points as driving season gets underway stateside. That's the US story. US-listed Chinese stocks rebounding too. We could be on track to wipe out some monthly losses here. Let's get back to Abby for more. Hey, Abby.
Hey, John. Well, it's really pretty incredible because as we do have U.S. stocks down more than 1%, as you were just mentioning, China-listed stocks as a group up more than 4%. It has everything to do with that China optimism that you and Mike were just talking about, the possibility, the hope that their economy will improve, perhaps move back into expansion. So you can see the likes of Alibaba, JD.com, Pinduoduo, NIO, all up more than 4% on the possibility, again, that maybe the lockdowns come to an end. Interestingly, Alibaba last week put up a great quarter because of the lockdowns and having consumers locked in and shopping, apparently. As for the Hang Seng, we do see that that index in Hong Kong is back above its 50-day moving average, suggesting the buyers are interested, that there could be some relief rally here. But that's happened a few times over the last year, so will it last? Now, the technicals, the longer-term technicals for the Hang Seng may be constructive. Less so, though, for that NASDAQ Golden Dragon Index. Over the last year, John, it's just incredible. Down 53% from a peak to trough point, down 76%. The CSI down 23%. Emerging markets overall, because of that strong influence from China, down 22%. You can see relative to the developed world, down 6%. So there's a big divergence between that weakness in China and the world. But nonetheless, there are some folks really buying not just that dip, but catch a falling knife. Will it work? I guess we'll find out with some time.
Brutal over the last year. Abby, thank you. And just to give you the year-to-date moves on the NASDAQ, we've trimmed them over the last week to negative 23% on the S&P 500 year-to-date. Not off the highs, but year-to-date, down by 13.68% on the session, down about 1 full percentage point. Triggering the move higher last week, just a piece of that was President Bostic of the Atlanta Fed talking up a pause at the Federal Reserve. Maybe, perhaps in September, they stop hiking, reassess, look around, whatever you want to say. Governor Waller yesterday pouring cold water over that argument, and Bank of America publishing just moments ago saying this: after hiking 50 basis points at the next two meetings, the Fed is much more likely to shift to 25 basis point hikes than to do nothing. They go on to say by September, the funds rate will likely be 1.75 to 2%. In our view, their view, that is well below any reasonable estimate of neutral. The words of B of A a little bit earlier this morning. So equities up on the Bostic story last week, equities down on the Waller story this morning. Just a small piece of that anyway. We're down 1.1% on the S&P 500. Up next, your trading diary for the week ahead. From New York, this is Bloomberg.
The Principal Room, brought to you by Principal Financial Group, combining actionable insights with specialized solutions to help meet your investment goals. Get to know us at Principal.com.
As a woman of color, I knew early on I would need extra support to overcome the barriers I would face. During my senior year of high school, I participated in a program called IJAC. It focuses on mentoring, financial education, and exposure to diverse careers. It's important to learn these values and to pass them down. Investing in programs that create possibilities for people of all backgrounds can create a lasting effect for generations to come.
This is the planning effect. This is how it feels to know you have a wealth plan that covers everything that's important to you. This is what it's like to have a dedicated Fidelity advisor looking at your full financial picture, making sure you have the right balance of risk and reward, and helping you plan for future generations. This is the planning effect from Fidelity.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
25 minutes into the session, equities down, yields higher. Here's the stock story, down by 1% on the S&P, on the Nasdaq, off by 1.1%. If you take a look at the bond market, 2s, 10s and 30s, yields higher. Off the back of Governor Waller unwinding some of the move we saw from President Bostic last week. Waller talking up higher rates through this year as they try and get inflation down to 2%. Yields higher by 10 or 11 basis points on a 10-year to 284. That's the price action. Here's your trading diary. Coming up, U.S. consumer confidence numbers at the top of the hour. The big event coming later this afternoon. President Biden hosting Fed Chair Jay Powell and Secretary Janet Yellen of the Treasury at 1:15 from the Oval Office. More Fed speak and a lot more data tomorrow. You'll hear from Bullard and Williams on Wednesday, plus some global PMIs, including China too. And I think an ISM and some JOLTS data too in the mix going into claims on Thursday. And then rounding out the week with the big one. It's the U.S. payrolls report this coming Friday. From New York City, good to be back in a seat with you. Thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
G'day, we're Atlassian, the creators of teamwork software like Jira, Trello, and Confluence. Think of us as a teamwork lab, where teamwork experts have been studying how teams work for decades, pioneering new ideas, and testing every obstacle in the way of nimble human collaboration, all to perfect the everyday act of working together. Unleash the potential of your team at Atlassian.com.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint. Your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commissions.
We would definitely use Ideal Agent again. The whole process was so positive for us.
Excellent service.
Getting right to the point, hiring Ideal Agent, I wish we would have done that sooner. And we would have saved 6 months of time and mortgage payments that would have probably never happened if we would have just gone with them first.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We certainly recommend Ideal Agent now to all of our family, all of our friends. It's just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
Enjoy the magic of freshness from Nuts.com. Fresh nuts, dried fruits, sweets and treats, freshly roasted, freshly dipped, freshly seasoned, and delivered fast with free shipping. Nuts.com. Fresh snacks from our kitchen to yours.
Hi, I'm Jim Furyk. My father, Mike, has been my coach my entire career.
Yeah, it's been a while.
So this Father's Day, I'm getting him a gift worthy of that kind of commitment. A custom club fitting at Club Champion. Their tour-level process is guaranteed to deliver more distance, greater accuracy, and much lower scores instantly. Now through Father's Day, you'll receive a bonus on all gift cards. So what do you think of this, Dad?
Beats a necktie.
Club Champion. Better fit, lower scores.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day on this Tuesday, May 31st. Here are the top market stories that we're following for you at this hour. The What Can We Do meeting. Fed Chair Jay Powell, Treasury Secretary Janet Yellen head to the White House to talk about inflation. We break down what to expect. And turning off the taps. A partial ban on Russian crude catapults oil prices to a 2-month high. We're going to speak to Ed Morse, Citi's global head of commodities research. And an end of a messy month. Yields soar, stocks lose steam as traders rebalance after a volatile month. And some strategists still warn of a bear market. From New York, I'm Alex Steele with my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. It feels like we want to get that sigh of relief, Guy. The month is finally over, but it looks like we may close pretty ugly.
Yeah, I think on the month it's probably going to be fairly flat, but we'll wait and see exactly what it looks like. Sell in May and go away. We're not quite there yet. Europe looks like it's definitely flirting with the flat line. The US may be doing a similar thing as well when you look at the S&P. Data hitting the screen right now, really positive actually, I think. In terms of where we stand with the US consumer, which is so critical right now and speaks to the conversation we're about to have regarding the president and Jay Powell. Conference Board Consumer Confidence, Alex, consumer confidence data coming through at 106.4. Now that's down from 107.3, but the economists, who are having a terrible time of things at the moment in terms of predicting the economic data, had it at 103.6. Present situation, 149.6, down from 152. So yeah, the data's softening, but it ain't softening that much. And this kind of speaks to the story we got from Walmart and Target. The consumer's still in fairly good shape right now. Yes, the savings rate has come down, but spending is still there. And maybe this data kind of supports that a little bit. Maybe the inflation narrative isn't quite so worrying for the consumer that we think it is.
Yeah, not as terrible. I think we can say. Not as terrible as we might have thought.
Yeah, but I tell you what, though, the economists are having a shocking time. Really shocking time. The European inflation data all over the place in terms of expectations, well below expectations, keeps coming through at a much higher than expected clip, which is a big problem for the ECB. So let's talk about central banks in a little bit more detail. You don't see these meetings very often. I think the last one was just after or around the renomination process. President Biden, Alex, meeting with Fed Chair Jay Powell a little bit later on. It's just after 1 o'clock New York time today. We've got Janet Yellen in the room as well. She's got a little bit of history with the Fed as well. A Wall Street op-ed piece, Wall Street Journal op-ed piece a little bit earlier, penned by the president, saying that the most important thing for stable and steady growth is to bring inflation down. So that basically brings us to our question of the day. What should Powell tell the president about inflation? Let's talk about this meeting. Let's bring in our Washington correspondent, Amory Hordern. Let's bring in our international economics and policy correspondent, Mike McKee. Amory, let me come to you first of all. Is this anything other than a photo op?
Well, listen, you make a good point, Guy, because the president last night in his opinion piece talked about the fact that inflation, this is the realm of the Federal Reserve, and he wants to maintain that independent Fed. He pointed to his predecessor, who he said was demeaning to the Fed. So when you think of that, Brian Deese also said this to surveillance as well. The president wants to leave this in the Fed's hand. Well, then what is he doing in the Oval Office, right? That does look like this is just a show for the electorate. But obviously they're going to catch up about the economy. This is, while it's rare, it has happened in the past. It's a little bit rare because this just comes after just a few weeks. He was renominated by the Senate to his second term, given that green light to go ahead. But obviously, if they're going to leave the Fed as an independent, you're not going to see a Biden in this chat, which the press is not going to be able to get much of a glimpse to besides the opening comments. You're not going to see him pressuring the Fed to do as much. So it does seem like it's going to be a discussion about where the economy is going. But likely, for a lot of us, it does feel just a little bit performative.
Well, Mike, okay, you weigh in. We know what we'll see. What should Powell tell Biden about inflation?
Hang in there, buddy. Inflation's going to come down. I was thinking you should phrase your question of the day as the sort of in the Brooklyn accent of what are you going to do about it? You know,
yeah,
there isn't anything that Jay Powell the president can do about it except raise taxes, which he's not going to do, and Congress is not going to do. So it is really in the Fed's hands. However, I think this is a pivot to the economy by the administration's political team, because the president is obviously taking a hit on the inflation question, and you can go back and argue whether or not it was all supply, whether it's oil prices, or whether it was the fiscal package. But the president is the president at the time when inflation's high, so he's going to take the blame. Now, when you think about what's going to come out of this, it is going to be, as Anne-Marie says, pictures of the president sitting next to Jay Powell and Janet Yellen. And if you work on Wall Street or you work in Washington, you know it's meaningless. But if you're around the rest of the country, it looks like, hey, these guys are paying attention. They're going to do something. We've got their attention here. Okay. At least that's what they're going to be trying to sell.
Okay, so what are they going to do then, Mike? Let's think about this from a political perspective. You've got the midterms coming up. Inflation is a massive problem. Brian Deese was talking about this earlier. The president wants to signal that he's giving the Fed its full support, that the independence of the Fed is absolutely critical. If that's the message, then presumably what the Fed should hear and what the public should hear is that the Fed is going to do what it takes to get inflation down to 2%. And if that's the case, the Fed might have to break the economy. So I'm wondering whether the president really is willing to accept that kind of Volcker-style intervention into this economy that may end up having a big impact on unemployment and may have a big impact on growth.
Well, we've got to take him at his word, but it does seem likely that Biden knows that even jawboning the Fed isn't going to do anything. The Fed is not going to break off its mission of trying to do the best it can for the economy, because they saw what happened to the Fed in the 1970s when Richard Nixon pressured the Fed to back off, and they did. So they'll keep going with what they're doing. They're going to keep raising rates. Now, the real question might come up if we see another meeting in August or something like that, because the Fed's told us it's going to do 50 the next 2 meetings. But do they do 50 again in September, just ahead of Election Day? That'll be an interesting question.
And either way, Anne-Marie, the 50 basis point rate hikes aren't going to do anything for gasoline prices or food prices. I mean, right. I drove this weekend, and I got to tell you, premium was just so high. It was, I don't have premium, but even looking at the numbers, it was like total sticker shock. What can President Biden even say or do that can make the public feel better about that?
It's really difficult because even today we have a fresh record on U.S. retail gasoline, $4.62. This is a day after Memorial Day, so this is going into really peak U.S. driving season of the summer months. And obviously this is an everyday reminder to Americans. And for many people, it's an extra tax on them. Even if their wages are going up, how much is that being eclipsed by higher grocery prices, higher gasoline prices? And what can the president do? In his op-ed yesterday, he did point to, obviously, the war in Ukraine, which has exacerbated what we already were seeing in terms of inflation, and especially in the oil market. He spoke about the release from the SPR, but the issue right now is not even so much actual physical barrels of crude oil. It's refining capacity. The President of the United States even mentioned refining capacity in his Wall Street Journal opinion piece, which I felt like was a nod to a lot of energy watchers. But there's no SPR for refining capacity, and JP Morgan says it's going to be $6. So what you're going to see is the president doing a lot of talking, but there's not much he can do for those two things that you mentioned. Yep. And this is what every day everyone knows: gasoline prices and grocery bills.
I find it fascinating that the president has put that op-ed in the Journal, for one. And two, how many Americans actually know who Jay Powell is, Anne-Marie? If you showed a picture to 1,000 Americans of Jay Powell, how many of those Americans do you think would say, that's the Fed chair, that's Jay Powell?
I don't know, maybe Mike would be better answer this, but I can't give a statistical answer, obviously, but it's few. It is a few people.
I feel like that's a Billy Eichner sort of piece just waiting to happen, man on the street kind of
I suspect more people would know who Jay Powell is in America than people in the UK would know who Andrew Bailey is. That's just my guess.
I think we could say this. I think we could say more people in America know who BTS is, who the president is also going to be meeting later this afternoon, than they know who Jay Powell is.
I'm just wondering, if you want to set up a photo op, you basically, you write a piece in the Journal, which is basically targeted at Wall Street, the clue's in the title, and you meet with Jay Powell, who I suspect not many people know. I just wonder whether or not he would be better off meeting with oil executives or grocery CEOs, the CEO of Walmart. I appreciate that the Fed's responsibility is inflation, and the photo op is designed to send the message that the president is on it.
Yeah.
But I'm just wondering whether Powell actually, for the average man or woman on the street, actually is the way of delivering that message.
But Guy, Politico was talking about the fact that this is a pivot for the administration in June for the economy, and it's May 31st, right? So potentially this is the start of what maybe we will see in terms of the photo ops of this White House engaging a little bit more with these issues, and the executives that deal with them.
Yeah, also there's a scapegoat situation that will also be unfolding over the next few months. All right, guys, we got to leave it there, but much more coming up on this over the next 2 hours. Mike, Anne-Marie, thank you both very much for joining us. So coming up, we'll continue this conversation and talk more about if the Fed can actually avoid a hard landing. Now, our next guest says probably, but a bumpy landing is still very much in the cards. We're going to talk to Chief Investment Strategist at Oppenheimer Asset Management, John Stolfus. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction, all done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try. You're going to like the way it works.
What if you were a global energy company with operations in Scotland, technologists in India, and customers all on different systems? You need to pull it together. So you call in IBM and Red Hat to create an open hybrid cloud platform. Now data is available anywhere securely. And your digital transformation is helping find new ways to unlock energy around the world. Let's create a hybrid cloud that can change an industry. IBM, let's create.
You know real chili never has beans. You know which pizza is eaten with a fork and a knife, and which one is definitely not. You know a cappuccino is for the morning, and an espresso is for the afternoon. You know how to answer sparkling or still in over 12 different languages. You'll try anything that's not currently alive. Unless, of course, it's highly recommended. The Delta SkyMiles American Express card. If you travel, you know.
Projects means new project managers. You need to hire.
I need Indeed.
Indeed you do. When you sponsor a job, you immediately get your short list of quality candidates whose resumes on Indeed match your job criteria. Visit Indeed.com/hire and get started today.
Earnings season continues.
There's so much nervousness in the market right now.
This market punches you in the face.
Bloomberg is fastest with the numbers and analysis.
Big numbers from Disney.
It just slammed expectations.
Bloomberg, the fastest numbers and analysis you trust.
All right, it's the last trading day of the month of May, and we're picking up a little bit of steam to the downside here. NASDAQ 100 looks to be off by about 1.5%. Abigail's tracking some of the moves for us over the last few weeks. Abigail?
Hey, Alex. Well, you know, it's interesting because prior to the open today, there was some green on this screen, but now with this brutal, not brutal, but down day that we have in the last day of the trading month of May, we have declines. That is weighing, obviously, on the indexes on the month. So now the S&P 500 is looking at a second down month in a row after a very difficult April. You have the NASDAQ 100 down even more, down 2.8%. It would have been down irrespective of the action today, unless it had been a huge rally. You can see the Stock 600 down 1.6%, and this is a big one. The MSCI World down 0.6%. Earlier, it had been higher, snapping what had been a 4-month losing streak, but now we're looking at a 5th down month for that World Equity Index. So the bearish tone is continuing right here in May, even though it looked like there's a little bit of hope. As for a bright spot, that, of course, is commodities. If we take a look at what's happening here, in white, we're looking at the Bloomberg Commodity Spot Index on a monthly basis. So right now, 6 up months in a row, the longest winning streak for that Bloomberg Spot Index for commodities since February of 2017. This is the Bloomberg Energy Index, so you can see that energy strength, a big piece of it, the rally in oil that we have, WTI crude back near $120 per barrel. Not surprisingly then, one of the top sectors this month, or the top sector this month, is energy, soaring up 18%. This is also the top sector on the year, up 60% in the year after gaining 50% last year. So this energy rally is really just pretty incredible. And then in terms of the other sectors, or all 11 sectors, the last time I looked, were higher. That may have changed with this downtrend that we're seeing. But it's very interesting that you have utilities higher with rates, and then you also have financials higher, and then healthcare. But there's a bit of a defensive tilt here for sure, Guy, with folks going into utilities and healthcare. But the fact that you have the utilities higher with rates higher, that tells you just how defensive this is, even though it's a gain.
Absolutely. Cautious market. Abigail, thank you very much indeed. Meantime, Mike Wilson over at Morgan Stanley, he says that any relief rally in the US stock market is likely to have limited upside as the risks to growth remain prevalent. Joining us now to discuss all of this, John Stolfus, Oppenheimer's Chief Investment Strategist. John, great to have you on the program. Let's talk a little bit about where we go from here. You talk about the fact that the Fed can probably avoid a hard landing, but probably is looking at a bumpy landing. What does a bumpy landing look like for the S&P?
Thanks for having me on, Guy. I got to say, a bumpy landing looks like just like we're having right now, in the sense that if this is analogous to landing a commercial aircraft, we're down from 40,000 feet down probably around to 30,000, 20-some thousand, and we're experiencing some turbulence, okay? A little bit of extra turbulence than the type of turbulence you usually get coming in, but for business travelers, nothing unexpected. Like going into the City of London airport, you know, when you catch a little bit of turbulence, nasty kind of stuff. But my thought is here, what we've got is we're in the process of seeing the Fed do what it does best, which essentially is address its benchmark rate that already finished the taper. And now it's taking a glance at how much it's going to raise, trying to estimate that. Plus, it's keeping an eye on the balance sheet to start really reducing that. We do think that the real thing that has to happen here is it's the price of energy that's the problem, because it feeds everything in our economy. It's no secret. I mean, our clothes, the food we eat, the buildings behind me, everything runs on energy.
Right.
And as a result of that, we think the administration needs to pivot on this very hardline policy it has towards fossil fuel. There's a gap between fossil fuel dependency and the new world of alternative energy. Yeah. We believe in global warming. We invest in alternative energy. But we think it's too early to abandon fossil fuel.
So, John, I mean, that would take a whole recalibration from shareholders in particular to give the green light for industry to pump more oil. As an investor, though, if you were betting on energy in the last month, you were up versus every other sector. How do you invest with that thesis?
Well, you know, related to, in terms of energy itself, in terms of the share price, you know, it's been extraordinary what energy has done over the last 2 years up to now. When you consider that it is still, I think, the worst performing sector since the peak of the S&P in October of 2007, before we really entered the financial crisis in depth. And it's a smaller segment of the S&P than it was in prior eras. It just happens to be of great importance right now because of all the disruptions that have been caused, some by policy here in the U.S., policy abroad in Europe, and of course the incursion by Russia into Ukraine, and of course just the general effects of demand from China initially coming out of the crisis, then drop off. There's all kinds of turbulence there. But we'd say the administration needs to pivot. And we don't, you know, the Fed pivoted. There's nothing wrong with pivoting. Yeah. When we talk to people in the oil industry, you know, they say, why should I invest if I'm going to be put out of business? You know, that's what this administration wants to do. And the reality is...
Every CEO, John, we talk to says exactly the same thing. They're also looking at really super high costs right now. Why should I invest when sand is so expensive, when labor is so expensive, and in a year's time, we could see things changing massively. Can I just take you back to the issue of the balance sheet, John, just for a moment? QT is coming, starts tomorrow. We've seen QE suppressing volatility. We've seen QE boosting asset prices. How are you thinking about the impacts that QT is going to have? Are we going to see increased volatility as it kicks in? Are we going to see lower asset prices at the moment? Have we already priced some of that in? Are we going to see a bigger impact now that it's starting?
I think without a doubt, we've already begun to see it be priced in with the dramatic move lower that we've seen in equities this year from the start of the year and the increased volatility on a day-to-day, week-to-week basis. We've got to think that going forward now, it will really be, we'll be able to judge it not on expectations, on modeling of what's coming forth, a lot of projections, which tend to be negative in their effect, but actually taking a look at how it comes across the plate when the Fed starts moving to do this. And in the process, you know, of the Bernanke legacy, it's which is part of Powell's Fed. This is a much more clear Fed. It's communicative, it's sensitive, and it's not afraid to pivot. You know, the word pivot is operational here. It's the key word. And it means the most important thing is to respond. But if you see your response is wrong, opt to pivot.
So, John, based on that, how do we know if yields have peaked? As of last week, it felt like maybe yes. And then we get this really chunky move in the bond market. We have the potential for more 50 basis point hikes to come. I understand your pivot point, but how do you know how to invest if you don't know yet where yields are supposed to go?
Well, I think what you've got to figure here is what had we before? We had a world of abundance. In fact, we had overcapacity in a vast number of industries. The function of shuttering large segments of the economy over the course of the pandemic threw everything out of kilter. The whole work from home business, the idea of the resignation, a lot of people resigned and retired early, a lot of turbulence here, but things are likely to go back where we came from. Because last we looked, there still is every bit as much natural gas under the crust of the earth as there was before the pandemic. And, you know, plenty of oil to be had.
John, final quick question from me. I just want to make sure that I've got this right. Your year-end target for the S&P is 53.30. Is that correct? And if it is correct, how do we get there?
Well, Guy, first of all, when we put that in, it was December of last year, and it implied a 13% upside from that. We couldn't foresee the incursion into Ukraine by Russia and the Chinese policy in terms of the lockdowns. But what we will say is the last time we saw a market that was in the process of coming out of a crisis, which was 2009, the S&P declined 25% from January to March of 2009. It then rallied 64% to the end of the year. If we get half that this year, I'm at my target.
Okay, so you still think that target is possible?
Oh, it absolutely is possible, but it's also very possible I may have to trim it. We'll know that in the next few months.
Okay, great to catch up, John. We'll have you back when you have another thought on that number. I suspect it's, as you say, maybe going to be a bumpy landing, but we'll see exactly how that landing is delivered. John Stolfers, Oppenheimer's Chief Investment Strategist. Greatly appreciated, sir. This is Bloomberg.
Welcome to Lenovo Late Night IT, where industry insiders tell us what they tell their therapists.
Is fog the new cloud?
We're going to have solutions that require some things to be pushed out to the cloud and some things are going to be in between, which is the fog.
Fog is a real thing. I was joking. What's next? Mist computing?
Mist.
Wait, is mist a real
Cloudy?
thing?
No.
Okay, thank you.
This is Lenovo Late Night IT.
Take the world by cloud. Accenture, let there be change.
This thing, it's making me get an ice bath again.
What do you mean? These drafts are mind-blowing. They collect hundreds of data points like HRV and REM sleep, so you know all you need for recovery.
And you are?
I'm an investor in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like wearable training, optimization tech.
How long you...
I'm done.
Become an agent of innovation with Invesco QQQ.
I'm okay.
Before investing, carefully read and consider fund objectives, risk charges, expenses, and more in prospectus at Invesco.com.
Another crazy day? Of course. You're a CIO in 2022, but you're ready because you've got the next generation in global secure networking from Comcast Business with fully integrated security solutions all in one place. So you're covered, on-premise and in the cloud. You can run things the way you want, your team, ours, or a mix of both, with the nation's largest IP network from the most innovative company. Bring on today with Comcast Business, powering possibilities.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Rishika Gupta. More legal headaches for Deutsche Bank. Police in Frankfurt raided Germany's largest lender and its asset management unit, DWS. The search is related to accusations of so-called greenwashing by the asset manager. There have been claims that DWS was marketing investment products as being greener than they actually were. Shares of Unilever jumped today. Activist investor Nelson Peltz has been appointed as a director, and his Trion Fund Management has taken a 1.5% stake in the company. The appointment comes after a difficult period for Unilever. CEO Alan Hope failed in an attempt to take over the consumer division of GlaxoSmithKline and has had to grapple with steep inflation. And most student loan borrowers made no payments during the U.S. government's pandemic freeze. According to the Federal Reserve, 60% of borrowers who qualified for forbearance didn't make a single payment from August 2020 through December 2021. The Fed suggests that some of these 11.5 million borrowers may not be able to resume paying once the freeze is lifted. It's set to end on August the 31st. And that is your latest Business Flash. Guy?
Brinica, thank you very much indeed. Coming up, President Biden will have a rare Oval Office meeting a little later with Fed Chair Jay Powell. Our next guest says it's a blame game and it's market negative. Terry Haynes, Pangea Policy Founder, up next. This is Bloomberg.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Spend all your money on just one part at the typical auto parts store. When at RockAuto.com, you can get all the parts you need with money left over to buy lunch. Go to RockAuto.com.
All the parts your car will ever need, Rock Auto.
What does the future of strength look like? It's a personal trainer that assesses your strength and adds weight as you progress. It's dynamic weight that adjusts for you in real time for a more efficient workout. Come on! And it's a roster of coaches that motivates you to get stronger, faster. The future is strength you can feel and results you can see. And you can only experience it on Tonal.
Learn more at Tonal.com.
I'm Jeff from Nuts.com. When my grandfather started this business, he relied on freshness, quality, variety, and service. We still deliver the freshest nuts, dried fruits, snacks, and sweets to families all around the country. Nuts.com. Enjoy free shipping on your first order.
Hi, this is Lisa from 4Imprint. Yes. I like 50 welcome wows, 300 customer, I love it, and 200 team member, oh yes. Certainly. You know we got some brand new woohoos.
Dial up the wow factor with promotional products from 4Imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items.
Wow.
I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4Imprint, for certain.
Do you listen to the TV on high volume or have trouble hearing conversations? Then you would benefit from hearing aids. Don't waste thousands on expensive hearing aids when you can get Nano's revolutionary technology for just $397. Don't be fooled by higher-priced hearing aids. The CIC Recharge is a true hearing aid, not an amplifier. With rechargeable technology many customers say is superior to more expensive models. Call now and get not one but two Nano hearing aids for just $397. Plus, we'll add a portable charging dock and ship your order absolutely free. The CIC Recharge has a tiny in-the-ear canal design that is nearly invisible. Why keep missing out on important conversations or waste thousands of dollars? Call and get 2 CIC Recharge hearing aids for only $397 and free shipping.
800-833-9735. Again, 800-833-9735.
We're 1 hour into the U.S. cash trading session. Let's get a quick check-in here on the markets. We're off the lows of the session, but it still looks like we could end in the red today. That would actually potentially erase any gains that we saw over the last 24 hours and put us in the negative for the month of May. A whippy month it definitely was. Part of the action we're seeing is in the bond market. 10-year yield jumping 12 basis points. It's inflation numbers out of Europe, but it's also maybe rebalancing in your portfolio into the month end. So it's hard to know what to make of that 12 basis point move. Now, what's winning is the S&P Energy Index. You have crude at a 2-month high. All of that helping propel those names in the green, the only top performers within the S&P. And then I have AMC, which is up 0.4%. The only reason why I have that in there, Guy, is just to say that I saw Top Gun this weekend, and it made $127 million in 3 days. And it was a really fun, good movie. I highly recommend it, as long as you don't have too many expectations.
I've high expectations. I saw the original one at the cinema. I think I've probably watched it many times since then.
Of course.
My expectations are very, very high. It was too sunny this weekend. When it starts to rain,
Totally,
I'm gonna go.
totally worth it. Totally worth it.
Completely drive me
248.
round the
I stand corrected. 248 million. My bad. 248 million in 3 days.
It's a big number.
Big number.
It's an epic number. Looks like an epic movie. Okay, let's talk about another show. President Biden is going to be hosting Fed Chair Jerome Powell at the White House in a few hours' time. The focus, of course, how to deal with inflation. Terry Haynes, Pangea policy founder, says the meeting denigrates the Fed's independence, despite the fact that we saw Brian Deese on Bloomberg Television saying that was the exact purpose of the meeting, to reinforce that independence. Terry joins us now. Terry, I'm scratching my head. I'm trying to work out for the average American why the president inviting the Fed chair for tea and writing a policy piece in the op-ed section of the Wall Street Journal changes anything, does anything, changes the narrative in any shape or form. Do you think the politics is off here from the president's team?
I think the politics is about 6 months late, Guy. And, you know, we'll have to wait for the memoirs to figure out exactly why. But, you know, markets know inflation's been going on for quite a while, and the president's had fits and starts and on this, and continues to have fits and starts. They're trying to do an op-ed today an op-ed in a meeting, you know, pretty much to assuage markets as much as they possibly can. But, you know, there's very thin gruel here, even by the president's own discussion in the Wall Street Journal opinion piece. You know, their idea of knocking down inflation is not only to, you know, tell everybody it's the Fed's problem and not the president's problem, but if only they change the tax code and put in place clean energy tax credits, and understand that, you know, the infrastructure, which will take 5 years to build out, will eventually happen. And, you know, and they'll be dealing with broken supply chains, which they've been saying they've been dealing with for a year. You know, this, you know, politically in any other way, this isn't going to cut it. Out in the world of the voter, this is already baked in as Biden's problem.
So, Terry, to that point, are we setting up here for the scapegoat situation come November? Hey, guys, it's not my fault. Here was all the stuff that I did. Let's blame Jay Powell.
Oh, absolutely. This is, you know, frankly, this is nothing but a blame game. And, you know, they've been saying that for months, that this is really up to the Fed. The question for markets, to me, is really, you know, what does, you know, if you buy the idea that there's a failed policy, that there's a big policy mistake here in the Fed, first question is, why do you reappoint the same people? Second question is, what do you expect from those reappointments? I think that what you're going to expect from political Washington anyway is a fairly soft policy. You know, what these folks learned years ago from the whole Carter-Volcker mess is that it redounds very badly on the party in power for a long period of time. So frankly, a softer policy is better politically for these folks because there's less of a wrench.
Okay, but at some point in that scenario, you get to the Volcker moment, Terry, And I'm wondering whether this president is thinking about that. You've got the midterms coming up. There needs to be a mechanism to message to the American people that inflation is going to come down, that we've got this, and if we haven't got this, it's the Fed's fault. But what I'm wondering is, after the midterms, how is the president thinking about inflation? After the midterms, assuming that he is ready to make a decision on when he runs or doesn't run in 2 years' time, do you think he lets the Fed off the leash? I'm just kind of wondering what the political calculus here is. Not for the midterms, but for the next general election. Is the Fed going to be allowed to deliver a tough message on inflation in order to get the economy ready for 2 years' time rather than a few months' time?
Well, let me say first, before I address the question very briefly, that I think that markets will hear nothing new out of Powell today for one very practical reason. If Powell says anything new today at all, it will look like Biden leaned on him to do it. So there's a great impetus or a great reason not to do that. Now, post midterms, there are three calculations for Biden. One is whether he's going to run or not. Secondly, whether it's really politically, whether he abandons his progressives, who are way overrepresented in the Democratic Party, frankly, and moves centrist, very similar to the way that Bill Clinton went centrist after 1994's shellacking. And then thirdly, on the Fed left off the leash, the president has nothing to say about whether the Fed's left off the leash or not. The Fed doesn't exercise executive policy or executive power. Janet Yellen's a subordinate of Biden's. Brian Deese is a subordinate of Biden's. Jay Powell is not. So if the president starts leaning on Powell, or frankly on other independent agencies like the Federal Trade Commission and the SEC, he's causing a constitutional problem because that's up to the Congress.
So, Terry, I thought that you had a note out yesterday talking about just this. I thought it was quite interesting that, nothing will come of the Powell situation, but when it comes to maybe the SEC or the DOJ, there are things that maybe interference will kick up that will matter for markets when it comes to, say, antitrust or regulation. How might we see that play out?
Well, look at it this way. And those of you who remember Ferris Bueller, remembering that Cameron, calls his father in for a little chat. And if Biden's asking Powell for a little chat today, one of the things it tells me, kind of in an institutional Washington sense, is that there may well be other little chats with independent regulatory agencies that exercise congressional power, like the FTC, for example. Biden's already been leaning on the FTC to do something on a competition in a competition realm. Maybe the SEC, maybe others. But I would look in the markets for investors. I would look at the potential as a result of this Powell meeting that they start doing those things as well to try to influence policy. Constitutionally, that's over the line, but in a practical sense, that is going to cause negative market reactions in a variety of different places, and it's something I think the White House is not sufficiently thought through, because them leaning on Powell as if he's another staffer is not a good signal to send to the markets, frankly.
But just tactically, or even strategically, is it better? Are the midterms gone for the Democrats? Is there a perception in Washington that the midterms are going to be tough for the Democrats? And if they are they now looking beyond the midterms and thinking, we need to be ready in 2 years' time. We need to have an economy that's on the up in 2 years' time. We need to have this inflation beaten in 2 years' time. Is that the narrative that maybe starts to develop here? That they're not looking near term, they're looking further down the road. And as a result of which, leaning on Powell, maybe they're not leaning on Powell to go soft on inflation. They're leaning on him to go hard on inflation, beat it out now, get the economy ready for a rebound in 2 years' time.
Well, let me say, I think Democrats know they're behind the eight ball, but they don't think it's a lost cause. And you have no further to look than the 2020 elections, when the usual suspects in Washington were saying, oh, well, Democrats are going to win 15 to 20 more seats in the House, and quite the opposite happened. Republicans picked up seats in the House. So, Democrats don't think this is over yet, but they know there's a problem. What I will tell you on the Fed business, though, is that, they're going to fight this out over the next few months. But on the Fed business, there is no percentage in Democrats wanting a Volcker-like hard pivot, because that just exacerbates the problem that they said they're trying to fight. And part of my calculus all along here has been this now reinstalled Fed will be a fairly dovish Fed, and that's what they want. They don't want they don't want the big shift.
Terry, we really appreciate your perspective today. It's going to be interesting to see what comes out at 1:15. Thank you very much for joining us. Also, you quoted Ferris Bueller, so you're always a friend now. Terry Haynes, Pangea Policy Founder. Thank you very much. All right, well, coming up, we got the latest U.S. consumer confidence numbers are out. They're at the lowest since February, but they did beat expectations. So we're going to talk to the CFO of a buy now, pay later company, Affirm. Michael Linford will be joining us after the break. This is Bloomberg.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform. Plus a satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
Hey, Lily, I need a new wireless plan for my business, but all of my employees need something different.
Oh, we can help with that. Okay, imagine this, your mover, Rob. He's on the scene and needs a plan with a mobile hotspot. We cut to downtown. Your sales rep, Lisa, has to send some files, like ASAP.
So basically, I can pick the right plan for each employee.
Yeah, I should have just led with that.
With AT&T Business, you can pick the best plan for each employee and get the best deals on every smartphone.
List is now Angie, and it's easier than ever to get your projects done right. Inside, outside, big or small, Angie helps you find the right solution for whatever you need done. With Angie, you can connect with top local pros and see ratings and reviews. Just search or scroll to see upfront pricing on hundreds of projects. And when you book and pay through Angie, you're covered by our happiness guarantee. It's easy to make your home an Angie home. Check out Angie.com today. Angie, and done.
The moment you wake up, you're on your feet. But for the 1 in 4 adults who suffer from bunions, every step may be painful. And if left untreated, bunions only get worse over time. With the old way of doing surgery, bunions often returned. Lapiplasty 3D bunion correction is changing that. Lapiplasty's innovative approach realigns your toe and secures the joint to fix the root cause. There are risks associated with surgery. Find a Lapiplasty surgeon today and learn more about the Lapiplasty procedure at lapiplasty.com.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? Can't forget about that, or that either. So next time you think print, remember, when you use Vistaprint, the print abilities are endless.
This is Bloomberg Markets. I'm Ritika Gupta. You're looking at a live shot of the principal room. Coming up, Stephanie Kelton of Stony Brook University joining Balance of Power at noon New York time. This is Bloomberg. Keeping you up to date with news from around the world, here's the first word. I'm Ritika Gupta. European Union leaders have agreed to back a partial ban on Russian oil. It would be part of a sixth package of sanctions aimed at punishing Russia for invading Ukraine. The sanctions would ban the purchase of Russian oil and petroleum products delivered by ships, but it temporarily allows EU nations to buy Russian oil delivered by pipeline. That exemption is needed to get Hungary to sign on. Inflation in the Eurozone accelerated to an all-time high this month. Consumer prices rose a more than expected 8.1% from a year ago. Food and energy were the big reasons. The data will intensify the debate at the European Central Bank about how fast to raise its interest rates. And the CEO of Soros Fund Management says the U.S. is on track for a recession. Dawn Fitzpatrick was interviewed for Bloomberg Wealth with David Rubenstein.
There's a lot of discussion about a looming recession. And the bottom line is a recession is inevitable. It's a matter of when. And when you look at what markets are pricing here, they're pricing it fairly soon. So in the 2023 context, depending on which asset classes you're looking at, I actually think markets might be wrong. And the reason is the consumer right here is in extraordinarily good shape.
And you can watch all of David Rubenstein's exclusive interview with Soros Fund Management CEO and CIO Dawn Fitzpatrick tonight, 9 p.m. New York time on Bloomberg Wealth with David Rubenstein. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex.
All right, thanks so much, Ritika. So consumer optimism numbers at the top of the hour came in better than estimates, but numbers still hit their lowest level since February. And the health of the consumer and the impact of inflation, the key issues for companies, politicians, and investors. So I want to look at it from purchasing power point of view. Affirm is a buy now, pay later company. And the CFO joins us now, Michael Linford, along with Bloomberg's Shonali Basak. Both of you, thank you so very much for joining us. Michael, I just want to start with what I'm sure you read is a piece by Scott Galloway, New York University professor in New York Magazine, that talked about this buy now, pay later business model. Here's part of what he had to say. Any hope of profitability depends on overextended consumers somehow making their payments and continuing to mash the buy button. What's more likely is that the precarious finances of the 20-something generation are going off the precipice soon, and there's a big risk of collateral damage. I feel like you have a front row seat to that. What would be your response?
Thanks for having me. And I think it's really important that investors, the media, the users of our product understand just how different Firm is. We're different from both the traditional financial institutions who offer revolving credit products, and we're different than the BNPL competitors that I think are being poked at in that particular analysis.
Well, a lot of
our mission, go ahead.
Yeah, a lot of those competitors, they've never seen a down cycle, and we're about to experience something of the sort now. So do you think that they're going to experience something of a washout there?
I think you're already seeing pressure on a lot of these players. You have people like Affirm who takes our mission, and our mission has created a business model that makes it so that we don't charge late fees, we don't allow consumers to revolve on debt, we do not allow deferred interest. And these kind of consumer-oriented positions in our business has made it so that we don't have a choice but to underwrite very carefully. We have no way in our business model to support consumers who don't pay us back. In our most recent quarter, we posted unit economics of 4.7% at GMV, 70 basis points ahead of our long-term guidance. We stand out amongst all the other players. You have some players who are doing headcount reductions to try to save costs in order to afford these credit losses. And we're in the opposite position. We're very front-footed. We're adding to our team because our unit economics are in exceptionally strong position right now because of our world-class underwriting. And that's not an accident. We had to build that based upon how our business model was built from the first day and how we treat consumers.
What kind of position is the U.S. consumer in, Michael? We were just hearing from Dawn Fitzpatrick just a few minutes ago. Ritika was bringing us the interview she's done with David Rubenstein. She runs George Soros's money. She's talking about the U.S. consumer being in, quote, extraordinarily good shape. Do you think she's right?
I do. And I'd never go against Dawn. She's brilliant. And what I would tell you is that what we see is a very strong U.S. consumer. Unemployment remains very low. And at least in our business, consumers who are employed remain in a good position. And that's only possible if you think about underwriting the way we do, which we do think about underwriting every transaction, which means that we're looking at that consumer's ability to repay, on a transaction-by-transaction basis. And so we're really the first to see it if you see any deviation, and we're not seeing anything today.
So what are you looking for then? Because there's a lot of conversation about that drop-off in the savings rate that we're seeing relative to what you had seen in the middle of the pandemic, for example. Michael, are you seeing that there's more pressure on the consumer now that can lead to more trouble ahead?
Yeah, obviously saving rates are down. The total monetary supply is beginning to get tightened. You're seeing the Fed and Fisk respond to the rising rate environment. And all that does results in the macro indicators you see. But it hasn't impacted employment yet. You know, again, if you think about the health of the consumer for our business, the most important thing is, are they fully employed? And right now they are.
You know, the other thing you had mentioned too is that you're in a position to grow from here, even in a tough environment. What kind of hiring plans could you have ahead, especially as you're seeing that some of your rivals are cutting their workforce?
Yeah, we really like our position in the market. You saw earlier this month, we hired a bunch of engineers from a payments company that was having a hard time, and they were winding up operations. We view this as one of the better markets for labor right now, where we have a strong need to build great products. We're not constrained in terms of our opportunity. We help enable the world's fastest growing payment method, and we're in the very early innings of what our category will become. So we need a big team of engineers to go tackle that. Looking at all the macro indicators like everyone else, we want to be careful here. But we really feel like our ability to scale this enterprise is and always will be a function of the excellent human capital we have, not a function of doing bad deals and other sort of uneconomic things and contortion that some of our competitors do.
So let's talk about deals for a second, Michael. I'm interested to see your scope for consolidation in the industry, as you may have exposure to certain consumers that others don't. What kind of exposure do you kind of see? What kind of consolidation might you see?
We've already seen a little bit of consolidation in the industry. You're seeing some of the players who I think have to pair up or merge with larger enterprises. We love the breadth of offering that we have. We're very confident in our ability to generate real shareholder value at scale. We have a lot of growth ahead, and we're confident in our ability to generate a lot of cash and therefore drive real shareholder value when we scale.
So is this a roll-up opportunity or not? And if you are going to grow, how do you maintain that quality of customer that you currently have to make sure that the credit cycle ultimately doesn't come back and bite you?
That's such a great question, Guy, because I think the reason why we're hesitant to answer the first question, yes, is because we're so different. And the way we go to market, the way we think about underwriting, makes, at least from our standpoint, any sort of combination with most of the players that are out there very difficult. It's not really a 1 + 1 = 3 scenario. Oftentimes, there'd be real dyssynergies with things like deactivating late fees or reactivation fees, and that keeps us away from being, the principal in a material roll-up of the industry. And in terms of how we think about, though, any future deals we might do, it might be good to look back at deals we have done. We purchased a company in Canada last year called PayBright. That business grew rapidly and continues to grow rapidly. And the key thing there was a strong alignment in terms of how we treat the consumer and a shared mission. And that will always govern what we can do from an M&A standpoint.
Michael, you also announced a partnership with Stripe this morning. These are two big fintechs getting together. What's the role that fintechs are going to play moving forward relative to traditional banks? It was just months ago that Jamie Dimon was naming Affirm as a large competitor in the credit space.
Yeah, I think that it is the case that traditional financial institutions are going to continue to receive a lot of pressure and competition from the likes of Stripe or Affirm. We're really excited about this opportunity to partner with Stripe. We're offering our adaptive checkout product now to their millions of merchants. It's a very easy integration for merchants, which means we're going to bring what we do so well to a wider set of merchants. Where we made leaps and bounds in ubiquity at Affirm, where now we have over 60% of US e-commerce live on our platform. And this is a chance to continue to grow that ubiquity and build on other partnerships.
Michael, great to catch up. Thanks for dropping by. Really appreciate the time. Really interesting story. Michael Linford, Affirm CFO. And of course, our thanks to Bloomberg's Sonali Basak. This is Bloomberg.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
Fidelity, your dedicated advisor, will work with you on a comprehensive wealth plan across your full financial picture. A plan with tax-smart investing strategies designed to help you keep more of what you earn. This is the planning effect.
You know real chili never has beans. You know which pizza is eaten with a fork and a knife, and which one is definitely not. You know a cappuccino is for the morning, and an espresso is for the afternoon. You know how to answer sparkling or still in over 12 different languages. You'll try anything that's not currently alive. Unless, of course, it's highly recommended. The Delta SkyMiles American Express card. If you travel, you know.
Assalamu alaikum.
It's great to see you.
Welcome to the Qatar Economic Forum powered by Bloomberg.
Some people say that there's a de-globalization going on, but I prefer to think of a re-globalization.
Our accomplished speakers, from heads of state to business and policy leaders, will discuss evolving technologies, education, culture, sustainability, and the impact on the economy.
Television is brought to you by Accenture. Let there be change.
Coming up, we're wrapping up the month. The European close is almost upon us. We've got around 35 minutes still to go. Stock 600 today down a bit, down by around 0.5%. I think the action's elsewhere. The Italian BTPs, take a look at what is happening there. Super hot inflation coming through from Europe today at a headline level. The Italian number comes through hot as well. French number comes through hot. BTPs on offer. We're up by 12 basis points today, as you can see. 3.1. Curve steepening up just a little bit. Crude also in focus as well. Then you've got the Stock 600 story. 22 days, that's the last month. Stripped out the weekends. We are negative by 1.38%, which is fading a little bit here. But nevertheless, Stock 600 basically finishing where it started the month of May. Ed Morse is coming up. We're going to talk commodities next. That is the story that I think a lot of people are thinking about, particularly here in Europe, as we figure out what turning off the Russian taps actually means. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg. Top experts. Great questions.
What if you were a gigantic snack food maker? Can serve up jalapeno, sesame, and chocolate-covered goodness with real-time data-driven precision. Let's create supply chains that have an appetite for performance. IBM, let's create.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
Hi, I'm Jim Furyk. I hold the record for the lowest score in PGA Tour history, of 58. And that was even before I'd heard of Club Champion. A custom club fitting from Club Champion helps any golfer level up, even pros like me. And with greater accuracy, more distance, and fewer putts, you're guaranteed to lower your scores instantly. Trust me, these guys are the best. So schedule your custom fitting today and see how low you can go.
This Father's Day, give Dad the gift of golf with a 15% bonus on Club Champion gift cards.
Do you listen to the TV on high volume or have trouble hearing conversations? Then you would benefit from hearing aids. Don't waste thousands on expensive hearing aids when you can get Nano's revolutionary technology for just $397. Don't be fooled by higher-priced hearing aids. The CIC Recharge is a true hearing aid, not an amplifier. With rechargeable technology many customers say is superior to more expensive models. Call now and get not one but 2 nano hearing aids for just $397. Plus, we'll add a portable charging dock and ship your order absolutely free. The CIC Recharge has a tiny in-the-ear canal design that is nearly invisible. Why keep missing out on important conversations or waste thousands of dollars? Call and get 2 CIC Recharge hearing aids for only $397 and free shipping.
800-833-9735. Again, 800-833-9735.
Started Truebill because I hate paying for subscriptions I'm not using. Find something you no longer want? Truebill can cancel it for you.
Truebill is an all-in-one finance app that tracks and categorizes your spending and alerts you if anything needs your attention.
Download Truebill, the money app that works for you.
Tuesday, the 31st of May. Stocks are down in Europe. Energy's up. Technology's down. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Minutes to the close, 30 minutes to the end of the month. Let's take a look at the price action. Stock 600 down by 0.5%. The London market is higher. The reason London's higher is because energy is doing fairly well today. Brent crude, as you can see, up by 1.5%, let's call it that. But the inflation data out of Europe this morning continues to be shocking. It continues to surprise to the upside. Economists are really struggling to keep up in terms of their expectations. And as a result of which, we continue to see a sell-off in the bond market. Look at where we are with the Italian market. BTP's at 3.129. We're up by another 12, nearly 13 basis points today. We are seeing 2 years on the move as well. So the curve is steepening up a little bit today, but not by much. But that inflation story, Alex, front and center on both sides of the Atlantic.
Yeah, indeed. Here in the U.S., though, Guy, it feels like we could eke out at least flat or a gain for the month. You're now looking at up 0.1% for the S&P for the overall month. We're well off the lows of the session here. Energy, the best performing sector within the S&P. Marathon Oil, the best performing stock within that. We are still seeing a sell-off, though, within the bond market here. 12 basis points higher on the 10-year, just like you were pointing out in Italy, and tech also off the low. So it feels like we might be looking at a flat level for a very tumultuous month of May, but it is those inflation protector commodity sector that's still doing well here in the U.S. in the equity market.
Inflation definitely front and center over here, particularly after the print we got earlier for the whole of the Eurozone. But we knew it was coming, Alex. High inflation at the EC is going to be a big problem for the ECB. Let's talk about the data we've had yesterday. Spain, 8.5%. Germany, 8.7%. These are harmonized numbers. France today, 5.8%. Remember, it has a big nuclear power fleet. That's meaning that actually it's getting away on the energy side a little bit easier than some of the other countries. Italy at 7.3%. That takes the Eurozone number, Alex, to 8.1%. Remember, we have a negative deposit rate with still negative 50 basis points here in Europe, Alex, and that is a massive problem for the ECB. If we talk about the Fed being behind the curve, the ECB might be even further behind the curve. That inflation number is a big problem for Christine Lagarde.
Yeah, and that partial ban on Russian oil also not going to help that number either. So high inflation does have the ECB ready to hike at its next meeting. Governing Council member Ignacio Visco says the central bank must proceed in an orderly way to avoid threatening the integrity of the Eurozone.
Particular attention will have to be paid to ensuring that the monetary policy normalization process takes place in an orderly manner and to preventing the emergence of an unjustified market fragmentation.
Joining us now for more, Patrick Armstrong, Plurimi Wealth CIO. Can the ECB actually be gradual and orderly when they have inflation at 8%, Patrick?
I actually don't think they'd do much disruption to markets if they raised it 50 basis points, got it to zero, and that's still an incredibly low interest rate by any historical standard if you just remove the previous years where we had negative rates, which I don't even know if it helps the economy at all. It's punitive towards banks. I don't think it changes many investment decisions. In times of crisis and panic, maybe it shows the central bank is there. But having a prolonged negative interest rate, I don't think it's even fulfilling its purpose anymore. So I would,
Patrick,
if I was
would the
on the
market
ECB, I'd be
extrapolate?
looking at zero.
Would the market, the problem the ECB has with it is that they think everybody's going to extrapolate. They're going to think like the Fed, 50-50, 50-50, and that would get priced in.
Yeah, that would be the risk, and they'd be able to manage that. It's not like they just do things in a quiet period. They hike and they say, this is our plan. We're going to get it to zero. We're going to see how the economy reacts. We're going to see how the moving away from Russian oil impacts the economy, all of those kind of things. So you can definitely set the tone. You can hike 50 and not set a precedent that this is a wave of hikes to follow.
So what would happen after 50, for example? Barclays had a note out that said that the ECB might have to hike more than estimated because banks are just not passing on that higher deposit rate. So the transmission mechanism is in some ways quite delayed. You do 50, then what happens?
Yeah, well, it just gets rid of the perversity of the negative interest rates. I don't know if zero is the right policy rate, but I think that's where they will pause. I think they'll get it to zero, see what happens, and then make a new plan accordingly. Zero is still punitive for the banks. Banks ideally would like to have an interest rate margin with a steep yield curve and ideally an ECB rate that's not at zero. But it gets rid of that punitive measure that basically nobody wants to keep their money getting negative rates. Banks have been able to pass it to some customers, but not all of them.
Is this stagflation in Europe? And if so, what does that say about European assets?
For me, the definition of stagflation is slowing growth and high prices. And yeah, Europe's in stagflation. I think the whole world's in stagflation. So not necessarily recession and inflation combined, but definitely slowing growth and higher prices. And it's a toxic environment for equities, toxic environment for bonds. That's why we've got equities and bonds both down double digits this year. So the stag's hurting the earnings component of equities and the inflation's hurting bonds. That's the backdrop to position for, though, because I don't see that changing anytime soon. I think inflation will start to plateau and come down, but it's going to stay so far above central bank targets for many quarters to come.
So, Patrick, what is the positioning? Are we just going cash? Like, how do you get defensive with that?
You don't want cash either because the inflation destroys your purchasing power. So I think the market rewards companies that have cash flow today. It punishes business models on that you may generate earnings 10 years from now. So the dream stocks that had no path to profitability, Uber did its IPO in 2019 and said we may never make a profit, but the stock market still said, oh, your company's worth billions to us. When there's an opportunity cost, interest rates aren't zero, there's inflation, the stock market has to punish those kind of business models. It's going to be attracted to companies that create margin squeezes elsewhere. So you want to own materials, you want to own oil and gas. I think semiconductors have pricing powers for years to come as companies not only buy what they need, but they hoard chips so they never get into this kind of situation again. So try to own companies that create margin squeezes elsewhere.
Patrick, there are only two sectors, in reality three if you push it. Energy and basic resources are up in Europe year to date in terms of the sector story. Telecoms are also up. Every other single sector is in negative territory. I just want to take you back to what you said about cash. Basically, the only way you've made money this year in the stock market from a sector point of view is being long commodities. Can that be sustained? Is that something that you think can carry on providing investors with a solution to this problem?
I think it's got to be a big part of every portfolio because the stocks are incredibly cheap on where commodity prices are. Oil and gas stocks aren't pricing in oil staying above $100 a barrel. If it does anything close to staying like $100 a barrel, these companies are very cheap. And they provide you a hedge against potentially economic disaster from purchasing power of consumers. Basically, discretionary spending can be decimated in Europe if we see higher natural gas prices, higher oil prices as Europe does move away from Russia. So not only does it provide you massive cash flow, it provides you a hedge against some of the other kind of equities you may be investing in.
Patrick, so linking it together, the point you said that you want to own companies that create the margin squeeze elsewhere, I thought was really informative. And then you have the commodity angle. And I'm wondering how long that playbook works for. What's a tipping point where like valuation just gets so cheap you want to be buying your favorites?
Yeah, so there's some companies that don't fit into a stagflationary backdrop necessarily. So Moeller Maersk is a company I own. It's trading at 3 times the earnings. It's going to be hurt by the cyclical headwinds and trade tariffs and sanctions, things like that. But when you're trading at 3 times the earnings and you are creating a margin squeeze elsewhere, actually, because there's many more goods that need to be shipped than there is shipping capacity. That's a kind of stock, a lot of cyclical risk comes with it, but the valuations are just so compelling. A 12% dividend yield. It hiked its dividend by 20% for next year as well. So those are the companies that produce cash flow today. They come with a cyclical risk, but the valuation is just so compelling. I'm happy to own those kind of companies too.
It's going to be interesting to see what role they play in consolidation as well. Patrick, when do these markets bottom, both in terms of bonds and equities, and which bottoms first?
That's going to come down to the questions of the recession. So I think Europe goes into a recession. I don't think the U.S. will fall into a recession with unemployment down below 4%, wage growth at 5%. The one thing you can count on as an investor is the U.S. consumer spends. When they're fully employed and they're getting pay rises, they're going to spend. So I actually think the Fed will blink and not create a recession in the United States. So I'm happy to own the equities that I own right now. I think there's going to be a lot of moving parts where equity indices may not move much higher, but the kind of companies I'm buying today, I think have significant upside ahead of them. And the kind of companies I'm shorting, which are those no earnings technology companies that are priced for massive liquidity, negative interest rates, that's not the environment we're in anymore.
Patrick, last question. What do you do with tech? You mentioned semis. Where does tech fit into this?
So I love the semiconductor stocks. They've been hit hard. They trade at reasonable earnings metrics. They generate cash flow. I think they have pricing power for years to come. So I want to own ASML. I want to own Tokyo Electron, Lam Research, the kind of companies that make the machines, that make the chips for other companies. ASML CAO talks about you can't even do manufacturers' checks. People want these machines out as quickly as possible. So that indicates very strong demand and very strong pricing power to me.
Lithography. Always an easy word to say. Patrick, thank you very much indeed.
Show ops.
Patrick Armstrong, Plurimi Wealth CIO. Great stuff. Thank you very much indeed. Coming up, we'll carry on the conversation about what's happening in energy. Oil heading for its longest run of monthly gains in more than a decade. We're going to speak next to Ed Morse, Citigroup's Global Head of Commodities Research. He's next. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Wow, we're crunching tons of polygons here.
What's going on? Where's Regina?
Hi, I'm LaDonna. I invest in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like real-time CGI.
Okay.
Yeah, don't worry, I got it.
Become an agent of innovation with Invesco QQQ. Before investing, carefully read and consider fund investment objectives, risks, charges, and expenses, and more in the prospectus at Invesco.com.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So we gave him Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
When I went to start researching different roofers in my area, I was overwhelmed.
It was so much information at once.
Then we got on Angie. It was just insane how quickly things went.
Contractors pop up on your screen.
You can read other people's experiences. To me, Angie is a time saver.
I scheduled it right then and there. It was really just such a seamless, enjoyable experience, and I never thought I would be saying that about a project at my home.
Got a home project? Get started at Angie.com today.
At Southern New Hampshire University, you can reach your goals faster. That's because you can transfer in up to 90 credits toward your online degree.
I was able to cut my time in half.
Apply free at snhu.edu.
Yesterday, in the middle of the night, we decided then to have a ban now on de facto 90% of Russian oil imports to the European Union by the end of the year.
That was European Commission President Ursula von der Leyen speaking at a news conference at the end of their two-day special meeting in Brussels. Now, oil is headed for its longest run in monthly gains in more than a decade, and that's after EU leaders agreed to pursue a partial ban on imports of Russian oil. Let's get the details here. Ed Morse, Citi Global Head of Commodity Research, joins us now. Ed, great to see you.
Likewise.
Basic numbers. How much oil production, oil exports could be at risk from this partial ban?
So it's basically as much as 2.5 million barrels a day. Some of it's been at risk for a while, however, so we should remember that a lot of the run-up in prices that we've already seen has been a result of European countries moving away from Russian oil, bidding up the price of other kinds of oil, particularly Brent-related oil. So we've seen the world in a kind of two-tier pricing system, with Russian crude discounting on average around 30% below what Atlantic Basin crudes are like. So while this displacement works out, we see the increase in the bidding up of Brent-related crudes, but I think it'll smooth out over the summertime. So the oil is fungible, and the 2.5 million barrels a day that could be at risk is going to go to some other markets. We're seeing India, for example, already increasing its imports from Russia by about 1 million barrels a day. We're seeing China increase its imports from Russia in the last few weeks, and with more to come, with talks about using Russian oil for their strategic stocks. So the fungibility of oil will be at work, as will the things that you've just been discussing in the last few minutes, namely the recession, because oil demand is definitively on its way down.
Okay. I want to talk about that, but I also want to talk about diesel as well. So let's just deal with the diesel issue, then we'll talk about the overall kind of long-term trajectory in terms of demand. Sure. Nobody puts a barrel of oil in their car. They do put diesel in their car or in their truck. Russia produces a lot of it, doesn't come through pipes, it comes on ships. That shipborne traffic is going to be banned under these rules. What impact is this going to have on the diesel market?
Well, how much is it going to have on the diesel market above and beyond what's already happened? Because the big diesel cutoff is really already in place. The refinery reduction of close to 1 million barrels a day in Russian production has meant a big cut of diesel. And it's been cut in part because a lot of what's been produced can't find a home. The mazout, the high sulfur fuel oil, cannot find a home, and they've had to cut back on refinery throughput, and that has cut back on diesel flows. And meanwhile, we had seen extra diesel demand in the winter because of heating requirements. We saw perhaps as much as 1 million barrels a day of diesel demand because of switching actually from natural gas to diesel. And we're now seeing in those places that had that kind of switching, natural gas prices coming down to below diesel prices on a BTU basis. So the switching will be back. In China, we think it's a good 300,000 to 400,000 barrels a day of switching to gas from diesel trucks. Now we're going to see that going back to gas and away from diesel.
Ed, diesel tends not to be shipped on big VLCCs, so it's less transportable around the world. I appreciate what you're saying in terms of the refinery runs, but nevertheless, the diesel that is being produced in Russia is going out on Aframax. There aren't that many of those ships out there. So what is being produced? Where does it go?
Well, it goes to places that it gets smuggled back into Europe. It goes into inventories in places around the world, including Saldanha Bay in South Africa. Or it's not there in the quantities that it used to be. I'd say the big issue on diesel has been the drop in Russian diesel exports, accompanied by a radical increase in U.S. diesel exports. So, you know, the things that we look at every week, every Wednesday, when we get the data coming out of the EIA, have actually been astonishing in terms of how the U.S. has been filling in supply of crude and of product that Russia has been not able to export. So we've had U.S. in the last week, U.S. exports were 10.6 million barrels a day gross. That is a radical increase from well below 9 million barrels a day before the crisis. We've seen that coming up in the diesel pool, the gasoline pool, and in crude oil as well. So we are seeing some of that come back in. We have to remember that because of where gas prices, natural gas prices were, as opposed to where they are and where they're going, we had a shutting in of diesel make in Europe because European refiners that had to use upgrading actually use hydrogen that come out of natural gas. And the natural gas was too expensive, so those upgrading units were shut down, creating more of a demand in Europe for diesel, pulling it from other places, including the U.S. We think we'll see an increase in European refining throughput over the summer because of that drop in natural gas prices in Europe relative to oil prices. And we're going to see new exports from the Middle East as well.
So, Ed, you mentioned the demand profile before, and throughout this whole run-up that we've seen in oil prices, you guys have been the most pessimistic, if I might say, in terms of where we're headed, in part because of the demand picture. Can you help me understand the removal of the Russian oil, the continued product demand versus your overall demand thesis?
Sure. Well, the product demand is where the overall demand thesis comes in. You know, we had at the beginning of the year expected that there was going to be around 3.6 million barrels a day of demand increase year on year. We're now down to around 2.2 million barrels a day of demand increase. That makes a big difference if you're pulling on a refining system that is under duress. And the other big difference has to do with, you know, where refinery capacity is likely to be. So I'd say that we're not the lowest and we're not the highest on demand, but every week you look at everybody, you know, looking against each other and bringing down their expectations of demand growth. You look at demand where people thought it was going to be relatively high, that was petchem feedstock for the petrochemical industry. It's associated with industrial demand globally in any event. And it's way off. The discount of naphtha to propane is a sign that that petrochemical demand is really low. And that was one of the hopes on where oil demand growth was going to be. People were focusing on jet fuel in particular, along with petchem feedstock, and the feedstock is not there. So we think a world staring at recession is not a world of robust demand growth for diesel.
So, Ed, I know the differentials are going to be all out of whack, in part because of the partial oil ban and also just the rejiggering of trade flows. But where is the fair value of oil? Because you're right, everyone talks about, you know, stagflation and possible recession, so why are we at 120 for Brent? So where is the fair value?
It's a hard number to come at when you have so many moving parts. If you look at the fair value for oil, look at the forward curve, that's the sign people usually go to, but I'd say it's exaggerated because the forward curve has now that prompt has got up to 120, is a very high price for the end of the year and for the end of next year. And I don't think that's fair market value. You have to just look at the cost structure of the industry. You have to look at where new production is coming and where would be coming even if we didn't have $123 Brent. And I'd say it's more in the $70 range than it is in the $120 range.
Ed, fascinating stuff, really interesting numbers. Thanks for joining us. We really appreciate it. Ed Morse, Citi's Global Head of Commodities Research. Thank you. This is Bloomberg.
What do you see when you look at the surface? Just that, the surface. But dive deeper and new possibilities emerge. Essential intelligence from S&P Global takes you here, providing the data, risk assessment, and workflow solutions you need to plumb the wonders beneath. A better, more prosperous future awaits. It's yours for the seeking. S&P Global. Seek and prosper.
The pursuit is on. The pursuit of outperformance at PGIM. With deep expertise to outthink across multiple asset classes. Actively managing investments in the world's public and private markets. Outscale, with the resources to serve 1,500 clients in 52 countries. And outlast, with long-term conviction that looks beyond today's volatility. Join the pursuit of outperformance at PGIM, the investment management business of Prudential.
In a global economy, there are countless moving parts. If you want to grow, you've got to know. Vertex, cloud-powered tax tech that enables frictionless transactions, invoicing, and payments. Companies who know, go with Vertex.
The moment you wake up, you're on your feet. But for the 1 in 4 adults who suffer from bunions, every step may be painful. And if left untreated, bunions only get worse over time. With the old way of doing surgery, bunions often returned. Lapiplasty 3D bunion correction is changing that. Lapiplasty's innovative approach realigns your toe and secures the joint to fix the root cause. There are risks associated with surgery. Find a Lapiplasty surgeon today and learn more about the Lapiplasty procedure at lapiplasty.com.
To start eating better? If only it were that easy. Fresh and Lean thinks it is. Meals with fresh organic ingredients delivered to your door, ready to heat and eat in under 3 minutes. So if you're looking to eat healthier, we got you. How easy is that? Fresh and Lean.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Ritika Gupta. GSK has agreed to buy vaccine maker Affinivax for as much as $3.3 billion. The British pharmaceutical company is buying up next-generation vaccines whilst it prepares to split with its consumer health unit. Last month, GSK announced a takeover of Sierra Oncology, a maker of targeted therapies for rare forms of cancer. Shares of Unilever jumping today. Activist investor Nelson Peltz has been appointed as a director, and his Trian Fund Management has taken a 1.5% stake in the company. The appointment comes after a difficult period for Unilever. CEO Alan Hope failed in an attempt to take over the consumer division of GlaxoSmithKline and has had to grapple with steep inflation. And the growth of home prices in 20 large U.S. cities picked up for the 4th month in a row, according to the S&P CoreLogic Case Shiller Index. A measure of prices in those cities climbed 21.2% in the year ending in March. Tampa was the biggest gainer, up almost 35%. And that is your latest Business Flash. Guy.
Ritika, thank you very much indeed. So we are coming into the end of May. European equity markets are about to shut up shop. We have the US back today, so we have a better trading volume story. And this is the picture that we have in front of us. We are dealing with a bond market that is under pressure. We are dealing with inflation that is super high. Energy, commodities, that story absolutely front and center. And that's why you're getting the big differences that you're seeing on the screens in front of you here. The FTSE 100 flatlining on the day, but still positive, despite the fact we are getting a big sell-off in the gilt market. The reason for that is commodities have and continue to trade very strongly. This month, this year, we've basically seen commodities being the only real outperformer apart from the telecom sector. On the continent, the story is very different. Look at what is happening with the DAX. Look at what is happening with the CAC 40. The DAX today down by 1.3%. The CAC 40 over in Paris down by 1.4%. How hard is the ECB going to have to hit the brake is the big question that everybody's now asking themselves after the inflation print that we saw a little bit earlier on out of the Eurozone. It's kind of 50-50 on whether we get 25 or 50 from the ECB in July. The markets are beginning to think about that as a narrative. Equities are under pressure. The close is next. We're nearly done for the month of May. The close is coming up very shortly.
Fidelity, your dedicated advisor, will work with you on a comprehensive wealth plan across your full financial picture. A plan with tax-smart investing strategies designed to help you keep more of what you earn. This is the planning effect.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills. Dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
Never be afraid of your strength. Because your body is capable of amazing things. The one they said you shouldn't have. The one driven by a power they can't see. Own your strength and see how far it takes you. Tono, be your strongest.
This is Lisa from 4Imprint. Yes. I like 50 welcome wows, 300 customer I love it, and 200 team member oh yes. Certainly. You know we got some brand new woohoos.
Dial up the wow factor with promotional products from 4Imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items. Wow.
I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4imprint, for certain.
It's hard to believe that Brava can go from 0 to 500 degrees in under 1 second. Or that it precisely cooks 3 different ingredients at the same time. It's hard to believe that Brava tells you when your perfectly seared steaks are ready. Or that it roasts a whole chicken in half the time. But seeing is believing. And when you cook with Pure Light, the difference is as clear as day. See for yourself at Brava.com.
When a folded flag is placed in your hands, it can feel as if you're marching alone into an uncertain future. But you are not alone. Just as soldiers march together, the Folded Flag Foundation is there, marching right beside you. By funding educational opportunities for Gold Star families, the Folded Flag Foundation helps us on our path to a better future. March together with us. Give today at foldedflagfoundation.org.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want, with all the entertainment you love, for the price that cable can't beat. Learn more at FuboTV.com.
So there we are. We're nearly done for the month of May here in Europe. Counting you into the close. We'll get the auction. We'll bring you the final numbers in a few minutes' time. But nevertheless, a fairly negative picture developing here in Europe throughout the day. Most of the continental markets are down circa 1.5%. Those are the kinds of numbers that we're looking at. Certainly, the CAC down by 1.5%. The DAX down by 1.3%. The Italian market under pressure as well. The FTSE not. So it's interesting to see which markets are outperforming a little bit here today. The FTSE 100 fairly flat. The energy component has done well this month. It continues to do well. We're seeing oil prices once again moving ever upwards. We saw what Patrick Armstrong from Parimi had to say a little bit earlier on. So that's what the map looks like today. Let's talk about the picture over the last month. Or, to be precise, the last 22 days. You need to compress it down to get the actual number. Hat tip to Dan Curtis here, making sure that that happened properly. So this is the picture, as you can see. Lows hit fairly early on, kind of 9th, 10th, 11th into the month. A climb back since then, and then a slight rollover. That has been how the month of May has developed. Sell in May in terms of making sure that does work, but we are down by 1.66% on the month. You think about the turbulence we've actually seen. You think about the gyrations we've seen, war in Europe, inflation numbers climbing. Some would argue maybe that's not a decent performance. That's actually quite a decent performance relative to what we've seen in the background. But where do we go from here remains the big question. Let's talk about the sector breakdown as well. This is the day. I'm hoping, actually, that the producer might be able to just change that a little bit as well, 2 months to date. We'll get them to do that in just a second while we're watching this. Today, technology's down, retail's down, financial services are down. That's where we're seeing the losses. You're about to see this change as if by magic. We're seeing food and beverage doing quite well. There's a very defensive tilt to the market today. Come on, you can do it. Change things on the hoof as we see things developing. No, it's not going to happen. Expectations a little bit too high.
No magic. There's no magic.
Here we go. 1 month. There we go. Brilliant. So energy is up by 8.44% on the month. Banks have risen by 4.64%, which is interesting. Expectation may be we're getting into positive territory in terms of the depot rate for the ECB. Retail's done well, which is interesting as well. Telecoms continue to outperform. Bottom end of the market, media down quite hard, real estate down quite hard, construction down quite hard. Think about the kind of story we're talking about here. Unsurprising, given what we got from things like Facebook's results, that we are seeing media down as hard as we are. Snap, remember Snap? It feels like a lifetime ago, but actually that has had a really big impact into the advertising space. So that was the month and the day. We got them both in. Amazing. Unilever today up by 8.8%. We were hearing from Radhika Gupta a little bit earlier on. Nelson Peltz is going to take a position on the board. This is a company that's really struggling at the moment to deal with the inflation narrative. Where do we go from here? How do they change the portfolio? Big questions that I think Peltz is going to try and help with. Credit Suisse, a story out a little bit earlier on being reported that maybe that is an institution that is looking potentially to raise money, shore up its balance sheet, sort out its longer-term problems, maybe on a more solid foundation. Now, Credit Suisse dropping on the back of that. We'll wait for details to follow. And staying with the banking theme, Deutsche Bank down by 2.35%. Yet another raid, Alex. Police cars outside Deutsche Bank and DWS just down the road in Frankfurt once again today.
Yeah, let's get more on those legal headaches. It revolves around greenwashing. Bloomberg's Steve Ahrens joins us now from Frankfurt. Hey, Steve, why the raid? What are the allegations?
So, hey, Alex, thanks. It's about greenwashing, as you said. So what the allegations are, they were brought up by a whistleblower last year, Desiree Fixler, and she's been saying that DWS has been overstating publicly to investors their actual capabilities. She said they've been campaigning on ESG, on sustainability in their funds, but the reality in the business is different. Fund managers don't actually use it, and apparently prosecutors in Frankfurt now believe they have enough evidence to do a raid. They got a search warrant, and they did it.
Steve, and I'm going to use an Alex word here, ESG is still a relatively squishy concept. How easy is this going to be to prove?
You're right. It's going to be tricky, and the expectations among many observers was actually this is not going to end badly for DWS, precisely for the reason you just said. However, this is about essentially misleading investors. So fraud in a way. And if they can line up the public statements and the annual report and sales documents and so on, and say this is what you promised to investors, and then demonstrate that this wasn't actually taking place within DWS, then they may have a case.
It's just so hard to measure ESG too, is the problem. Thank you for using the word squishy. I appreciate that. Steve, what does this overall mean then, the ramifications for DWS and then by extension Deutsche Bank?
Well, it certainly is a big new cloud over DWS and by extension over Deutsche Bank. They are a part of Deutsche Bank, and the performance matters a lot to the CEO of Deutsche Bank, Christian Sewing. He's publicly backed the CEO of DWS, Asoka Verman, repeatedly, but a raid is a raid. In the end, it doesn't look good. Share price is down. Investors will be asking questions. If investors start pulling out of DWS ESG funds, for example, because they don't actually believe it anymore, that, for example, would be a very, very severe ramification. And Deutsche Bank has other legal problems it's facing, so it's really something they don't need at this point.
Do we know how high the accusations go? We understand that the management potentially could be involved, but do we know what management, who we're talking about here?
No, we don't. The statement from the prosecutors actually, they confirmed our scoop, and they said it's about yet unknown employees and managers of DWS. So it is about DWS. It's not about Deutsche Bank, or I mean about the asset management part, but we don't know who. They said it's yet unknown who it targets.
Steve, great reporting, interesting story, made a big splash earlier on. Thanks very much indeed. Steve Ahrens joining us from Frankfurt. Let's check the final numbers here in Europe in terms of what is happening. Let me just pull up the markets and just get an idea of whether or not we've seen any action during the auction. Maybe a little drip lower. Yeah, just a little bit of a tick lower. FTSE 100 finishing the day negative, down by 0.1%. But on the continent, the DAX down by 1.3%. The CAC 40 over in Paris down by 0.4%. So certainly a sell-off into the close, into the end of the month here in Europe. We'll have plenty more coverage on what is happening here, real focus on what is happening with that inflation data out of Europe and the implications for the ECB. Alex and myself will be going over to Bloomberg Radio shortly, 5 p.m. here in London, 12 p.m. over in New York. DAB Digital Radio is where you'll find us, and of course, on all your Bloomberg devices. If you can't get us there, the podcasts are available, Spotify and iTunes a little bit later. Alex.
CME Group, where risk meets opportunity.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
What could the father of the bride possibly be doing on his phone? Checking with his marital advisor to see if he's on track to do this again. And again. Did I mention she made the guest list?
Digital tools so impressive, you just can't stop. What would you like the power to do?
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
Some bonds last a lifetime. These are the bonds worth investing in. For over 50 years, PIMCO has reinvented fixed income to create opportunities in every market environment. PIMCO, a global leader in active fixed income.
What if you were a global bank who wanted to supercharge your audit system? So you tap IBM to unsilo your data and start crunching a year's worth of transactions against thousands of compliance controls with the help of AI. Now you're making smarter decisions faster, operating costs are lower, and everyone, from your auditors to your bankers, feels like $1 million. Let's create smarter ways of putting your data to work. IBM, let's create.
You asleep? Do we have enough life insurance?
Don't worry. Just go to ethoslife.com to get your personalized quote in seconds and apply online in minutes.
Hey, I just got my free quote from Ethos.
Get a free personalized quote at ethoslife.com.
This is Bloomberg Markets, the European close. I'm Ritika Gupta. You're looking at a live shot of the principal room. Coming up, the importance of equality and diversity for companies and the economy. Bloomberg Equality debuts this Thursday, 1 p.m. throughout the month of June. This is Bloomberg. Keeping you up to date with news from around the world, here's the first word. I'm Ritika Gupta. In Brussels, Bloomberg's Maria Tadeo asked France's President Emmanuel Macron what is the point of his phone calls with Russia's Vladimir Putin. Here's Macron's response.
We have to keep discussing where Russia and Ukraine do stand in order to prepare peace the day they will resume the negotiations. And I think this is very important, and this is our duty as Europeans, in full transparency. Those who will have to negotiate are the Ukrainians and the Russians, the day they will decide, and the day a ceasefire will be real. I do endorse discussing with Vladimir Putin on a regular basis, with very demanding approach and full transparency with President Zelensky.
Meanwhile, Macron says that agreement by EU leaders for a partial ban on Russia's oil will cut Russian imports by 92%. And inflation in the Eurozone accelerated to an all-time high this month. Consumer prices rose up more than expected, 8.1% from a year ago. Food and energy were the big reasons. The data will just intensify that debate at the European Central Bank about how fast to raise interest rates. In the UK, business confidence rose for the first time in 3 months in May. Lloyds Bank says its business barometer increased 5 percentage points to 38%. 57% of those polled planned to raise prices, the 5th consecutive monthly gain. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Guy.
Ritika, thank you very much indeed. President Biden meets with Fed Chair Jay Powell and Treasury Secretary Janet Yellen in around 2 hours' time, just after 1 o'clock Eastern. White House National Economic Council Director Brian Deese spoke a little earlier with Bloomberg ahead of that meeting, which is going to focus, yeah, you guessed it, on inflation.
We have unique economic strengths right now, the job market and the labor market being chief among them, which position us well now to focus on this challenge, which is bringing prices down. Obviously, the Federal Reserve plays a primary role in that, but fiscal policy and the economic choices that we make with Congress play an important role as well.
Brian Deese, speaking of surveillance a little bit earlier on, joining us now, former Fed Governor Randy Kroszner. He is now a professor at the University of Chicago Booth School of Business. Randy, is this a significant meeting? Is this anything more than a photo op?
I think primarily it'll be a photo op. I mean, it shows the importance of the inflation issue. It shows the importance that the administration puts on it and is taking it seriously. But I don't think there's going to be any pressure put by the president or the administration on Jay Powell. I think they know the Fed's got to move, the Fed's moving, and I don't think they're going to try to stop that.
Hey, Randy, could the pressure come the other way? Is there a possibility that Fed Chair Jay Powell says, look, I can do all of this, but I can't help gasoline prices. That's something that you need to do. Could pressure come that way?
Well, for sure. I mean, I think, I would assume the president and the administration know that, things like drilling, the Fed can't drill. Fed can't produce computer chips. They can do a lot related to interest rates and credit creation, but they can't do anything on the real side. That's really got to come from fiscal policy or come from regulatory policy.
Just out of interest, I'd like to get your take on this. Why do you think the president is writing an op-ed piece in the Wall Street Journal, which by definition is read by financial types, and meeting with Jay Powell, who probably isn't that recognizable to the average American? The average American is worried about gas prices and groceries. How does this meeting kind of jibe with the average American in terms of what is happening, in terms of what is actually happening in their own lives?
I think it's part of the president trying to show that he's aware that average Americans are facing challenges, and one of the things that he can do is try to make sure that the Federal Reserve is aware of that, and that he has shown that he is aware that the Federal Reserve is aware of that, and so he's trying to take steps to make sure that the administration is sensitive to and trying to move on taking down this kind of cost of living crisis.
Randy, if we take a look at the why, sort of why now? I understand that, the White House wants a pivot to the economy in June, et cetera. But in terms of the fall in the stock market, the tumultuous volatility that we've seen in the last 4 weeks, the rise in bond yields that we had seen earlier, the tightening in financial conditions. If there isn't a Fed put right now, do we feel like there's a Biden put somewhere?
That's a very interesting question. So that really comes on, as I said, really on the kind of fiscal side or on the regulatory side. And so I think there are certain things that the administration could be doing to try to relax some of the supply constraints. I don't think it involves more spending right now, but I do think there are things that they could be doing, and maybe this is a foundation for them to make some announcements down the line.
In terms of whether or not this is a Volcker moment, Randy, do you think we're getting to that point fairly soon? If the Fed doesn't deliver now, do we end up with a bigger problem down the road? And is that maybe the message that the president will deliver today to Jay Powell? You need to get on with this. You see what's happening around you. Don't make it a Volcker moment.
I completely agree, because I think if the Fed waits, the danger is that inflation expectations can become unanchored and get out of control. So far, they haven't. Inflation expectations certainly have moved up a lot for the short run, but in the intermediate to longer run, they're basically around the levels that they've been over the last decade, towards the upper end of those levels, but not really far from that. The Fed has the opportunity now. If they move quickly, if they move boldly, and they maintain their credibility, then people will say, okay, these people are serious. Maybe I don't have to continue to ask for 5, 6, 7, 8% wage increases. But if they aren't serious, they run the risk that it becomes unanchored, and then down the line, the Fed really has to raise rates a lot, and the economy will tank.
It does seem that from Fed speeches that it feels more like let's do a lot of 50s right now and then pause in September and then wait and see. And I'm just wondering how you would model what a soft landing looks like. So say we get 2 50 basis point increases. Does a pause count? What does a pause look like? What does a soft landing look like?
So, Jay Powell has, I think, introduced the term not just soft, but softish. So a new term that has come out there. Certainly, I think the economy is going to be slowing down. And I think that's not just because of the Fed. It's getting some pretty tough punches from the war, from sanctions. We just saw the agreement for the European Union on banning Russian oil, driving energy prices up. This is all really tough for the economy. So I think the economy will be slowing completely independently of the tightening of monetary policy. But now you've got this 1-2 punch, and so hopefully they will raise rates quickly enough that they don't have to raise them too high so that investment can continue. But I think you've got a lot of these other shocks that are coming that are going to undoubtedly lead to an increase in unemployment rate and to a slowing of economic growth.
What is your assessment of the situation with the consumer right now? We saw consumer confidence a couple of hours ago coming out, still looks fairly elevated. Plenty of people are saying, and we hear it from the banks time and time again, that the consumer has plenty of money in their pocket. Is the consumer slowing down? And if the consumer is not slowing down at this point significantly, does that mean the Fed needs to go even harder?
So I think the consumer is slowing down a little bit. We've seen the savings rate come down quite a bit in the most recent data. So they're spending a lot relative to the current income. But as you were referring to, bank accounts seem to be fairly robust for a lot of people, which is good that they have that ability to spend. And I think people will continue to spend. But I think they're going to be a little bit more cautious going forward. I think some of the impact of sending out those checks over the last few years has been quite long-lived, but is going to be fading. So I think there will be some challenges for the consumer, especially if the unemployment rate starts to move up, as I think it might.
Yeah, let's get to the jobs number. And to your point, savings rate, 4.4%. We got that number on Friday. So clearly we're spending down our savings. We get the jobs number on Friday. What are going to be the key things that you're looking for? When you say the unemployment rate goes up, and that's part of what we want, right? If the Fed's going to put on the brakes, how high? What does that look like?
So hopefully it doesn't go too high, but you do have to remember that we are in the range, when we're under 4%, that's in the range of sort of the lowest levels over the last 50 years. We had that just before the pandemic, and we didn't have high inflation. So there's no necessary connection between high inflation and the unemployment rate below 4%. But given that inflation has gone up so much, I think it's going to be very difficult to bring demand down, to bring inflation down without it going up. Hopefully it doesn't have to go up that much, so a softish landing would get us certainly in the 4s and maybe even the 5s, but that is not devastating to the labor market as in some recessions that we've had in the past.
Randy, in an ideal world, where would the Fed funds rate be right now?
Well, in an ideal world, the inflation rate wouldn't be nearly what it is now. The Fed and other central banks would have been able to start a little bit earlier.
But given where inflation is, where do you think rates should be right now?
So I think they've got to move them at least to the 2 to 3% range, so that markets and individuals see that they're serious about trying to slow inflation, and then we'll sort of see what other shocks are coming, whether inflation's starting to come down or not. I'm old enough to remember Volcker, and I'm old enough to remember that interest rates were in double-digit levels. There are many people that I say that to. They just can't believe that can happen. It can happen. I don't think it will, and I don't think it has to. But I think that's the key reason why the Fed needs to move quickly.
Yeah, I remember when my parents' mortgage rate was like 15% or something for 30-year. That just seems crazy now.
And that was a good rate.
Right, and that was a good rate. Hey, Randy, before we let you go, tomorrow we see quantitative tightening actually start, very different than just stop actually buying bonds, for example. What do you think the effect is going to be? What are you looking at?
So I think the Fed is going to try to do this in a very gentle and very natural way. So rather than actually throwing securities onto the market, they're just saying, well, as our Treasury securities mature, as our mortgage-backed securities mature, we're just not going to continue to buy more new ones to keep the balance sheet where it was. Let it sort of slowly run off. So I think the markets are pretty well prepared for it. I think it's going to be a gentle beginning. At some point, they may decide to move it more quickly, but I think at first they're going to be fairly gentle about it. I don't think it's going to have any direct impact. If it, to some extent, markets already anticipated that. We've seen some volatility, but I don't think the actual slow beginning of runoff is going to cause volatility in of itself.
All right, Randy, we really appreciate you catching up with us. Lots of news to get through. Former Fed Governor Randy Kroszner, thank you so much for joining us. This is Bloomberg.
The Principal Room, brought to you by Principal Financial Group, combining actionable insights with specialized solutions to help meet your investment goals. Get to know us at Principal.com.
Welcome to Lenovo Late Night IT, where insiders share stories straight from the trenches. How much did the cyber criminals pay you to write that article?
I think we're actually witnessing the end of ownership.
AI by itself is actually fantastic, but doesn't really do the job.
Yeah, it'll be like a robot dance.
Like this?
This is Lenovo Late Night IT.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction, all done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try. You're going to like the way it works.
What do you think healthier looks like? CVS can help you support your nutrition, sleep, immune system, energy, even skin. So healthier can look a lot like you. CVS, healthier happens together.
9:30 a.m. New York time. A massive wave of market data comes out of the U.S. exchanges.
We handle around 200 billion pieces of financial information a day. There are millions per second at peak moments.
Those spikes are what we size our system for.
It's vital we don't fall behind during the peaks when our customers need us most.
It's an incredible feat to get this right every single day.
All right, well, U.S. stocks are off the lows of the session. Here, the NASDAQ 100 just out by about 0.1% as we head into the last day of the month. Here with the latest is Abigail Doolittle.
Well, a little bit of volatility here at the end of the month, Alex, and you can see it in this 1 month chart that we've had volatility all month, up in the beginning and then down, 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 a continuation of April's downtrend. Up slightly, down slightly this morning, and now, right now, we're looking at a small gain for the month of May, which means that April's brutal monthly decline, the worst one since March of 2020, could perhaps be snapped. But it seems like we'll be right down to the wire on this. Now, relative to one concern that has had markets whipsawing on the day, of course, rising oil. Here you take a look at the Brent crude chart, and it's pretty interesting because we could be looking at a breakout. Overall, you see this range since the great spike up and then down, and then it's pretty impressive to see both WTI and Brent holding into this range, kind of capped at it right now, but there is a suggestion that it could go higher, and of course the EU is on track to stop all Russian oil through the ocean, excuse me, but the pipeline, of course, still flowing to some degree. 1/3 of the pipeline delivery allowed. Perhaps by the end of the year, 90% of Russian oil will not be going to the EU. So in turn, we see that the energy sector is on fire. And then rounding out the inflation look, we can see that the Bloomberg Dollar Index and rates simply going higher. That 10-year yield right now up 11 basis points. So inflation last week not a concern. Today it is.
Great stuff, Abigail. Thank you very much indeed. That wraps up the markets. Let's talk about what we're going to be seeing over the next 24 hours. A little later today, we discussed it already, President Biden meeting with Powell Yellen. Salesforce earnings also, Alex, after the bell.
All right, and tomorrow the big event, the Fed balance sheet roll-off begins, and we get the U.S. ISM manufacturing data. So stay with us for all of that. That wraps it up for me and Guy here on television. Coming up, David Weston on Balance of Power, joined by Stephanie Kelton of Stony Brook University. And Guy and I are headed to radio. This is Bloomberg.
Accenture. Let there be change.
What does the future of strength look like? It's a personal trainer that assesses your strength and adds weight as you progress. It's dynamic weight that adjusts for you in real time for a more efficient workout. Come on! And it's a roster of coaches that motivates you to get stronger, faster. The future is strength you can feel and results you can see. And you can only experience it
on Tonal. Learn more at tonal.com. This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint. Your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
I'm taking a quick work from home lunch break, so I just made these fried eggs with sourdough toast in my Brava. It took a few minutes, and all I have to do was press a button. Brava's cooking technology allows you to cook things that normally require very different temperatures, all in the same tray at the same time. So you get perfectly cooked chicken thighs or New York strip steak or salmon with vegetables that are tender on the inside and crispy on the outside.
When a folded flag is placed in your hands, it can feel as if you're marching alone into an uncertain future. But you're not alone. Just as soldiers march together, the Folded Flag Foundation is there, marching right beside you. By funding educational opportunities for Gold Star families, the Folded Flag Foundation helps us on our path to a better future. March together with us. Give today at foldedflagfoundation.org.
With your finances?
Yeah. Save yourself the pain and let Truebill do the work. Truebill automates your personal finances by canceling subscriptions you're paying for but never use.
Who signed up for those?
Give your finances the fix and download Truebill today.
Nice.
From the world of politics.
I think if things with COVID continue to improve and we can kind of put the COVID era behind us, I think the chance of soft landing is maybe a little higher.
To the world of business.
When you think about all the construction that's going on, that is just fueling our economy and our economic engines, roaring louder than one of those Indy 500 winning cars.
This is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. As we come back in the United States from a long Memorial Day weekend, we have an op-ed piece by the President of the United States, Mr. Biden, in today's Wall Street Journal addressing the question of inflation. And now this afternoon, he's going to be meeting with the chair of the Federal Reserve, Mr. Jay Powell, as well as his Treasury Secretary, Janet Yellen, to talk again about the economy and inflation. To set up this meeting that we're going to be seeing this afternoon, we welcome now our Washington correspondent, Anne-Marie Hordern, who is at the White House. So, Anne-Marie, thanks for being here. What do we expect out of this more than a photo op?
Well, it's a great question because that's what a lot of people are pegging this to be, just that, just a photo op. And part of the reason for that is because the president, even in his Wall Street Journal opinion piece, said that he respects the Fed. This is the Fed's job, and it is an independent Fed. And he talked about how his predecessor, quote, demeaned the Fed, and that is something he doesn't want to do. But Brian Deese, part of the president's National Economic Council, leader of it, had said earlier this morning, it's not just a photo op. This is not just the Fed's top priority, but it's also the president. So this is a chance that they can discuss, also with former Fed chair herself, now the president's Treasury Secretary Janet Yellen in the room. But what more can the administration do when it comes to inflation? This is something that is in the realm of the Federal Reserve. But David, Politico had reported earlier this morning that all of June, this White House really wants to pivot to the economy. Of course, when you look at the polls, this is top of the agenda for consumers, for Americans every day when they go to the grocery store, when they look at the gasoline prices. Today, there was another fresh record of $4.62. We should also note quickly, David, that it is a week today from that shooting in Uvalde. So while the president is dealing with inflation, he's also dealing with something else that is showing up more top of mind of Americans, and that is potentially a move on gun legislation. He just got out of a meeting where we saw with the press the top of that spray there in the Oval Office with the Prime Minister of New Zealand, and he said he will talk to the Congress about gun legislation. So there's a lot of issues this White House is battling this summer.
Yeah, a lot of issues, no question about it. Thank you so much to Bloomberg's Anne-Marie Hordern reporting from the White House. We want to go back to that question now, inflation, which is so much on the agenda for President Biden administration this week. And to get the read of an economist here, we turn to Stephanie Kelton. She's professor of economics and public policy at Stony Brook University. So, Professor, thanks for being back with us. I'm going to give them the benefit of the doubt and say this is not just a photo op, that they want to accomplish something. I know there's a strict wall of separation between the Federal Reserve on the one hand and the administration on the other. At the same time, they can listen to one another. So what does Powell need to hear from the president? What does the president need to hear from Powell to make their jobs easier today?
Well, I think what Powell will hear from the president is what, frankly, he's already heard. And I think he knows that this administration has no intention of using the bully pulpit in any way to attempt to strong-arm the Fed, to impact or influence the decisions of the FOMC in ways that his predecessor, of course, did. And so, you know, what the president is likely to say is, I think, tell us some good news, right? Give me something to be optimistic about in terms of what the central bank is going to do with monetary policy to try to achieve this, you know, illustrious soft landing that everybody is really hopeful Powell and company will be able to pull off. And so I think, you know, that's what Jerome Powell knows is coming from the White House. And I think that in terms of, you know, Powell, what does he need to hear from the administration? I think, not so sure he needs to hear it, but I think it will be welcome news if the administration can also convey to the FOMC, to Jerome Powell, that they're also going to lean into this effort and that they're going to be pulling levers where and when they can to try to mitigate inflationary pressures as well, so that the job doesn't fall entirely to the Federal Reserve.
So let's address that specific question, and let me put it this way. What could President Biden do to make Chair Powell's job easier? Chair Powell has said his first job is to get inflation down. President Biden now has said, we want your first job to be just that. But what could the president do to help? And specifically, how could they increase some of the supply? Because you've said before, a lot of the problem here is a shortage of supply.
Yeah, I mean, this is, you mentioned just a moment ago, the op-ed in the Washington Post this morning, in the Wall Street Journal, I'm sorry. And so I think that what the president is doing is saying, look, one of the things we're going to do is stay out of your way to the Fed. And some of the other things we're going to try to do are to reduce costs. He mentions energy. He talks about what's been done thus far, releasing oil from strategic reserves. He talks about making investments to reduce bottlenecks, going after maybe some of the freight shipping to try to drive those costs down, childcare and elder care, finding ways to make it easier for especially women to return to the workplace and reduce costs for families. He's talking prescription drug costs, allowing Medicare to negotiate. So I think he's trying to wrap his arms around as much as he thinks he can do on his own and working with Congress to try to get prices down.
Yeah, forgive me if I put aside working with Congress just for a moment. That seems to take a fair amount of time, and I'm not sure we have that much time to get inflation down. On the question of, for example, shipping, you mentioned shipping. What about regulatory relief? For example, the Jones Act. The president, as I understand it, does have the authority to suspend the Jones Act for a time that could help on shipping costs. What about tariffs that the president may well have some discretion to pull back on? Is there regulatory relief to back off on some regulation, at least for the time being, to bring some costs down?
Yeah, and you and I have talked about some of these things in the past, you know, repealing non-strategic tariffs. And I noticed when I read the op-ed this morning that there wasn't a mention of that, despite, you know, Secretary Yellen recently talking about the administration taking a hard look at some of those things. So I agree with you. I think, you know, you're right to say that waiting around for literally an act of Congress to try to help in this effort is probably not the right way to go. And to the extent that the administration can do things unilaterally, I think they should and are looking at some of those things.
So let me breach my own rule here and broach something that Congress would be required for. Is increased taxes a useful way of curtailing some of the demand? That doesn't give you more supply necessarily, but maybe getting some of the demand down wouldn't hurt us.
Well, that is in fact what the purpose of increasing the tax should be, or increasing taxes should be. If you think every dollar that's taxed away from someone is a dollar that they don't have, can't hold on to, and can't use to chase after some goods and services in the economy, then taxes function to reduce inflationary pressure. The real question, though, is, David, who are you removing that potential spending power from? In other words, we're hearing a lot about corporate income taxes, and I think it's a little bit more difficult, maybe even a lot more difficult, to articulate a clear transmission mechanism that gets you from higher corporate income taxes to lower inflation. I know the question was put to the White House, and I don't think the answer was entirely clear or compelling there, but sure, increasing taxes, depending upon on whom they fall, is of course a very durable way to reduce spending and potentially bring down inflation.
So finally, Professor, I mean, hindsight's 2020. It doesn't do much good to say, I told you so. But maybe sometimes looking backward can tell us what we should do going forward. In retrospect, put aside whether the fiscal stimulus was just the right amount, too much, too little, whatever it is. Did it go, to some extent, to the wrong places? Because looking back on it, a lot of that fiscal stimulus was all on the demand side, not on the supply side.
Well, I mean, we also got the bipartisan infrastructure bill, right? And there is definitely a lot of money there that goes to supply side and capacity building. But, policymaking in crises is inevitably fraught with these kinds of problems. You're going to end up doing things that you wouldn't have done. You would be more targeted, more careful. You would have the benefit of time, not just hindsight, but the benefit of time on your side. And I think policymaking in those moments of urgency in a pandemic with a slowing economy, you inevitably get policy that is retrospectively, you can look back and see where you would have done some things different had you had the benefit of greater time to think things through.
Professor, it's always so helpful to have you with us. Thank you. That's Professor Stephanie Kelton of Stony Brook University. Coming up, U.S.-China trade relations in the wake of Secretary of State Blinken's speech last week. We talk with Frank Lavin, who ran trade policy as Undersecretary of Commerce for International Trade under President George W. Bush. This is Balance of Power on Bloomberg Television and on radio.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Only at Vanguard, you're more than just an investor. You're an owner. That means that your priorities are ours, too. Our interactive tools and advice can help you build a future for the ones you love. That's the value of ownership.
What if you were a global energy company with operations in Scotland, technologists in India, and customers all on different systems? You need to pull it together. So you call in IBM and Red Hat to create an open hybrid cloud platform. Now data is available anywhere securely. And your digital transformation is helping find new ways to unlock energy around the world. Let's create a hybrid cloud that can change an industry. IBM, let's create.
At Southern New Hampshire University, you can reach your goals fast. Apply free at snhu.edu.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. To keep you up to date with news from all around the world, we turn now to Mark Crumpton here with the first word.
David, thank you. 3 Republican lawmakers are going to have to testify in a federal lawsuit over new voting maps in Texas. The U.S. Supreme Court has left a lower court ruling in place that allows for depositions from the 3 representatives. The Justice Department and rights groups argue the lawmakers' new districts are discriminatory against Black and Latino voters. They want the maps redrawn in time for the 2024 election. The lawmakers had argued they're protected from testifying under legislative privilege. European Union leaders have agreed to back a partial ban on Russian oil. It would be part of a 6th package of sanctions aimed at punishing Russia for invading Ukraine. The sanctions would ban the purchase of Russian oil and petroleum products delivered by ships. Following a 2-day meeting in Brussels, the European Council President Charles Michel spoke at a news conference alongside European Commission President Ursula von der Leyen.
We understand it is extremely important to work on the possibility and to explore the possibility of import price caps also with international partners.
The new measure does allow EU nations to buy Russian oil delivered by pipeline. That exemption was needed to get Hungary to sign on. Protests continued in Iran today following a building collapse that killed at least 34 people. Demonstrators are challenging the Iranian government's response to last week's disaster. Authorities are admitting the building's owner and government officials allowed construction to continue at the site despite concerns over its shoddy workmanship. The city's mayor is among 13 people who have been arrested. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. We're going to turn now to China. Last week, we heard from Secretary of State Tony Blinken the approach of the administration, the Biden administration, to China and trade with China. This is part of what he had to say.
We are not looking for conflict or a new Cold War. To the contrary, we're determined to avoid both. But we will defend and strengthen the international law, agreements, principles, and institutions that maintain peace and security, protect the rights of individuals and sovereign nations, and make it possible for all countries, including the United States and China, to coexist and cooperate.
We turn now to a true expert on international trade. He's Frank Lavin. He's the Export Now founder and CEO, and he was a former Undersecretary of Commerce for International Trade under President George W. Bush. So welcome. It's great to have you here, Frank. You are an expert in this area. It sounds easier than I suspect it is to say, on the one hand, we don't want conflict, but on the other hand, we don't want to keep doing things the way we did. Is there a way to thread that needle when it comes to trade with China?
I think so. I mean, I give Secretary Blinken high marks, I think, for laying out sort of a methodical approach to the issues that concern the United States, but doing so in a sort of a rational fashion that I think didn't signal friction or didn't help the relationship deteriorate, but it just is a clear messaging to China. Some things are very important to us, and we are going to push for them, but we do want to have a working relationship.
Well, we'll come to the tariffs, the so-called Trump tariffs that are still in place there, I think under Section 301, if I'm not mistaken. Some people are saying those should be pulled off if for no other reason to get some of the costs down to try to address the inflation problem. At the same time, as I recall, they came about in part because of a sense you have a very different system. You're really supporting your industry in a way that is not consistent with us. Is that something we should be considering, pulling off those tariffs?
Well, yeah, look, some people look at tariffs as an economic tool. Some people look at it as a communications or moral tool. And I think Trump was in that second category. He said, we are just so unhappy with China and China's international behavior and unfairness on trade. We're going to put tariffs on you, even though those tariffs hurt the United States as much as they hurt China. So economically, they weren't good news. But in terms of signaling, they sure were a bunch of friction for China. Janet Yellen's the one who's made the point of saying, listen, if we're concerned about inflation in the United States and we're concerned about economic slowdown in the United States, remove those tariffs. Those tariffs are a burden on the U.S. Industry, and we're going to be better off without them. Unfortunately, I think there's a real political cost for President Biden if he does remove those tariffs. People are so unhappy about China and the United States that Biden would be subjecting himself to criticism, I think, and some political shots if he did take those tariffs off.
It feels good sometimes to sort of express yourself, even in anger, but does it do anything? Do these sorts of tariffs actually change?
Yeah, I think that's the difference between political leadership and political followership. If you're saying, all I want to do is articulate my unhappiness with China, fine, the tariffs let you do that. But if you're actually trying to help the United States economy and allow manufacturing, consumers, inflation to all go in the right direction, boy, tariffs really take you the wrong way.
What about a different approach, which apparently President Biden is trying to pursue right now? He just was over in Asia, of course, and he announced that Indo-Pacific Economic Framework, which I took it to be, let's have sort of a trade arrangement. It wasn't really a trade agreement proposed, but trade arrangement that's an alternative to China. Could that put some pressure on China to reform?
Well, it'll put some pressure on China, but more importantly, I think it's more of an open door sign of friendship and a professional working relationship with the other countries. These other Asian countries have essentially the same set of issues with China the United States has, right? And they're concerned about China's behavior. They're concerned about unfair trading practices. They would much rather have a working relationship with the United States than with China, but we in the U.S. have to put our hand friendship out as well. So this at least said in the digital space, we're going to come up with standard terms. With supply chain resilience, we're going to come up with protocols. So there's some good news there for some of our trading partners, but it did not provide market access. It wasn't a free trade agreement or trade liberalization. So it was, to my mind, more of a half a loaf solution.
We have a major issue globally, not just the United States right now, that I don't remember that much talk about back, for example, when you were at Commerce, and that is the supply chain. How does it figure into our trade relations, whether it's with China or with other countries? Because now we're having a lot of problems, a lot of places with supply chain. How do we need to factor that in as we think of our trade relations?
Well, I'll say this, what the COVID shock and some of the political turmoil we've seen brings to the surface, David, is that if you're a business, you cannot simply look at pricing as a basis for sourcing. You have to look at political risk. You have to look at concentration risk. So what we have are a lot of U.S. companies saying, even if we do prefer to source out of China, we will not put more than 50% of our production in China. I think Apple is saying that. Levi's is saying that. Other companies saying we just cannot put all of our eggs in one basket. So we have to look at other places. Now, that won't reshore. That won't bring a lot back to the United States, but it means business goes to Vietnam or South Asia or other kind of countries. There might be some reshoring as well, but I would say this to anybody who wants to bring industry back. It's up to the United States to earn that business. We've got to do everything we can to make it easy for businesses to invest and grow and hire in the United States. To the extent that we're successful in making it easy for good news in the United States, you are going to win some of that business back from overseas.
Is there a path back to having a constructive trade relationship with China? It doesn't seem to be that constructive right now, and it doesn't look like it's headed that direction. But is there a path?
Yeah, I think there's two elements of the path, one of which we saw last week is one, let's take daily friction and daily insults out of the discussion. That doesn't help anybody. So I think you saw in Secretary Blinken's comments a very measured, very judicious statement of goals for the United States. So that's one. Two, if you really want China to move your way and solve some of these problems, what we have to do, we the United States have to do, is start working on trade issues with other parties. As soon as they see themselves missing out or losing out, that's a huge incentive for them to improve their behavior. So regional trade agreements or bilateral trade agreements with other countries help China move the right way. If we close the door on all other trade agreements, we're telling China, you can behave badly. You can behave badly because the United States has no place else to go.
Frank, really a pleasure to have you with us. That was very helpful. That's Frank Lavin of Export Now. Still to come, we're going to talk with the governor of Kansas. He's Asa Hutchinson. This is Balance of Power on Bloomberg Television and on radio.
The war in Ukraine rages on.
President Putin's invasion is brutal.
Turn to Bloomberg for up-to-the-minute reporting from around the world and analysis of what it all means to you.
The intention here is to increase the pressure on the sanctions front.
I think the United States policy is that the sanctions continue until President Putin is no longer there.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio.
Singing or speaking. Reason or fun.
sensitive, or strong. Progress is everything.
G'day, we're Atlassian, the creators of teamwork software like Jira, Trello, and Confluence. Think of us as a teamwork lab, where teamwork experts have been studying how teams work for decades, pioneering new ideas and testing every obstacle in the way of nimble human collaboration, all to perfect the everyday act of working together. Unleash the potential of your team at Atlassian.com.
This is the planning effect. This is how it feels to know you have a wealth plan that covers everything that's important to you. This is what it's like to have a dedicated Fidelity advisor looking at your full financial picture, making sure you have the right balance of risk and reward, and helping you plan for future generations. This is the planning effect from Fidelity.
Your time to invest in companies that make stuff like this hard seltzer and this jetpack is now. It's all on Start Engine, which has an investor community of over 500,000. Go to startengine.com today and start investing.
This is Balance of Power on Bloomberg Television and Radio. I'm David West. We want to check in on the markets today. It's the last day of May. It's been a rough May. We'll see how they're doing. We're going to turn now to Abigail Doolittle. So how are we doing?
Well, fitting to the rough May that we've had, the volatility, it's been a volatile session. We were down in the pre-market by, let's call it 4 to 0.5%. Then on the open, down more than 1%. Right around even moments ago, now down about 0.4%. But it's important because it's going to tell us what happens on the month. Right now, we are on pace for a fractional gain for the S&P 500, but down just a little bit more. It'll be 2 down months in a row. So that's going to really add fuel to the fire around the debate around, is it a bear market rally or are we looking at something more sustainable?
If it ends up a flat market, though, for me, that's quite an accomplishment given where it was at times.
It certainly would be. And also today, you know, it's interesting that we do have this rebound for stocks because as you were just pointing out before we went on air, we have a pretty decent sell-off here for bonds, yields shooting higher. Typically, that would put a lot of pressure on stocks. So it's created some volatility, but right now, not the huge declines that we could have seen.
You talk about volatility, talk about energy with that announcement that the EU now is going to stop all oil imports by sea, not by a pipeline, not by pipeline.
Yes, and it's certainly giving a nice bid for oil. We have oil higher on the day for a third day. WTI crude backing off of its highs. Earlier, it had been closer to 120, but that feeds into that inflationary story, as does the super strong housing data, up roughly 20% on a year-over-year basis, which sounds great, but that's the, you know, the key asset class here in the U.S., so big inflation there, too.
But are energy stocks coming up along with the price of oil?
They certainly are. On the year, it's a huge gain, up 60% after a 50% gain last year. So that's up 110% over the last 2 years. The two, you know, the best sector both of those years. So it's a broad-based rally for energy. Folks really want in on those stocks, considering the sympathy trade with oil itself going higher.
And people usually say in inflation, you want to invest in commodities. That's
yes, commodities, gold, real estate. We're seeing that.
Go.
Let's see how long it sustains, though.
Okay, thank you so much to Abigail Doolittle for that report on the markets. Coming up, we're going to talk with the governor of Arkansas. He's Asa Hutchinson. This is Balance of Power, and we are on Bloomberg Television, and we are on Bloomberg Radio.
What could the father of the bride possibly be doing on his phone? Checking with his marital advisor to see if he's on track to do this again. And again. Did I mention she made the guest list?
Digital tools so impressive, you just can't stop. What would you like the power to do?
Shipping manager left to find themselves, leaving you lost. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
It's hard to believe that Brava can go from 0 to 500 degrees in under 1 second. Or that it precisely cooks 3 different ingredients at the same time. It's hard to believe that Brava tells you when your perfectly seared steaks are ready. Or that it roasts a whole chicken in half the time. But seeing is believing. And when you cook with Pure Light, the difference is as clear as day. See for yourself at Brava.com.
When a folded flag is placed in your hands, it can feel as if you're marching alone into an uncertain future. But you're not alone. Just as soldiers march together, the Folded Flag Foundation is there, marching right beside you. By funding educational opportunities for Gold Star families, the Folded Flag Foundation helps us on our path to a better future. March together with us. Give today at foldedflagfoundation.org.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Learn more at FuboTV.com.
I was paying for in-flight Wi-Fi for months before I finally caught it. Truebill uncovers hidden subscriptions and notifies you when a charge is upcoming. From there, you decide if you want that service. And if not, cancel it right from the app with one tap. Download Truebill, the money app that works for you.
Remember when you used to get stickers for doing something good? What if you got Bitcoin? With Upgrade Card, you can. You can get 1.5% back in Bitcoin on payments. Upgrade rolls all your monthly purchases into one easy installment loan. Get started at upgrade.com.
This is Balance of Power on Bloomberg Television and Radio. I'm David Western. I want to keep you up to date with news from all around the world. For that, we turn to Mark Crumpton with the first word.
David, thank you. President Biden is vowing to meet with Congress about gun control legislation in the aftermath of that deadly shooting at an elementary school in Uvalde, Texas. As he welcomed New Zealand Prime Minister Jacinda Ardern to the White House today, the president said, quote, "I will meet with the Congress on guns, I promise you." Mr. Biden told reporters Monday he believed there was a chance to strike a compromise with what he called rational Republicans, including Senate Minority Leader Mitch McConnell and Texas Senator John Cornyn. In Brussels, Bloomberg's Maria Tadeo asked France's President Emmanuel Macron about the purpose of his phone calls with Russia's Vladimir Putin. Here's President Macron's response.
We have to keep discussing where Russia and Ukraine do stand in order to prepare peace the day they will resume the negotiations. And I think this is very important, and this is our duty as Europeans, in full transparency. Those who will have to negotiate are the Ukrainians and the Russians, the day they will decide and the day a ceasefire will be real. I do endorse discussing with Vladimir Putin on a regular basis with very demanding approach and full transparency with President Zelensky.
Meanwhile, President Macron said that agreement by EU leaders for a partial ban on Russian oil will cut Russian imports by 92%. Israel and the United Arab Emirates have signed a broad trade pact. Officials say the agreement will help boost trade between the two to more than $10 billion within 5 years. Israeli Prime Minister Naftali Bennett said today it's the fastest free trade agreement to ever be signed in Israeli history. The UAE signed a similar pact with India in February and is in talks with Turkey as well. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. Well, here at Bloomberg, we often talk about the United States as a single economy, a federal economy. And of course it is, but it also is composed of 50 different economies across the state, with all the different states contributing to it. Welcome now somebody who runs one of those economies. He is Asa Hutchinson. He's the governor of Arkansas and current chair of the National Governors Association. Governor, thank you so much for being with us.
David, it's great to be with you. And as you indicated, we have a great economy in Arkansas, but it impacts actually the global economy too. With our agricultural exports, with Walmart's international headquarters being there in Arkansas, J.B. Hunt, Tyson's Foods. But I'll tell you, one story sort of illustrates what we're doing is the recruitment of U.S. Steel. U.S. Steel wanted to build a $3 billion new steel plant. We competed with other states. We won it in Arkansas. Going to be a state-of-the-art technology steel mill, and when it goes into production, Arkansas will be the leading steel producing state in the nation.
Yeah, I read that. I'm surprised at that. I did not know that. I still think of like Pittsburgh or something, but I guess I'm behind the times.
Well, U.S. Steel from Pittsburgh is now in Arkansas, and we're very proud of that. And that's 900 jobs, $100,000 average salary apiece, so it's a great boost. But what I was thrilled with was David Burritt was telling me that one of the reasons they chose Arkansas was it's a good place to do business. It's easy. You get your permit. We don't overly regulate. So our economy's doing well. We're creating jobs. We've lowered taxes in Arkansas by 24%, the individual income tax rate. We're going to do more. Largest income tax cut in history. At the same time, we have a surplus. So solid work, $1.2 billion in a savings account with a $1 billion plus surplus is not bad for Arkansas.
So we do have a federal system, and so obviously monetary policy, fiscal policy set in Washington. How much room for maneuver do you have? What are the levers that you can pull in Arkansas to affect the Arkansas part of the economy?
Well, the impact that we have would be lowering taxes, which we've done, which really helps during this time of inflation. So we can respond to inflation by lowering our tax rate, puts more money in people's pockets, helps offset that rising cost of fuel. But we don't do the macroeconomics that the Federal Reserve can do by any means, but it is the tax cuts. And then the other thing is creating jobs. And I've worked very hard in recruiting industry, as every governor does. But it's been successful, and that allows us to continue to invest in education. We've raised teacher pay. We want to compete in education, and so we've required computer science education in every school. And Dave, one of the things I'm proud of is that Arkansas we'll have more schools offering computer science and students taking computer science than any other state. We have the highest percent of those schools that teach computer science, which is critically important to our growing technology businesses in the state.
Yeah, it's quite a record, no question about it. At the same time, let me ask about some questions that aren't quite so comfortable. Guns. When you talk about education, very unfortunately now, we almost always think about guns now, what's happened in Uvalde and other places across the country. Arkansas also has what are thought to be some fairly liberal laws about guns. And you've got a rate of, I think, 22.6 deaths per 100,000, which is up there. It's like number 4 in the country, something like that. Is that a problem in Arkansas as you address it? Because you're a problem solver. If it's a problem, you must have a solution for it.
Well, it's a problem that we have to address as governors, and that's the reason I had the School Safety Commission back in 2018, and they made recommendations. We've implemented those. Our responsibility is to keep those schools safe for our children, and it did not go well in Uvalde, and it cost the lives of 19 children and 2 teachers. It rips the heart of America, and so we're going to have to double down in terms of school safety. I applaud these senators in a bipartisan way trying to look at this issue and see if agreement can be reached. I don't think the first solution is to put restrictions on firearms. It's school safety emphasis, but there are, it's a fair debate to look at the AR-15 style weapons and whether they should be sold to 18-year-old and whether that limit should be raised to 21. We've got to do things that make a difference and not just things that look good or sound good politically.
Yeah, exactly. And I'm not trying to negotiate this out with you, but things like raising to 21 the age to buy an assault-type weapon, also some of the large magazine clips, the research suggests those two things really might be really indexed to some of the killings we've seen.
It's going to be hard to reach an agreement on that. Whenever you look at the risks that are involved, whatever we do, we have to increase school safety. Because during the time that we had the assault weapons ban, you had the deaths at Columbine High School in Colorado. Whenever you limit certain type of weapons, we had our biggest mass killing was whenever we had a rifle used. And so it's not going to be easy, and it's not going to be a cure-all, but if we can save some lives and reduce one incident, we need to look at that.
Let me ask you about your party, the Republican Party here. Obviously, former President Donald Trump remains very much an influence in the party. I believe you said in the past it's time to move on. Nothing against President Trump, but it's time to move forward. Is your party moving forward?
Well, former President Trump will always have influence. He's a former president. His voice matters. But there's a lot of other voices that matter as well. And for the future, we need to look at those that want to solve problems and not simply create chaos. The last election is behind us. Let's look forward to the next one. And America wants us to be a party of ideas that's based upon principles of the free market system, of less regulation, and a strong defense. These are fundamental principles that brought me into the party. I think they're still important today when you look at the challenges that we face with energy independence, with the allies that we have to support against the Russian invasion and threat that is current. These are issues that ought to be focused on in the 2022 election and certainly in 2024. We got a supply chain problem that we've got to address. We're doing it in Arkansas, trying to reshore as much manufacturing as we can. Those are solutions people are looking for.
Governor, one last one here. We do have the President of the United States about to meet with the chair of the Federal Reserve as well as the Treasury Secretary to talk about the economy and inflation. If you had the opportunity to be in that room and give them one recommendation to address inflation, which will be a large issue in the election, no question about it, come November, what would you tell them to do?
Well, I would want to listen to Chairman Powell about how he believes the constriction on the money supply is going and the impact of that, because this is the first time we've raised interest rates, but we've also tried to control the money supply simultaneously. So we want to watch that carefully. So I would be learning a little bit in that venue. I think, President Biden makes the point he doesn't want to interfere with the independent Federal Reserve. Well, why do you meet with him? You meet with him because you want to express your views on things, and I hope the president does. I mean, that's part of his job as well. And so I think the biggest thing can be done probably is not in the hands of the Federal Reserve. They're going to do that. But the biggest thing we can do is to increase the reliability of the supply chain. Quite frankly, I'm worried about this fall. Whenever you have Ukraine not producing the grain that we usually rely upon in the world market, what's going to happen in our food supply? We need to look at that in advance, make sure we're prepared, and make the adjustments that we can for this fall.
Governor, it's really great to have you with us here in the studio. Thank you for stopping by. That's Asa Hutchinson. He is, of course, governor of Arkansas. Coming up, it's time for our look ahead to midterms 2022 with our political contributors Jeannie Shanzano and Rick Davis. This is Balance of Power on Bloomberg Television and on radio.
CME Group, where risk meets opportunity.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
What have we got to look forward to?
I always think about this William Gibson's quote about the future, that the future is already here. It's just not very evenly distributed.
I'm more interested in parallel versions of what might happen. My practice in art and research is just posing some of these questions to imagine more of these different singular possible futures.
Hyundai Motor, connecting art and technology.
How will your business adapt to change? You could hire an office full of Peyton Mannings.
What's up, Peyton? Morning, Peyton. Hold for Peyton.
They'd huddle.
Welcome to the Peytonverse. Such a visionary.
Game plan.
You go. No, you go.
And call audibles.
Double our investment in Omaha. Omaha! 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 Omaha!
Or you could use Workday. The finance, HR, and planning system used by over half of the Fortune 500 for a be agile like an MVP world. Workday for a changing world.
As a woman of color, I knew early on I would need extra support to overcome the barriers I would face. During my senior year of high school, I participated in a program called IJAC. It focuses on mentoring, financial education, and exposure to diverse careers. It's important to learn these values and to pass them down. Investing in programs that create possibilities for people of all backgrounds can create a lasting effect for generations to come.
The savvy customers who for decades have been using RockAuto.com to access the info hidden behind parts counters. Take advantage of reliably low prices.
All the parts your car will ever need, Rock Auto.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Every week we take a look at midterms 2022 to figure out where we are. Well, this week we actually do not have a primary today, so we have a lot of other things that we can discuss. And welcome now Bloomberg political contributors Rick Davis of Stone Court Capital and Jeannie Shanzano of Iona College. So, Jeannie, let me start with you, because it's very much on our minds a week after what we saw in Uvalde, that terrible tragedy down there. A lot of talk now about possible legislation up on Capitol Hill. We just talked to Governor Hutchinson of Arkansas. Any prospect?
You know, I am not optimistic we're going to see anything. We may see some incremental progress on something like the red flag laws. But I was struck by the fact, number one, the Sunday shows, they could not book a Republican senator to come out and talk. And number two, when they did book the Representative Crenshaw from Texas, you heard him oppose many things, including what people describe as common sense ideas like red flag laws, increasing the age of purchase to 21, expanding background checks. So he was, open to some room for maneuver, but it struck me that many of the things that were discussed, he opposed on a national level. So I am pessimistic that they're going to find the 10 Republicans they need. The president seemed more optimistic than I am, so if that means anything, that's a good sign.
So, Rick, is one of the potential Republicans would actually be the Republican senator from Florida, who was the former governor who actually signed into law a Florida law that does include moving the age up to 21 and does include red flags. So how could he oppose it on a federal level?
Well, I'm not sure he would. I mean, I think that this is going to be something we're going to have to watch and see what happens. I think there are Republicans who want to do something about the current problem related to guns, especially with juveniles like 18-year-olds with, those kinds of weapons. But it's got to be a two-way street, right? I mean, they've got to come out of a bipartisan meeting that says, here's what both of us can agree to do. I can see a lot of Democrats not wanting to do incremental progress that the Republicans might want. but I would think something is better than nothing. I do think that it's got to be done quickly, though, because public sentiment about these kinds of shootings tend to wane over time, and now is the moment for the Senate to take action.
Such a truth, and such a sad truth, that we've been here before way too many times, it seems to me, and people get really upset for a while, and then it all goes away, which does lead me, Rick, to my follow-on question is, what's really going to count in November? Because by then, I'm not sure that this gun issue will be that big an issue.
Well, it probably won't from the point of view of this shooting, but you never know what's going to happen between now and November. Nobody would have predicted this. Also, for about 30 years, the public has wanted to see stricter gun laws by a margin of about 54, 55%. So there is appetite long-term for something to be done here. And the last thing you want if you've got a good Republican year coming up is to put anything in the way of having a good vote for your candidates. And so doing something on this issue right now, I would think, would be more in the interest of the Republicans than even the Democrats, who already are going to have the public interested in stricter limits. And
I just want to add, there's so many ways in which this issue has changed. The last time we saw major gun legislation in the mid-90s, you had over 40 Republicans support that bill, and I believe it was close to 60 Democrats oppose it. And that's because that was at a time where you actually had Democrats from rural areas and Republicans from more urban areas. That has all changed now. The parties have completely gone to their own corners. And so what we talk about now is, can you get 10 Republicans over to the Senate? And it just is a reminder how much this has changed. The other thing that's changed even since Sandy Hook is that while we talk a lot about the NRA, there is also a very active pro-gun control group out there that are demanding action in a way they weren't prior to Sandy Hook and Parkland. So that has changed as well, and may change what happens in Washington as we go forward.
Rick, as you say quite wisely, it's hard to know what's going to happen between now and November. But one thing I would really expect is inflation will be a very big issue on the ballot, essentially, in November. We have the president meeting with the chair of the Federal Reserve as well as the Secretary of Treasury today. What can he do?
Well, he's got to look like he's got some leadership here. He's been sort of skirting the issue of inflation since it was first brought up almost a year ago as a important public policy issue. At the time, they tried to foul it off as being, transient, and now there's a full embrace. The White House is basically telling everybody to listen. June is inflation month, and they're going to try and do something about it. Today is going to be about leadership, showing that he's a partner of pals in an effort to try and bring down inflation. But he's got very limited tools, and even his own plan, is enunciated in a Wall Street Journal op-ed on Monday, really doesn't, none of that's going to happen between now and Election Day. So I hope he's got more tricks up his sleeve, because if he's banking on supply chain to take care of itself, or passing a bill on, child tax credits, he's going to be in deep trouble.
But Jeannie, aren't there regulations that he could roll back that would actually make a difference in the short term? I mean, one of the things we talk about a lot is the Jones Act when it comes to shipping costs. He can suspend that for a time. There's tariffs he can take off. There are regulatory things he could do. Is that just too much of an anathema to his base?
It might be. I think at some point the president may decide to take some of those actions, but I do agree with Rick that, he is limited in terms of what he can actually do to impact this. So what we're going to see this month is him and the administration coming out and giving us a message that, number one, the economy is better than we think. Compared to other countries, it's certainly better. And number two, that they're doing everything they can to address inflation. The difficulty of that message is, of course, we all go to pay for gas. You have mothers trying to buy formula and fathers, they can't get it. So, it's sort of a difference between the reality of macro versus microeconomics. And we all feel the micro, and as much as somebody says the macro is good, you don't necessarily feel it in a visceral way, and that's the challenge that they're confronting.
I'm not sure that it's worse someplace else helps me much where I am,
that's
because
right.
I'm living where I'm living, and that hurts hurting where I am. Okay, Rick Davis and Jeannie Shanzale will be staying with us now. We're going to turn next to the primary that may not happen until August, but that former President Trump is spending his time on these days, and that is Wyoming. This is Balance of Power on Bloomberg Television and on radio.
Only at Vanguard, you're more than just an investor. You're an owner. That means that your goals are ours, too. And Vanguard Retirement Tools and Advice can help you get there. That's the value of ownership.
This is the planning effect. This is how it feels to know you have a wealth plan that covers everything that's important to you. This is what it's like to have a dedicated Fidelity advisor looking at your full financial picture, making sure you have the right balance of risk and reward, and helping you plan for future generations. This is the planning effect from Fidelity.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 96% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
Singing or speaking.
Reason or fun. Daring or thoughtful. Sensitive or strong. Progress isn't either or.
Progress is everything.
Bitcoin in your IRA? It's possible with symbol GBTC. Grayscale Bitcoin Trust, the world's largest Bitcoin investment vehicle. Type GBTC into your IRA account to invest today. Grayscale, building the future of financial legacies.
What if you were a gigantic snack food maker and you had to wrestle a massively complex supply chain to satisfy cravings from Tokyo to Toledo? So you partner with IBM Consulting to bring together data and workflows so that every driver and merchandiser can serve up jalapeno, sesame, and chocolate-covered goodness with real-time data-driven precision. Let's create supply chains that have an appetite for performance. IBM, let's create.
In fact, the Democrats use their statements and quotes all the time in their campaign literature and in their speeches. They say Republican Liz Cheney, and then they go with the worst statements ever, and it gives them little credibility, but people aren't buying the act based on the polls. She's way down. She's at a level that nobody's seen yet. So we'll see what happens.
That, of course, was former President Donald Trump out in Casper, Wyoming over the weekend campaigning against Liz Cheney. He has a different candidate he'd like to win in the Republican primary, which comes up in August for her House seat. Still with us are political contributors Jeannie Shanzano of Iona College and Rick Davis of Stone Court Capital. So, Rick, I've seen some polls that have Liz Cheney way behind. Should we be concerned?
Yeah, sure. Absolutely. You should be concerned. I mean, Wyoming is ground zero for Republicans. Probably 70% of the state registered voters are Republican. And she's taken it on the chin. Most of those polls are primary voters, which is a core group within the Republicans. So it's pretty intense. I would say, though, the further away from them as far as voters go, she does better. So regular Republicans who don't necessarily vote in primaries, she does well. Independents and Democrats, of course, are looking to potentially even vote in the Republican Party to support her. So she has some options, but right now she's got work to do between now and the end of August.
And of course, Trump there right after his losses in Georgia, which were tremendous. And I don't think anybody could have imagined that those elections would go as badly as they did for Donald Trump. And so over the weekend, he's talking about the fact that, you know, this is the race. And I do agree with him on this point. This is the race that's going to test whether, in fact, the Republican Party becomes the party that's going to relitigate 2020, because nobody has made this case more than Liz Cheney to take on Donald Trump and to say we cannot be the party that is focusing on overturning elections. And that's a far cry even from Brian Kemp in Georgia, because, of course, Brian Kemp simply ignored it. He didn't take on Trump. He just ignored the issue. So it's going to be a fascinating race. And of course, there has been a Cheney on the ballot in Wyoming in over every election for decades. So if she loses, it'll be a first time.
Yeah, that's an important point. A lot of those traditional Republicans' names are not doing so well this year. Thank you so much to Rick Davis and Jeannie Shanzano, our political contributors here at Bloomberg. Check out the Balance of Power newsletter on the terminal and online. Coming up, we're going to have a second hour Balance of Power on Bloomberg Radio, and this is Bloomberg.
What have we got to look forward to?
I always think about this William Gibson's quote about the future, that the future is already here. It's just not very evenly distributed.
I'm more interested in parallel versions of what might happen. My practice in art and research is just posing some of these questions to imagine more of these different singular possible futures.
Hyundai Motor, connecting art and technology.
What does the future of strength look like? It's a personal trainer that assesses your strength and adds weight as you progress. It's dynamic weight that adjusts for you in real time for a more efficient workout. Come on! And it's a roster of coaches that motivates you to get stronger, faster. The future is strength you can feel and results you can see. And you can only experience it on Tonal.
Learn more at Tonal.com.
I'm taking a quick work-from-home lunch break, so I just made these fried eggs with sourdough toast in my Brava. It took a few minutes, and all I had to do was press a button. Brava's cooking technology allows you to cook things that normally require very different temperatures, all in the same tray at the same time. So you get perfectly cooked chicken thighs or New York strip steak or salmon with vegetables that are tender on the inside and crispy on the outside.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Learn more at FuboTV.com.
This couch.
I'm just saddled with so much credit card debt right now.
I need an upgrade card. It rolls all my monthly purchases into one easy installment loan so I can avoid stuff like that.
Where do I sign up?
Get your upgrade card at upgrade.com.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps in countless pages. Scribd makes every moment a reading or listening moment.
I saw Top Gun also in the theater. It was unbelievable. I agree. I totally agree with Jim. A.O. Smith, this is one of those dividend aristocrats. The company's been around since after the Civil War. They've been paying a dividend for 82 years. This is exactly the type of stock that I want to be in for the second half of the year.
Joe T, just quickly.
Energy, I'm at an overweight. I'm also at an overweight for agriculture, ADM.
All right, that does it for us here on Halftime. The exchange begins right now.
Thank you, Melissa. Hi, everybody, and welcome to The Exchange. I'm Kelly Evans, and the big event this hour, Fed Chair Jay Powell summoned to the White House, meeting with the president on the economy and inflation. This as President Biden pushes his own plan to bring prices down. Will it all result in a more hawkish Fed than markets currently expect? And soaring energy prices aren't helping the situation. Oil jumping again today, hitting $118 a barrel as gasoline futures hit another record high. Is there any relief in sight? Plus the consumer fallout. Spending on big ticket items is starting to slow. Is the hit exaggerated by a shift to services, or is inflation simply to blame? But first, Dominic Chu with our numbers.
All right, so the numbers are interesting because if you look at it right now, Kelly, it seems like a ho-hum, nothing's really going on kind of day. The Dow Industrial is down a measly 63 points. The S&P is down 1 full point, and the NASDAQ is up 35. Very modest moves, but consider the fact that at the lows of the day, that composite index for the NASDAQ was down 189 points. We are significantly off the lows, and in green for the NASDAQ composite, you can see very much off the session lows for both the Dow Industrials and the S&P. The S&P right now, 4155, so trying to find some of that footing in a market that has been, yes, very volatile post-holiday weekend for the Memorial Day celebration here in the United States. If you look at where the kind of the happenings are, where the positivity is in the market right now, it certainly is in some of that kind of growth and technology-oriented trade. If you look at a couple of the ETFs that track growth-oriented stocks, the top white line versus the orange line, which is the value stocks, we know that value's been outperforming for the better part of this year. And you can see here that gap is fairly wide, but take a look at that outperformance just over the course of the past week. We have closed the gap a little bit. Growth stocks are a little bit more in vogue right now, so maybe that's the signal of a bottom. The bulls are hoping that. The bears say we still have another leg to go lower in this market. Now, if you look at the stocks of the day, anybody who is either diabetic or knows somebody who is may be familiar with these companies. Dexcom, the biggest gainer in the S&P 500, and then Insulet Corporation. The reason why is because just about a week ago, Kelly, there was some chatter, some reports, some speculation about Dexcom maybe making a bid for Insulet. Dexcom makes glucose monitoring equipment. Insulet makes pods for insulin. Might be a combination. Well, Dexcom takes a very big step and comes out formally and says, while they never quote on merger speculation, they say they are not in active deal talks with anybody right now. That is what set Dexcom higher by about 4.5% and Insulet lower by about 10%. So keep an eye. Healthcare on that side of things. Dexcom, a very big mover in today's trade, Kel. I'll send things back over to you.
A growing area of venture capital activity as well. Dom, thank you very much. Now, President Biden is just moments away from meeting with Fed Chair Jay Powell at the White House. This after the president published an op-ed in the Wall Street Journal laying out his plans for curbing inflation. His three-part plan includes not meddling with the Fed, tactically targeting energy, freight, housing, drug, and child care costs, and reducing the deficit by raising taxes. So how much of this inflation fight will fall to the Fed and how much to the White House? And what is the historical significance of today's meeting between Biden and Powell? For more, let's bring in David Wessel. He's director of the Hutchins Center on Fiscal and Monetary Policy at Brookings. David, thrilled you could join me today. What do you think is the significance of this meeting?
Well, have we ever had a time where the Fed chair was going to the White House and ran the risk of being overshadowed by a K-pop band? Right. I mean, that's really unprecedented. I think basically what we've seen here is that the president wants to demonstrate he's worried about inflation. And what's significant is he's standing behind the Fed as it raises interest rates. And that's basically very different than what we've seen in some periods in the past.
This is a big political risk for him as well, because he's basically saying, and he writes in the piece, that if job growth slows from 500 to 150,000 a month, that would be a good sign. You know, he's preparing people for a slowing economy into the midterms, which we don't typically see happen, but that reflects the reality, David, that inflation is already causing political fallout, and fighting it aggressively seems to be the only option left.
Absolutely. And I think the president is trying to demonstrate that he understands that people are anxious about inflation, and he's using whatever power he has, which as an executive is pretty limited, to do something about it. He's demonstrating a concern. From the Fed's point of view, this is very convenient. They have the political establishment as their back as they raise interest rates, and they're hoping that all this talk about inflation will help prevent inflation expectations from getting any worse than they are already, because that's an essential part of their strategy.
You know, the market rally of the last couple of weeks was predicated on lower bond yields and this idea, sort of stoked by some Fed officials, that maybe they're not going to do a lot more half-point hikes. And as Nick Timmerose has been reporting, as we heard from Chris Waller, the Fed governor, yesterday, and now with the significance of this op-ed and summit, you do have to wonder if there's going to be a lot more tightening still to come from this Fed than people expect.
Well, look, it's getting a little ridiculous now that the Fed has essentially pre-announced what it's going to do at each of the next two meetings, 50 basis point increases once and 50 basis points twice. The speculation is what happens after that. And the short answer to that is, well, that depends on what the world looks like then. And so I sort of think this is getting kind of out of control. My personal opinion is that Jay Powell is so determined to avoid being the Fed chairman who let inflation get out of control, is that he will err on the side of tightening too much rather than too little. So to that extent, I think the market may be misreading him.
With apologies for asking you this, what does Ben Bernanke say about all this right now? I mean, you've interviewed him, you spent a lot of time with him the past couple of weeks. He has this new book out, which is a reflection on monetary policy. And it seems, you know, as I read it, I can't help but escape the conclusion that what he's saying is that it's always the Fed's fault. If policy is too tight, if policy is too loose, that yes, they need to take into account whatever DC is doing, but that monetary policy is the primary driver of inflation and only the Fed can really cure it. And is that implicitly his advice for what they should be doing right now?
Well, yes. I think what Ben Bernanke has said is, yes, the Fed misread the economy and it expected inflation to be transitory, a word which we've now banned, and it has now moved very quickly to correct for that mistake. He has a great deal of confidence that the Fed will achieve its inflation goal over the next couple of years. And he said at the event we had at Brookings that he wouldn't be surprised if the unemployment rate went up a little bit. There's not really much fiscal policy can do at a time like this unless the Congress and the president are really ready to raise taxes, particularly on people who tend to spend less when taxes go up. And that would mean raising taxes on people in the bottom half of the population. And I can tell you one thing I'm sure of, that's not going to happen anytime soon. So yes, it's the Fed's job. Bernanke is confident they will do it, but it's going to be tricky. And this is me, not Bernanke. It's going to be hard to avoid a mild recession, but a lot depends on luck. What happens with COVID, what happens with Ukraine, Russia, commodity prices, what China does. A lot of it is out of the Fed's control.
Yeah, and a lot of these events, you know, they're multi-factor causes, as Charlie Munger would remind us. So as we wait for this meeting, which should be underway, you know, any moment now, probably expect some kind of short public discussion followed by a much lengthier private one. What are you going to be listening or watching for?
I'm not sure that this is more theater than substance. You remember the last time when we had a different president and Jay Powell met with him? The Fed released a statement before the meeting was over in order to preempt a Trump tweet. Well, the one thing I'm sure of, there won't be a Joe Biden tweet saying I beat Jay Powell over the head with a baseball bat. So the only thing that would surprise me is if anything the White House says suggests that they're not 100% behind the rate hikes that are clearly in train at the Fed. And I don't expect that.
All right, David, again, great to have you today. Thanks for the time.
Good to be with you.
David Wessel with the Brookings. Quick programming note, San Francisco Fed President Mary Daly will be on Tech Check for an exclusive interview tomorrow morning at 11 a.m. Eastern Time. Definitely don't want to miss it. Now, for years, the Wall Street motto has been TINA. There is no alternative to stocks. Bond yields were historically low. Commodities weren't doing much, and the stock market just seemed to only go higher. But now that rates have moved up with the potential to go higher as the Fed gets more hawkish, commodities are soaring and stocks have become a lot less attractive. There are reasonable alternatives now, or are stocks still the best place to be? Let's ask Alan Boomer. He's Chief Investment Officer at Momentum Advisors. Alan, this is your phrase here, your moniker, and I do think it's an appropriate one. So explain it a little bit and where it leaves you in terms of the market.
Sure. Thanks for having me. And listen, a year ago, we were buying stocks because there's nothing else to buy, even though we knew that valuations were getting a little pricey. Now you look at a market that's sold off a lot and even bonds that have sold off a lot. There's been a re-rating across all asset classes. And now you can buy some things and feel pretty good about it right now. There's a lot of stocks trading at really attractive valuations, really nice dividends. And then in bonds, there's also some good fixed income out there right now. So Tara, there are some reasonable alternatives out there in the market right now.
So would you be buying bonds here after everything we just talked about, the risk that the Fed could prove to be more hawkish than people expect?
Yeah, a little. Look, I look at a yield curve that is still got some positive slope to it. And like just last week, I was able to buy in the secondary market bank CDs that are FDIC insured for 2 or 3 years, and I got a 3% rate of interest. Like I could not buy a 3% 3-year paper or piece of 2-year paper anytime in the last few years. And so I'd be cautiously optimistic that even though I'm concerned about inflation, I would expect that I get my money back, and in the future, I'll be able to put that money out and get a pretty good rate of return in the future. So again, if you're going to buy bonds, now's a decent time to buy them. You know, I would still say stocks are more attractive right now because there's a number of stocks that have a dividend yield that's even higher than what you're getting from bonds. But both, again, are a lot more attractive than they were a year ago.
Yeah, we'll circle back to some of those names in a moment. But on commodities, if you're interested in that space, do you do it through physical commodities or through equities with exposure?
Yeah, I think the easier play is always going to be the equities with some exposure. Like when you're playing commodities, you've always got to be cognizant of the fact that there's contango on a lot of commodities. And contango really just means there's a cost to rolling contracts forward, and that cost will really eat into your returns a lot. Like I used to work at Goldman Sachs years ago, and I remember one time we had a bullish call on corn, and it was the right call, but we didn't factor in the cost of rolling those contracts. And in a market where corn prices went higher, investors actually lost money because of those costs. So I'd rather be, if I was bullish on corn, I'd rather buy a company like Bunge or a company that's in the agricultural space that's actually producing the corn or the you know, whatever the product I'm looking to get exposed to.
Yeah, I mean, imagine that you make the right call and it still doesn't work as an investment. So you can only imagine if that timing doesn't perfectly play into your hands. You mentioned Bunge. Let's mention a couple of other names that you think are attractive here, maybe for their yield. What are a couple of investments that you think investors could kind of go for?
Yeah, a few others. So I like Merck. Merck's got a really nice dividend. It trades at a discount. Phillips 66 is another. Phillips 66.
It comes down to and find a new lower point as a base point to.
All right, now despite the crypto winter chill, a number of venture capitalists, of course, still staking.
Super cycle where prices are getting higher. And I think that Phillips 66 is one of those companies that's kind of been overlooked. It hasn't rallied as much as a lot of the other energy market players. Dividends are strong there. And, you know, as a refiner, you've got a lot of ability to pass on your prices to the end user. And so, again, I think Phillips 66 is a good look. And there's a few others, but there's so many names. I look at even small cap value as a asset class, right? Like the whole small cap value market is trading at under 10 times earnings right now.
Wow.
I mean, things are really on sale.
What about real estate? Last question, whether it's through, you know, REITs or real estate cycle exposed equities or literally real estate, which plenty of people have dabbled in the last couple of years.
Yeah, I like real estate generally. I mean, if you've got the ability to manage a property on your own, as an owner of real estate, you get to mark your rents up every year. That's a thing that really helps you to fight inflation. All leases have some sort of an inflation rider in them. But if you can't go out and buy physical properties, then the best alternative would be to look at REITs. And I think there's a lot of great REITs out there. One that I buy is REZ. The ticker's REZ. It's residential REITs, and they're focused on apartment buildings and kind of single family homes, but mainly it's multi-family homes. It got a great dividend yield as well. So I like REITs as a play also.
Yeah, and still making a call that that space will continue to perform. Alan, thanks for joining. It's like a sort of a quick masterclass in Terra, so to speak. There are reasonable alternatives. Thanks again. We appreciate it.
Great, thank you.
Alan Boomer with Momentum Advisors. All right, coming up, the EU's new agreement to ban Russian oil is pushing gasoline futures to a record high today, and WTI crude to back within striking distance of $120 a barrel. And to make matters worse, bottlenecks at refineries are fueling fears of global gasoline shortages. Up next, why drivers won't be breathing a sigh of relief anytime soon. Plus, one of the people responsible for bringing Top Gun Maverick to life, Skydance Media CEO David Ellison, joins us in his first ever TV interview with his reaction to Maverick's massive debut, his thoughts on the future of the movie business, and much more. As we head to break, here's a quick look at markets. Dow's off the lows. It's down 86. S&P down 6. NASDAQ in the green today. The 10-year back at 284. We're back in a moment.
This is The Exchange on CNBC.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can. Angie's List is losing the list. From now on, it's just Angie.
So what happens to all the people that needed the list?
Oh yeah, everything still works. We just made it better. We even let you book services instantly now.
Start your home project at Angie.com.
Introducing Icy Hot Pro. Ice works fast to freeze your pain and your doubt. Heat makes it last, so you'll never sit this one out. New Icy Hot Pro with 2 max strength pain relief.
After an accident, the attorneys at Levinson Axelrod will pursue a settlement amount with the insurance company on your behalf, including future pain and suffering. Do you know what happens next? The insurance company always tries to pay less. They try to negotiate on the value of your life. At Levinson Axelrod, we represent you and work to secure the maximum settlement. If you've been hurt, call us. We're on your side. Levinson Axelrod, your neighbors, your lawyers.
There's something so relaxing about a backyard built with Cambridge paving stones. Don't you think, boys? First time in my life, everyone agrees with me. Actually second, because everyone agrees that Cambridge pavers keep the rich colors and stay beautiful for years to come, thanks to our unique ArmorTech process. What a life.
Paving stones with ArmorTech, your outdoor dreams come true.
Stay. We are so sorry. We hope you'll have us over again. He's in training. Oh, if I weren't earning 2% cash back right now, you'd be in so much trouble. Are you serious? Again, my apologies. Got myself a pair, too.
The Wells Fargo Active Cash Visa Card. That's real life ready.
Welcome back to the exchange. Crude oil prices are edging closer to their March highs as the EU announces a new round of sanctions on Russian energy. WTI crude down to about 117 from its earlier highs, and that's pushing RBOB gasoline futures to record highs today. $4.16. You can tack a bunch more on top of that. $5 or so, that's going to be the national average. Anyway, this has nearly doubled over the past 12 months. The spike in energy prices is spilling over into the stock market, where 19 out of the top 20 names in the S&P this year are, of course, energy stocks. Look at some of those gainers. Occidental's up 147%. And we all know when you look at gasoline prices across the country, we continue to hit record highs. $4.62 today. That's the new high national average, about $1.50 more than a year ago. Our oil and energy and everything guru, Brian Sullivan, is here to talk a little bit more about this. Brian, it just
cost me $100 to commute here, by the way, to studio.
Absolutely.
And that's almost not an exaggeration.
No, there are some people who are going to start working from home to avoid that fuel hit. And of course, it's not those who are going to be most hit by it. But here's the question. Specifically what Europe has announced as it relates to Russian oil supplies is, A, they are not going to allow ship imports, but they can do it via pipeline for the sake of Hungary and Czech and maybe something. B, that the natural gas continues, which is more important for their economy. And C, in a weird way, we bear the brunt of the price adjustment for oil and gasoline here because our economy is still relatively more sensitive to that than Europe's.
We're car-based, absolutely, and I was only half joking. I paid $6.06 a gallon in New Jersey yesterday.
Wow.
Now, this is a single station, one owner kind of off, so he could do that. He was definitely taking advantage of the situation. From a national perspective, international, nothing's been announced yet. The EU today floated what they think they're going to do. Tomorrow they'll vote and probably go ahead with this. You're exactly right on the points about this. They're trying to wean off Russian oil by the end of the year. They're trying to do that largely by making it impossible to insure tankers with Russian oil on them. Greece doesn't like it because they are the big shipping, so they're trying to. Everybody has their own beef with some part of this. But they are going to wean off. They're hoping to get, 80-90% of Russian oil out of the EU. Here's the big question. They're doing it to, as they say, basically end the funding for Putin's war machine. A noble goal. Let's hope it works.
Right.
my guess is India is just going to buy up all those extra barrels. Russian oil production is only down about 1 million barrels. And when you do the conversion of rubles, Russia may be making more money now.
Well, I hate to say it, but again, it is relatively better for the U.S. consumer struggling with high gasoline prices that Russia's oil ends up somewhere, because this market is so tight. If the global oil deficit is more than it is, right, in a way, you at least want those barrels to find somewhere. But you're right, it's unfortunately going to keep funding that war machine that Europe is trying to avoid funding.
India's been a huge buyer. Bizarrely, there are Russian-owned refineries in the EU. It's in Italy, in Sicily. Italy's biggest refinery is actually owned by Russia. So they've been a huge buyer. So all this is going to come to an end. We'll see if China and India pick up those barrels. The question is, where does Europe get? Now, Europe's going to slow demand, but the cutoff of Russian oil is going to be more than the slowdown. So where do they pick up those extra barrels? Do we start exporting to Europe? More? Maybe. Angola? I'm not joking. Norway?
They're just not a huge supplier.
Libya's,
there's a limited amount.
Libya's down, so they're not going to be it. And the Iranian nuclear deal looks like it's not getting anywhere. So those extra barrels are probably not going to be on the market to the U.S. or Western consumers, at least not for a while, if ever.
Notably this morning in the president's op-ed in the Wall Street Journal, the only energy relief measure he talks about is clean energy credits. In other words, there is nothing official coming from the White House at this point about anything to specifically try to lower this price. So should we just expect it to keep going higher, and how much higher do you think?
Yeah, it's hard to know. I mean, here's the thing about fossil fuels. There's two uses. We always frame oil in terms of gasoline and driving places or using jet fuel. I get that. Natural gas, which to your point, the EU did not touch. Natural gas is used to make stuff. Make everything, pharmaceuticals, chemicals, plastics, even wind turbines, solar panels, bodies for cars, for electric cars. Natural gas is used to heat homes so people don't freeze to death.
And the price, by the way,
it's a very different and much more important commodity in many ways than oil is.
It's still getting this spike from the global energy crunch. So in that sense, there is going to be an impact already working. As we still haven't really felt the impact of the doubling in prices we've seen this year. Is there any relief for any of this? For natural gas, for gasoline, for oil? What ends this? Some resolution with the Russia-Ukraine war? Or
that would be huge. By the way, that'd be huge for the world in so many ways, especially for the people of Ukraine. Just end it. And there are, from what I understand, some conversations that are maybe starting to happen. Let's all pray that ultimately is the case, and I think you'll see things really shuffle around if that happens. I don't think there's any end to it. Now, I could be wrong, but everything I'm reading, and I'm just going to kind of it's not my opinion, I'll aggregate everything I'm reading from people like Halima Croft and people I love and trust. You're getting 1.5 to 2.5 million barrels of Russia off the market. Good to squeeze Putin, as long as he doesn't sell it somewhere else. But you got to make up for it, lest demand goes down, Kelly. Okay? AAA is estimating, and we'll get the numbers, I think, tomorrow, 8% jump in driving this Memorial Day from last year, which was a huge jump, of course, because of COVID, from 2020. Everybody's in their car. Everybody's at the airport. Okay, are there going to be jet fuel shortages in the Northeast this summer? It's possible. Diesel shortages, possible. In Europe, probable, more than possible.
And those are the next shoes that could drop here, unless you
And by the way, quickly, demand destruction in gasoline does not happen that fast. People think, oh, people stop driving. Most people drive because they have to. Imagine if everybody started going back to the office.
Well, and even with 8% higher on Memorial Day, that tells you not a lot of price sensitivity to high fuel prices. Brian, for now, thanks.
Sure. Good to see you.
Appreciate it. Until next time.
Yeah, I'm going to bike home.
Yeah,
that's fine.
Brian Sullivan. Still ahead, will these soaring fossil fuel prices push a faster shift to clean energy? Well, like Brian just said, we'll look at what rising energy costs mean for the commodities needed to make the renewables. But first, how big of an impact is inflation having on consumer confidence? The latest numbers and the areas suffering the most from tighter spending, one of which may surprise you. Stay with us.
You're a one-man stitchwork master, but your staffing plan needs to go up a size. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
Father's Day, don't give Dad another necktie or more socks. Give him what he really wants. The outdoor cooking fun and flavor that's better on a Blackstone. So now your dad can be the master of the meal, the king of the cookout, the sultan of sear. Don't let Dad suffer from griddle envy this holiday. It's better on a Blackstone. Go to your nearest Blackstone retailer or log on to blackstoneproducts.com and see the full line of Blackstones.
For everything you do online, Akamai makes it possible. Protecting investments, fueling e-commerce, securing the workforce, safeguarding healthcare, defending financial systems, energizing the metaverse, making life better for billions of people, billions of times a day. Akamai, power and protect life online.
After talking and texting for years, we got married for the family plan.
And then we really expanded our family for the wireless savings.
It seemed like the responsible thing to do.
And then, just yesterday, my sister told me about Visible.
Yeah, get unlimited data for as low as $25 a month. No family needed.
Family plan savings without the family. Get Visible. Single line wireless with unlimited data for as low as $25 a month.
Welcome back to the exchange. The Dow is down 460 points at the lows this morning, so a much better tone this afternoon. Although we haven't yet heard anything from the president's meeting with Fed Chair Powell this hour. It has not yet begun. The Dow's down 127 points. As for the movers, we're looking at shares of companies in the crypto space trading higher. Coinbase, Silvergate, MicroStrategy in the green as Bitcoin's back above 32,000, just below that right now. American Eagle falling after Morgan Stanley downgraded it to underweight and cut its price target to just $8. 40% downside from here. The analyst says they see further room for sales misses and margin declines. Chinese internet names are leading the Nasdaq today, putting the Crane Shares China Internet ETF on pace for its fourth straight positive session. The K-Web is set to post a 4% gain in May. It's been one of the worst performers over the past year. Tesla, meantime, on pace for its fourth straight day of gains as well. It's up 23% in just this short period of time. Its low for the year so far was $620 a share. It has already sprung back up to $760. And let's end with a check on this month's worst Dow stock. It's Walmart, down 15% in May. Remember those earnings? It plunged 11% after missing estimates for the worst day since 1987 earlier this month. Now to Tyler Matheson for a CNBC News update. Tyler?
Kelly, thank you very much. And here is your CNBC News update at this hour. The heavy death toll from flooding and mudslides in Brazil now stands at 91, with dozens of additional people still missing. Hundreds of state and federal rescue workers in northeastern Brazil are still searching for survivors. This disaster follows similar flooding and mudslides that occurred in the Rio de Janeiro region of Brazil back in February. Amid calls for gun control after last week's massacre in Uvalde, Texas, more than a dozen shootings occurred across the country over the Memorial Day weekend. Over the span of 72 hours, the Gun Violence Archive tracked at least 14, quote, mass shootings in the country in which 4 or more people were shot. According to the organization's data, at least 9 people were killed in the shootings, with more than 60 injured. The Democratic-led House Judiciary Committee is planning an emergency session on Thursday to mark up a package of gun violence prevention bills. The bill, called the Protecting Our Kids Act, would raise the buying age for semi-automatic rifles from 18 to 21 years old, among other measures. For full in-depth coverage of Congress's planned bills, tune into the News with Shepard Smith. That's tonight at 7 p.m. Kelly, back to you.
Tyler, thank you, and I will see you soon.
See you shortly.
Now, after a 2-year delay due to the pandemic, Top Gun: Maverick finally hit the big screen over the holiday weekend, and audiences around the globe were eager to head to theaters. It raked in more than $160 million just in the U.S. over the long weekend, $300 million worldwide, shattering records. Joining us now in an exchange exclusive is one of the men behind the movie, producer and Skydance CEO David Ellison, along with our own Julia Borston. Julia, I'll hand it over to you guys. Just a note that everyone that I know who saw it raved about it.
Yes, indeed. This is a movie that had a 99% positive audience score on Rotten Tomatoes and has been a huge financial success for Paramount and also for David Ellison and Skydance Media. David, thank you so much for joining us today in what is your first TV interview after over a decade in this business. We're very glad to have you.
Thank you so much for having me, and it's an absolute privilege to be here.
So, David, I want to start off with the Top Gun Maverick numbers. Paramount just updated the box office again, even higher than they had anticipated even yesterday. How does the performance of this movie that you've worked on for a decade change your outlook on what types of movies you want to invest in going forward and what your expectations are for the box office?
So look, we could not be more thrilled, more excited with the performance of Top Gun Maverick this weekend. And just want to start by thanking our incredible partners with Tom Cruise, Jerry Bruckheimer, Joe Kosinski. And I think what Top Gun showed is that with the right movie, people want to have an escape. They want to have a good time at the movies. And, we're really thrilled that we were able to deliver that to audiences this weekend.
I think it's interesting, David, that you've also made some of the biggest movies on Netflix, even in Amazon. You did The Old Guard and Adam Project. And you also have a first look deal with Apple Films. Explain to us your strategy and your perspective on what types of films should go on which platforms.
So Skydance, as you said, we started the company 12 years ago. We're a diversified media company with 5 divisions across film, television, animation, interactive, and the most recent one, Skydance Sports. And for us, we really believe in the core thematic that quality is always the best business plan. And, and we're big believers in consumer choice. So for us, it's always a case-by-case basis on where we think that particular story can reach the broadest audience. And as you said, we're incredibly proud that we've released 3 movies with Netflix. All of them debuted in the top 10. We had The Tomorrow War and Without Remorse last year with Amazon. And we now have an a deal we're really excited about with Apple, who have been phenomenal partners to us. And we have our first animated movie, Luck, coming out this August in partnership with John Lasseter and Holly Edward. Oh, sorry, go ahead.
But so big picture though, do you think audiences are going to continue to go to the theater, or do you think that Top Gun is going to be a little bit more of an aberration and the numbers may drop below what we saw in 2019 in terms of summer box office?
I think we're definitely still recovering from the pandemic, but what I hope Top Gun helped prove this weekend is that for the right movie, audiences will really come back to the theater. They want to see stories like Top Gun on the biggest screen possible. There's no better place to see this movie than on an IMAX screen. But I also think, the direct-to-consumer business has definitively changed consumer behavior. And I think above everything else, audiences are really going to want choice, and that people are going to be very selective about what movies they want to go to theatrically and what they want to see at home. And from our perspective, we're a diversified company, and we love being able to be a content engine that can power the overall ecosystem around us.
So in terms of that streaming ecosystem, I mean, you have experience with a lot of these different companies. Are you concerned about a contraction in the number of subscribers that Netflix raised a lot of red flags about? Are you worried about that for Netflix? Could things get even worse? And what about for the industry as a whole?
So we're
on how they are navigating inflation, how their consumers might be navigating inflation. And I know you spend a lot of time zeroing in on how much money the consumer has in their wallet and how long they can handle some of these inflationary pressures. What are you going to be watching for in the months ahead?
Yeah, we're watching a couple of things. So one, the savings rate has now fallen below the pre-pandemic level, which means that consumers are dipping into that savings pile that they had massed during the pandemic, roughly $2.5 trillion across the U.S. In addition, real incomes are minus 3.5%, which is almost a full percent lower than they were at the depths of the great financial crisis when you look at inflation-adjusted income. So, there's a couple areas. On the lower end of the consumer, we're looking for that demand kind of destruction that can be coming from these higher prices, pinching that wallet, if you will. We're also seeing a big pickup in credit card spend amongst that group. And then for the higher end consumer, don't look, but we've seen about $13 trillion worth of market cap shrinkage when you look at both equities and crypto since last November. So at what point does that wealth effect hit the higher end consumer? Again, we think the consumer's probably okay for a time, but as we start moving into late 22, early 23, we think you're really going to see a little bit of pain there. So that's what we're watching. And it underscores the difficulty that the Fed has in trying to engineer a soft landing here, where they slow the economy enough, but not too much.
Yeah, and good point. I am curious at the other side of that equation when it comes to spending, and of course is business spending. And we've seen a lot of anecdotal evidence that a lot of corporations have maintained some of their IT budgets and some of the related spending that goes along with that. Do you think do you think it can hold up? And if so, do you think it could be enough to maybe mitigate a potential slowdown in consumer spending?
Yeah, no, I mean, I think when you look out, corporates and really individuals, the balance sheets, for now are quite strong. And it's one of the reasons why we don't see, a recession in 2022. We think if anything, it materializes over the course of the next couple of years. And if you think about those corporate borrowers, they issued a lot of debt over the last couple of years at low fixed rates, that are still in place. So I don't think that there is a huge risk to business spend unless or until businesses look out and see one of two things. Either inventories are building, which some retailers did show that they were, probably because of double ordering during the supply chain issues, and or a material slowdown in the consumer, making those businesses more cautious. So again, I think all of that's going to happen, Roman.
Yeah.
That's part of what the Fed's trying to do. The question is it a gentle easing into a soft landing, or is it something that then builds downward momentum into a harder landing? History is not on the Fed's side here.
All right, Steve, going to have to leave it there. Always a pleasure to catch up with you. Steve Chiavarone there of Federated Hermes, giving us a little bit of market perspective here as we wait for additional comments out of the President of the United States and how he's going to fight inflation. In fact, he's meeting right now at the White House with the head of the Federal Reserve, Jerome Powell, as well as the Treasury Secretary, Janet Yellen, a former Fed chair, to be sure. Headlines crossing the Bloomberg terminal right now saying that Biden will respect the Fed and won't interfere in their work, but he does plan to discuss inflation with Jay Powell, and he expects the Fed will use its policy tools to address rising prices. Of course, the focus not only on the Fed, but on the Bank of Canada, as well as the ECB in about a week's time as well. Global central banks all over right now trying to digest some of those inflationary pressures and, I guess, figure out what to do next. Let's bring Michael McKee into this conversation right now, our Chief International Economics and Policy Correspondent. And Mike, we might as well start off with the Fed first here. We kind of know the challenges that Jay Powell is going through right now to try to figure, I guess, just how much to press down on that gas. Based on the data that we're seeing, the data dependence that they always say that they're following here, what do you think of the communication so far?
Well, this is a political communication by the White House that wants to let people know that they're concerned about inflation in the hope that maybe inflation starts to go down by the time the midterms roll around in November, and people will remember that Joe Biden met with Jay Powell and they did something about it. There's nothing that the White House can actually really do to bring down inflation at this point. And as you pointed out, the headlines, Joe Biden is saying, I'm not going to tell the Fed what to do. And the Fed has always said, we don't get involved on the fiscal side. So at this point, both sides know what they're going to do and what they can't do. And so there isn't much that's going to come out of this meeting, except we know that the Fed is going to raise interest rates by 50 basis points in June and July, and then we'll see.
And Mike, I guess, we got our lesson in how central bankers navigate presidential tweets during the Trump era. It has been interesting in Biden's years in office now to steadily see this shift of focusing on the inflation issue firmly on the Fed, to your point about the midterm elections. I wonder how that potentially influences the kind of questions that start coming towards the Fed. If you're seeing more commentary from the White House that is specifically talking about the inflationary issue being a Fed issue.
I don't think it's going to bother them at all, and I don't see this as ratcheting up the pressure on the Fed at all, because the Fed's job is stable prices, and they've said that. They know they need to bring inflation down, and they've said they'll do whatever it takes, basically, to bring inflation down. So you can't really raise the pressure on them.
Yeah.
What it might do a little bit is take some pressure off Joe Biden if the American people believe that it's the Fed's job and they buy his argument that he can't do much about it.
So for all the people sort of hitting Jay Powell and Joe Biden over the head, we should point out inflationary pressures, these are a global phenomenon here, and we've seen different responses by various central banks. I think in a week or so time, we're going to get a big ECB decision. This week, I think we get a Bank of Canada decision, and they've already been relatively aggressive in their communication.
The Bank of Canada has sort of been ahead of everybody at this point, and they're expected to do it again tomorrow, raise by 50 basis points and set the stage for another 50 basis point move, which would basically, by the end of July, get them to neutral, which is sort of what the Fed has talked about as an interim target. And then the Bank of Canada can decide where they go from there. But they've had relatively strong growth and relatively strong inflation, which is a problem that they are trying to deal with. The ECB has relatively low growth and relatively high inflation, but they only have the inflation mandate. So they are going to raise rates, according to the markets, by 50 basis points over the next couple of meetings. They'll still be way behind the Fed and the Bank of Canada, but they will have started.
All right, Mike, going to have to leave it there. Our chief international economics correspondent, Michael McKee here, breaking down maybe what to expect out of some of the central banks this week and beyond. Well, coming up tomorrow is June 1st, and that starts Pride Month. We're going to use that as an excuse to take a look at equality and diversity and how it plays into the economy. Lee Badgett, author of the book, The Economic Case for LGBT Equality. That's coming up next. This is Bloomberg. A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
G'day, we're Atlassian, the creators of teamwork software like Jira, Trello, and Confluence. Think of us as a teamwork lab, where teamwork experts have been studying how teams work for decades, pioneering new ideas and testing every obstacle in the way of nimble human collaboration, all to perfect the everyday act of working together. Unleash the potential of your team at Atlassian.com.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy, a measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
This is the planning effect. This is how it feels to know you have a wealth plan that covers everything that's important to you. This is what it's like to have a dedicated Fidelity advisor looking at your full financial picture, making sure you have the right balance of risk and reward, and helping you plan for future generations. This is the planning effect from Fidelity.
You know real chili never has beans. You know which pizza is eaten with a fork and a knife, and which one is definitely not. You know a cappuccino is for the morning, and an espresso is for the afternoon. You know how to answer sparkling or still in over 12 different languages. You'll try anything that's not currently alive. Unless, of course, it's highly recommended. The Delta SkyMiles American Express card. If you travel, you know.
What if you were a global bank who wanted to supercharge your audit system? So you tap IBM to unsilo your data. and start crunching a year's worth of transactions against thousands of compliance controls with the help of AI. Now you're making smarter decisions faster, operating costs are lower, and everyone, from your auditors to your bankers, feels like $1 million. Let's create smarter ways of putting your data to work. IBM, let's create.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? Can't forget about that, or that either. So next time you think print, remember, when you use Vistaprint, the printabilities are endless.
Earnings season continues.
There's so much nervousness in the market right now.
This market punches you in the face.
Bloomberg is fastest with the numbers and analysis.
Big numbers from Disney.
It just slammed expectations.
Bloomberg, the fastest numbers and analysis you trust.
President Joe Biden at the White House right now, meeting with Fed Chair Jerome Powell and Treasury Secretary Janet Yellen. Let's take a listen.
Families, excuse me. And my plan is to address inflation. It starts with a simple proposition. Respect the Fed. Respect the Fed's independence, which I have done and will continue to do. My job as president is not to not only nominate highly qualified individuals for that institution, but to give them the space they need to do their job. I'm not going to interfere with their critically important work. The Fed has dual responsibilities. One, full employment. Two, stable prices. Chair Powell and other leaders of the Fed have noted at this moment they have a laser focus on addressing inflation, just like I am. And with a larger complement of board members now confirmed, I know we'll use those tools in monetary policy to address the rising prices for the American people. So I look forward to Chairman Powell's continued leadership at the Fed, and I look forward to the Senate considering my final nominee to the board, Michael Barr, in the near future. And that's why we're meeting, folks, and thank you for coming in.
Thank you, guys.
All right, the President of the United States there preparing to meet with the Fed Chair Jerome Powell, as well as his Treasury Secretary, Biden's Treasury Secretary, Janet Yellen, to talk about inflation and I assume other economic measures. We'll keep an eye on that and bring you any other headlines that potentially come out of that meeting. But we do want to pivot from that to a milestone here on the end of May 31st, the eve of Pride Month here in the U.S. And a lot of focus right now on equality and ways we can strive for a little bit more inclusive society. I'm pleased to say joining us right now is Lee Badgett, a professor of economics over at the University of Massachusetts Amherst, and is the author of a great book called The Economic Case for LGBT Equality, Why Fair and Equal Treatment Benefits Us All. Lee, thanks for being here. Some of the best research that I've seen just amongst various professors striving to sort of make the case for equality is one which also makes a case for the economic opportunities lost from discrimination and exclusion here. Maybe you can help quantify what that means within the LGBT community.
If we're talking about LGBT people, we're talking about a loss of income. We're talking about higher poverty rates. We're talking about economic effects of a lot of the lived experience that people have where they face discrimination in the labor market. They may have come out of their education with less than they were capable of getting. So it adds up for individuals. And I think what's important to note, though, is that it's not just LGBT people who are harmed by this, but it's actually everyone. My argument is that the economy itself is held back when people don't have the opportunities to be their full selves at work, to contribute all that they know and can do, their creativity, to our economy. So we have found that in studies of several different countries, not in the U.S., but other countries around the world, that 1% or more of GDP per capita is lost because of the poor treatment of LGBT people.
Those are really headline productivity numbers, Lee. And I guess if you're doing an observation in general of companies and their ability to better address unfair treatment, what would you say? Would you say we are seeing improvements?
It certainly looks like it. There are lots more companies that are taking LGBT inclusion seriously. They're changing their own policies in the U.S. and they're changing them in other parts of the world too. And they tell us why. They say we have to do this because we need to be able to recruit and retain the best people out there in the labor market and to make them as productive as they can be. So the company's interest is real, I think. Business knows that that's what they need from people. Now, actually putting that into place can be challenging because there's still headwinds of bias against LGBT people, and sometimes company policies are not well lined up. So they know what they need to do. I think they're trying to do it, and they're on a path. So the question is, will they keep moving forward and actually making sure that their entire workplace and all of their policies are open, make it an open place for LGBT people to work. So there's still work to be done.
No doubt. Lee, really appreciate your insight as always. Thanks very much. Lee Badgett, professor of economics at the University of Massachusetts Amherst, joining us. When we come back, a big deal for Canada. Gold Fields is buying miner Yamana at a major premium. We'll hear from Yamana Gold's executive chairman, Peter Maroney, next. This is Bloomberg.
Take the world by cloud. Accenture, let there be change.
When I went to start researching different roofers in my area, I was overwhelmed.
It was so much information at once.
Then we got on Angie. It was just insane how quickly things went.
Contractors pop up on your screen.
You can read other people's experiences. To me, Angie is a time saver.
I scheduled it right then and there.
It was really just such a seamless, enjoyable experience, and I never thought I would be saying that about a project at my home.
Got a home project? Get started at Angie.com today.
Tommy John has been dedicated to elevating underwear for over a decade. Now, we're proud to reveal our most premium men's underwear yet. This is Apollo. All new, ultra breathable, rigorously tested for durability, and enhanced with exclusive dry release tech. We've upgraded the softness and the level of comfort, so don't be surprised if your confidence is upgraded too. Experience high-end for your rear end at TommyJohn.com and get 20% off your first order.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction, all done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try. You're going to like the way it works.
This is Bloomberg Markets. I'm John Ehrlichman with Romaine Bostick. Time now for what it's worth. And today, Gold Fields agreeing to acquire Canada's Yamana Gold for about $7 billion, an all-share deal that will make the South African miner the world's #4 gold producer. We spoke to the executive chairman of Yamana earlier today.
I'd go further. It's actually, if we look at it over the course of the next year or so, it is the third largest producer. It is this, I believe, the second largest in terms of reserves, a reserve life index, and it is the fourth largest in terms of market capitalization. But that's where there's the potential for the upside. What I think is even more compelling, certainly interesting, is that this company has an unparalleled growth on the combination occurring, and it is the best growth profile of all of the senior companies, the five senior most companies.
Yamana Executive Chairman Peter Maroney, and Romain, this is the kind of deal that could spark even more activity in the gold sector.
Yeah, looking at a lot of that reporting, it seems to suggest there are a lot of other folks willing to kick the tires. It'll be interesting to see what comes next, John. Well, and for John Ehrlichman.
And for Romain Bostic.
Yeah, well, let me do this since it's my first time here. You're John Ehrlichman. You look good. I look good, too. I'm Romain Bostic. This is Bloomberg.
Ever wonder what everyone's doing on their phones? They're banking with Bank of America. The groom's parents, they just found out they can redeem rewards for a second honeymoon. Romance is in the air. Like these two. He's realizing he's in love and that his dating app just went up. Must be fate. And Phil, he forgot a gift, so he's sending the happy couples some money.
Digital tools so impressive, you just can't stop banking. What would you like the power to do?
To start eating better? If only it were that easy. Fresh and Lean thinks it is. Meals with fresh organic ingredients delivered to your door, ready to heat and eat in under 3 minutes. So if you're looking to eat healthier, we got you. How easy is that? Fresh and Lean.
Guys, got hair loss? I know what you're thinking. Should I shave my head? Comb it over? Wear a hat? Just stop. This isn't 1970. Keep your hair and your confidence because Bosley, America's #1 hair restoration experts, can give you your real hair back permanently. Check them out today because they're giving away an absolutely free information kit and a free gift card to everyone who texts WILD to 234-234. Dude, you don't have to look like your dad because this isn't your dad's hair loss treatment. People all over the country trust Bosley because they're ahead of the curve. They use the latest technology to give you your real hair back. And the best part, Bosley's permanent solution is protected by the Bosley Guarantee. Let them show you for free how awesome your hair could look with an absolutely free information kit and a gift card for $250 off. Text WILD to 234-234. Ask about the Bosley Guarantee. That's WILD to 234-234.
I'm taking a quick work from home lunch break, so I just made these fried eggs with sourdough toast in my Brava. It took a few minutes, and all I had to do was press a button. Brava's cooking technology allows you to cook things that normally require very different temperatures all in the same tray at the same time. So you get perfectly cooked chicken thighs or New York strip steak or salmon with vegetables that are tender on the inside and crispy on the outside.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
4% of people have subscriptions they've forgotten about. Truebill helps you save money by finding recurring charges, notifying you when they're due, and easily canceling unwanted subscriptions. Download Truebill and take control of your money.
Now, keeping you up to date with news from around the world, here's the first word. I'm Mark Crumpton. European Union leaders have agreed to back a partial ban on Russian oil. It would be part of a sixth package of sanctions aimed at punishing Russia for invading Ukraine. The sanctions would ban the purchase of Russian oil and petroleum products delivered by ships. Following a two-day meeting in Brussels, European Council President Charles Michel spoke at a news conference alongside European Commission President Ursula von der Leyen.
We understand it is extremely important to work on the possibility and to explore the possibility of import price caps also with international partners.
The new measure does allow EU nations to buy Russian oil delivered by pipeline. That exemption was needed to get Hungary to sign on. 3 Republican lawmakers are going to have to testify in a federal lawsuit over new voting maps in Texas. The Supreme Court has sent let a lower court ruling in place that allows for depositions from the 3 representatives. The Justice Department and rights groups argue the lawmakers' new districts are discriminatory against Black and Latino voters. They want the maps redrawn in time for the 2024 election. The lawmakers had argued they're protected from testifying under legislative privilege. Protests continued in Iran today following a building collapse that killed at least 34 people. Demonstrators are challenging the Iranian government's response to last week's disaster. Authorities are admitting the building's owner and government officials allow construction to continue at the site despite concerns over its shoddy workmanship. The city's mayor is among 13 people who have been arrested. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets, The Close, with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
It is 2 p.m. in New York, 7 p.m. in London, and we are live from Bloomberg's World Headquarters. This is Bloomberg Markets, The Close. I'm Caroline Hyde.
I'm Romaine Bostick.
And I'm Katie Greifeld, in for Taylor Riggs.
And today, inflation is the key. Record price gains in Europe, a more hawkish Fed speak fuel, of course, the debate over how quickly central banks will react. Remain watching stocks trying to break higher. Katie, month-end cross-asset moves for us. We've got you covered. And it's a rare meeting. President Joe Biden meets Fed Chair Jay Powell as... Of course, we see the White House look to maximize efforts to curb that inflation fear as it runs the hottest in 40 years. We'll be speaking with Dr. Cecilia Rouse, chair of the Council of Economic Advisors, to get the details. And that says U.S. gasoline prices climb to new records and Brent crude tops $124 a barrel. That, of course, as European leaders move forward on a Russian oil embargo. China rolling back lockdown measures. Is there any relief in sight for skyrocketing global prices? All that and so much more coming up this hour, Romaine.
Yeah, so much more. But when you look at the price action and the headline indices here, it really is a reflection, I think, of what we've seen all month long. Really a lack of conviction for this market to go in either direction here. We're up about 0.1% here on the day on the S&P 500 and up fractionally on a monthly basis here for the S&P 500 as well. But once again, volume is light. Volume was very light last week, and we're starting off this holiday shortened week with even a slightly lighter volume here. The Philadelphia Semiconductor Index, while it is a little bit tepid on the day, it is actually set to post its first monthly gain so far of this year, up about 7% for the month of April. But a lot of folks now talking about crude prices, energy prices, and that resurgence that we're seeing now after a somewhat dour April and the start of May here. Elevated prices means elevated inflation, and the feed through here to all the conversations we're having about what's going down at the White House, the Eccles building, and beyond. Your two-year yield camped out at 2.54, which is actually lower than where we started the month, but we're starting to tick back higher as a lot of people anticipate a more aggressive Fed.
Talking of a more aggressive Fed, we also got those headlines potentially coming from, of course, the directors at all 12 Fed banks, the regional ones, of course, backing the 50 basis point discount rate hikes as we currently see. So there's been so much Federal Reserve narrative, Katie. But overall, all of this are we talking technicals on the end of a month of May, or are we talking really a desire to look at and reassess the valuation question when it comes to stocks?
It's a great question. I feel like all the action in the equity markets happened on Friday, but what's interesting is that the bond market, it's a little bit awake right now. I mean, a 10 basis point move on 10-year yields, a much different picture from Friday.
Yeah, but as Romaine said, still not much volume. Maybe a few people still sunning themselves for this weekend. Not sunning herself, but back in the chair, but enjoying a beautiful day is Linda Dussel. We're pleased to have her on, Senior Equity Strategist over at Federated Hermes. It's always great to have you with us, Linda. And tell us about what you make of the mixture of inflation headwinds, whether it comes from Europe as it does today, whether it comes to the United States, and indeed a White House desiring it to be tackled and a Federal Reserve looking to do so too.
We definitely think that, and thank you for having me. It's great to be here. We think that the Fed clearly was behind the curve, and probably it's too late for them to, raise interest rates and give us, I shouldn't say give us a soft landing. We think that there will be a soft landing, but not because of anything that they did. We think that inflation will prove way more stubborn than what people think because of, I think no matter what you're focusing on, you have record cash on corporate balance sheets and on consumer balance sheets. They just printed so much money. You've never seen anything like this in the history of our country. And the labor market remains tight as a drum. So if any numbers come off the very high levels, it's hard to get really excited that we'll have a recession because consumer confidence is down from it spiked. You know, it's just really hard to get too excited one way or the other. So here we are in the summer malaise.
Yeah, a summer malaise, and you're certainly seeing that reflected in a lot of the price action in the markets, Linda. I am curious as to what you think investors are looking for, maybe over the next 5-6 months towards the end of the year here, that you would think would maybe provide a little bit more conviction to come back in and buy.
I think that there's nothing more important than for us to see that inflation has come down to some reasonable level. And really nobody knows if that's possible, or I should say when that is possible, and what it might take. When you see food and energy prices just doubling or tripling over the last 18 months, and you don't know how to plan. And I can't get out of my mind that there are two whole generations in this country, the millennials and the Gen Zs, and they never saw anything but Goldilocks 2% inflation. So this can really, can really make you feel terrible and bad, but that doesn't mean that we're not having trouble getting a seat on an airline or a reservation, and people want to get out. They still have the cash to spend. So
yeah,
I think it's just going to be a while. I think we need to see more volatility and some really good values out there. And truly, there aren't so many good values at the moment.
And Linda, I mean, a lot of investors in this market haven't really seen a true Fed tightening cycle, which it looks like we're going to get. And it caught my eye. There was a note from Morgan Stanley earlier this morning on the relationship between Fed policy and equity markets right now. Those strategists wrote that the more equity prices rise, the more hawkish the Fed will be. I'm wondering if that logic holds true with you as well.
I don't think that's particularly what they're looking at. I know I've read at least one of the Fed governors saying that the equity market needs to see some pain. It just all feeds through into the demand is too strong out there. We need the behavior to really pull back some so that you don't have too much money chasing too few goods, and that's where it does seem like there's not too much the Fed can do. I mean, when in our history did we see 50 basis point moves, one after another and expected after another, and we're going to be all right with this? That's because we started at 0% interest rates, and you're only seeing trouble in the housing market.
Yeah.
But even that's tight as a drum.
Yeah, even that is, starting to see some signs of a buyer's strike. I'm interested, Linda, in, when you've got, what, $670 billion as you do, assets under management to be putting to work, where for you, therefore, are the rich pickings, if any at all? Is it more about capital preservation as it stands rather than actually making money?
Well, obviously, we have many different objectives throughout the different mutual funds at Federated Hermes, so it all depends that way. But I think we just respect the fact that there are so many balls up in the air that can basically fall either way. Either it's going to be really good or it's going to be really bad, and nobody knows how this is going to work out. It's just a very interesting and unusual time. And so we're suggesting that, don't necessarily buy the dips. We're suggesting that, you should probably be invested in a more defensive way. And what are things priced at? Where are there any values? Energy still remains amongst the cheapest values, even though everybody's starting to, more and more people are starting to like it out there. So we still like energy very, very much. Financials look to be very inexpensive. And just in general, it's a great year to be an active manager versus a passive manager. Because if we can find companies that have great free cash flow margins that are either being, they're either being thrown out with the baby and the bathwater, or they still look really inexpensive on weaker days, then we can go in and buy that. It's just more difficult for the average person out there than just buying an index when all the FANG stocks are going up.
All right, Linda. Linda, always wonderful to catch up with you. Linda Dissel there, Federated Hermes, senior equity strategist, helping kick off today's show. We do want to bring you just some quick breaking news. This coming out of Dow Jones, basically saying that the OPEC nations are actually considering exempting Russia from some of the production limits here that could potentially then open the door for the other nations to also sort of shirk their limits. We actually saw crude oil take a dive into negative territory, apparently on the back of those headlines around that time. We'll keep an eye on this. Remember, at 1 point on the day. WTI crude was well above 119 a barrel. Coming up, though, we are going to focus in on inflation. We're going to hear from Cecilia Rouse, the chair of the White House Council of Economic Advisors, going to get her insight onto what the White House can do, potentially, about not only fighting inflation, but other ways to bolster the economy. Plus, we're going to talk about what's going on over in China. Shanghai taking a major step toward ending that 2-month COVID lockdown. Public transportation and free movement going to be restored in parts of the city. We're going to take a closer look at that, and we're going to take a closer look at oil. Despite the downdraft today, oil still headed for its longest run of monthly gains in more than a decade, of 9% on a month-to-date basis, but there's a lot of structural issues up ahead. We'll focus in on that and so much more. This is Bloomberg.
CME Group, where risk meets opportunity.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
Some bonds last a lifetime. These are the bonds worth investing in. For over 50 years, PIMCO has reinvented fixed income to create opportunities in every market environment. PIMCO, a global leader in active fixed income.
This is the planning effect. This is how it feels to know you have a wealth plan that covers everything that's important to you. This is what it's like to have a dedicated Fidelity advisor looking at your full financial picture, making sure you have the right balance of risk and reward, and helping you plan for future generations. This is the planning effect from Fidelity.
You know real chili never has beans. You know which pizza is eaten with a fork and a knife, and which one is definitely not. You know a cappuccino is for the morning, and an espresso is for the afternoon. You know how to answer sparkling or still in over 12 different languages. You'll try anything that's not currently alive. Unless, of course, it's highly recommended. The Delta SkyMiles American Express card. If you travel, you know.
China making major steps forward, it would seem, when it comes to easing their lockdown policies. People can leave compounds freely. Taxis, subways are set to return, we understand. Let's dig into really what's happening. Christina Aquino, I'm pleased to say, is with us, Bloomberg Markets editor, right here in New York with us. And this really lifted the mood music yesterday in European trading in particular. What of today? How much do we think this holds true?
Well, Caroline, I think what investors and really general China watchers would want to see right now is sustainability and longevity. You know, I think it's good news that China is taking its first steps toward easing these COVID curves, because that has been the case for such a long time now. But, you know, they could always bring them back. And that's kind of the risk that investors would want to watch out for at the moment. And, you know, it's very interesting because China, in this particular earnings season, season has really been the wild card when it comes to forward outlooks from various companies. You know, we've heard from a number of companies, whether it's retailers, luxury companies, or manufacturing-heavy sort of companies, all pointing to China as really the main risk for their future-looking outlooks, and whether that's going to turn a bit more optimistic. And it's all going to boil down to whether we really see China finally get out of this lockdown situation that they've been in for months.
And we should point out, though, I mean, even though everyone's so focused on the lockdown and the effects on the economy, there were a lot of economic issues that sort of predated some of those lockdowns. It even predated COVID. How is that affecting investors and their view of China?
Yeah, it's very interesting, Romain, because there is definitely a lot of tension here with regards to the COVID zero policy and then what's really happening in China just on a broader economic basis, because you're absolutely right. Even before the lockdowns really hit fever pitch, we were seeing signs of an economic downturn already. And I think it makes a lot of sense now that the reaction from the authorities is to kind of go back to that easing mode. And most notably, going back to that easing mode when the rest of the world, including the U.S., seems to be going the opposite way. And so that's also another dynamic to watch out for, I think. This idea of, you know, how long really can China go it alone in terms of easing? Yes, it is the world's second biggest economy, but it is quite a divergence from the rest of the world tightening their policy.
All right, Christine Aquino there, Bloomberg Markets editor, for us. A look at the second biggest economy in the world. Let's turn our attention back to the biggest economy in the world, the United States, and all the focus on the economic issues, the inflationary pressures, and now a big meeting at the White House with the President of the United States and his Treasury Secretary and the chair of the Federal Reserve, Jerome Powell. We're waiting to hear the outcome of that meeting. I'm pleased to say joining us right now to walk us through some of the economic issues at heart, Cecilia Rouse is joining us right now. She's the chair of the White House Council of Economic Advisors. And Cecilia, let's start off with the elephant in the room, both here where we sit and where you're standing in front of, and that's inflation, an inflation rate that for the past 12 months continues to be persistently high. What are the options on the table that you think are being discussed right now in that building behind you?
Well, look, the reason why the president wanted to meet with Chair Powell was, one, is to presidents meet with the chairs of the Federal Reserve, and it was an appropriate time given that Chair Powell was just reconfirmed, and we had 3 other members of his board were just confirmed. And what the primary message for Chair Powell is that he respects the independence of the Federal Reserve Board, and he plans to stay out of their way. Prior presidents have not acted so independently, but the president shares he's focused on inflation. The Federal Reserve has a dual mandate to stabilize prices and maintain full employment, and the president wants to say, go forth and do what you need to do. Meanwhile, so the president's going to respect that. Meanwhile, he wants to stay focused on some of his longer-term goals, which we know will also increase economic capacity, help with bringing down costs for families, help the economy grow in steady, stable rate, which will help the American people.
Cecilia, when he lets the Federal Reserve go forth, how then does the White House go forth imminently in the short term? What about immigration? What about the fact that we potentially could see tariffs on China relieved in some way? Are these immediate ways that the White House is looking to tackle inflation on its own beat?
Absolutely. So the president wants to be focused. He wants people to understand what his long-term goal is for the American economy. But in the short term, he understands that prices are high and that's painful for the American family. He recognizes that from his own background. And so he's looking to ease prices where he can. That's why he joined with other countries to do historic releases from strategic petroleum reserves. It's why he has eased regulations for mixing in ethanol with fossil fuels over the summer. And he's looking at other options. He has eased regulations and sped up the backlog for visas so that those who are here can stay, looking at some of our non-immigrant visas as well. And he's considering things such as what can we do on the tariffs? What can we do in other sectors that make a lot of sense for the American economy, both in the short term and going forward?
Well, focusing on tariffs and potentially reducing tariffs on Chinese imports, a few have suggested, that could reduce inflation by a percentage point, for example. But what does the CEA analysis show about what impact that would actually have on the inflation rate?
Yeah, so, our own analyses suggest it would have an impact on the inflation rate. Obviously, the devil's in the details, and it depends on which tariffs are reduced and how and for how long and whether they're permanent. And so we are looking, and we know that this is a delicate decision that the president may have to make.
Right.
But what we all understand is that easing tariffs can potentially ease inflation, at least the level of inflation, at least by a few basis points, if not more.
Why has this decision taken so long, Cecilia? I mean, the president's been in office for more than a year. You've been head of the Council of Economic Advisors for more than a year. Why does the discussion need to take that long?
So, this president's been busy. There's been a pandemic. He passed a historic rescue plan back in January. It's so important to get shots into arms, so have an effective vaccination rollout.
Right.
We've had therapeutics come on the market. He wanted to make sure household balance sheets were strong. Then we have Russia provoking a war on Ukraine.
Yeah.
And the president is devoted and thinks it's very important that we preserve our democracies.
Yeah.
And so he's been busy. This has been on the table. He is considering it. He likes to make considered decisions, understanding the full ramifications for the American people.
I understand that he's busy, and I understand he's got a lot of balls to juggle in the air. I am, though, curious, Cecilia. I mean, your role heading this council is to sort of provide him, I guess, not just with advice, but I guess with some degree of sort of economic expectations. The last expectations that we saw come out of the White House officially, out of your council for inflation expectations, was well below what most Wall Street economists think, well below where we currently stand here. And I'm curious, does the president understand the magnitude of some of the price pressures out there, not just what's reflected in the data, but also what's reflected in the feelings of real people when they go to the store or go to the pump or go anywhere to buy anything?
So working backwards, the president very much understands the pain and the challenge that inflation imparts on the American family. He understands that personally, and he feels it. In terms of our own forecast, our forecast, the last one that we did, was locked in early November. Actually, we had forecasted higher inflation than what the blue chip forecasters were projecting at that time. But I will say it's been a challenge for all forecasters in these days because there have been so many unexpected challenges. Before Russia's war on Ukraine, supply chains were starting to normalize. Yeah. Before Omicron, supply chains were starting to normalize. So we understand the challenges that this economy faces. We are not trying to be Pollyannish about it. We are using economic models to do said forecasting. It's challenging in these times, but what we do anticipate is that inflation will be coming down over the coming months. It may not be linear, it may not be steadfast, but it will be coming down. Yeah. And we also recognize that the American economy is in a uniquely strong position relative to other economies in the G7 to withstand these kinds of challenges.
A uniquely strong position that at the time when we were perhaps running the economy hot, as many had felt, as we were putting inflation to one side to have a more inclusive labor force in particular, the focus was on the racial wealth gap in particular. It was a focus at the Federal Reserve, also I know a key commitment coming from the White House. And is that going to be in the longer term something that is hammered once again, not only by price inflation on the bottom, but also now potentially a weaker labor market, Cecilia?
Well, look, this is part of what the president wants people to understand as part of his vision for the American economy, is that we've got sustainable, steady, stable growth that is better than it's been over the last couple of decades under trickle-down economics, but where we really have an economy that has sustainable growth that supports the average American, and that we have growth that is more equitably shared. So we're proud of the growth that this economy's made, the recovery it has made. We recognize the challenges the president is focused on those challenges, but he also wants to work with Congress in particular to put into place the policies that we know will be so important for sustaining this kind of stable, steady growth going forward.
We thank you so much, Cecilia Rouse, Chair of the White House Council of Economic Advisors. This is Bloomberg.
Mama, growing up, you were so good to me. You worked hard to save for my future. So now, I want to thank you. I started investing with Vanguard to help take care of you, like you took care of me. Te quiero, Mama.
Only at Vanguard, you're more than just an investor. You're an owner, helping you take care of the ones you love. That's the value of ownership.
Welcome to Lenovo Late Night IT, where industry insiders tell us what they tell their therapists.
Is fog the new cloud?
We're going to have solutions that require some things to be pushed out to the cloud and some things are going to be in between, which is the fog.
Fog is a real thing. I was joking. What's next? Mist computing?
Mist.
Wait, is mist a real
Cloudy?
thing?
No.
Okay, thank you. This is Lenovo Late Night IT.
Fall, September, late September, 25th.
May I be of assistance, sir?
Please. I know the 2013 Bitcoin, but the rest, I really need something well-balanced.
Very good, sir. May I suggest a blend?
Crypto doesn't have to be overwhelming.
That's exactly what I was thinking.
Wonderful. I'll bring that over.
Great choice.
Ask your financial advisor about Bitwise, the world's leader in crypto index funds.
At Southern New Hampshire University, you can finish your degree faster and for less money. Transfer up to 90 college credits toward your bachelor's degree.
I was able to transfer a lot of my credits, and it made it easier for me knowing that I don't have to start all over again.
Definitely lowered the cost by being able to transfer those credits in.
Get more transfer credits, pay less tuition. Now that's something to celebrate. Next term starts soon. Visit snhu.edu.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
What if you were a global bank who wanted to supercharge your audit system? So you tap IBM to unsilo your data and start crunching a year's worth of transactions against thousands of compliance controls with the help of AI. Now you're making smarter decisions faster, operating costs are lower, and everyone, from your auditors to your bankers, feels like $1 million. Let's create smarter ways of putting your data to work. IBM, let's create.
Never be afraid of your strength. Because your body is capable of amazing things. The one they said you shouldn't have. The one driven by a power they can't see. Own your strength and see how far it takes you. Tonal, be your strongest.
It's hard to believe that Brava can go from 0 to 500 degrees in under 1 second, or that it precisely cooks 3 different ingredients at the same time. It's hard to believe that Brava tells you when your perfectly seared steaks are ready, or that it roasts a whole chicken in half the time. But seeing is believing. And when you cook with Pure Light, the difference is as clear as day. See for yourself at Brava.com.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Learn more at FuboTV.com.
Hello to Truebill, the #1 personal finance app, packed with tools to help manage your money, like canceling unused subscriptions with just a tap. If you're ready for an all-in-one money management solution, then download the Truebill app today.
Remember when you used to get stickers for doing something good? What if you got Bitcoin? With Upgrade Card, you can. You can get 1.5% back in Bitcoin on payments. Upgrade rolls all your monthly purchases into one easy installment loan. Get started at upgrade.com.
Hi, this is Lisa from 4imprint. Yes, I like 50 welcome wows, 300 customer I love it, and 200 team member, oh yes, certainly. You know we got some brand new woohoos.
Dial up the wow factor with promotional products from 4imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items.
Wow.
I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4imprint, for certain.
Now keeping you up to date with news from around the world, here's the first word. I'm Mark Crumpton. President Biden is vowing to meet with Congress about gun control legislation in the aftermath of that deadly shooting at an elementary school in Uvalde, Texas. As he welcomed New Zealand Prime Minister Jacinda Ardern to the White House today, the president said, quote, "I will meet with the Congress on guns, I promise you. Mr. Biden told reporters Monday he believed there was a chance to strike a compromise with what he called rational Republicans, including Senate Minority Leader Mitch McConnell and Texas Senator John Cornyn. Russian forces aren't letting up in Ukraine. Officials say Russian troops are slowly advancing toward the center of one of the last remaining cities still under control by Kyiv. The move came after Russian President Vladimir Putin abandoned a more ambitious plan to focus on the Donbas area along the Russian border. Israel and the United Arab Emirates have signed a broad trade pact. Officials say the agreement will help boost trade between the two to more than $10 billion within 5 years. Israeli Prime Minister Naftali Bennett said today it's the fastest free trade agreement to ever be signed in Israeli history. The UAE signed a similar pact with India in February and is in talks with Turkey as well. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
This is Bloomberg Markets to Close. A little after 2:30 here in New York. Let's get you caught up on what's happening in the commodity space. Keeping an eye right now on NYMEX crude futures. Looks like they're going to settle in right below 115 bucks a barrel here. That's basically the low of the day. At one point, we did trade up around 120 bucks, but some news crossing the wire a little while ago from Dow Jones, tampering down prices just a little bit. We'll get to that in just a minute here. We should point out on a monthly basis, WTI crude still setting up for what's going to be a six straight month, of gains. And a similar story, of course, for gasoline prices in the futures market. You're looking at 402.49. That's basically a new record high. In fact, we've been hitting successive record highs day after day after day in the month of May. No real let up yet in the pressure there. And keep an eye on some of the base metals, seeing a decline here on the day with regards to nickel, copper, and everything in between here. Actually setting up what's going to be the second straight monthly loss for a lot of the base and industrial metals, down about 3% here on the day. And an interesting reversal here on wheat prices. Wheat futures actually down about 6% here on the day, the lowest that we've seen in about 3 weeks, as there is some potential now for Russia and Ukraine to potentially start exporting more of those grains. Caroline.
All focused from this inflationary pressure across the board in commodities, but also an interesting reversal, as you were talking about, pairing some of the earlier gains as we perhaps get talk of whether or not OPEC might move on Russia in some way. Let's dig into that a little bit more. Julia Fanzeras is with us, all futures reporter here at Bloomberg, and we'll dig into in a moment sort of the reason that oil was rallying. But for this first moment, can you just dissect the headline that we got as to what it really could potentially be meaning?
Yeah, so what it's saying is that there's the potential that OPEC is going to allow Russia to not be part of its oil output. And what traders are considering this to be could be, okay, Saudi Arabia could come in, UAE could come in and actually increase their output more. And so that's what people are thinking it could mean, but we don't know. It's just, sources are saying this and we're not really sure what exactly it could mean, but that could mean that Russia is not going to be part of OPEC. It could also mean that traders are pricing in the breakup of OPEC if that is the dire constraint, which I've heard from some traders as well.
Well, that would be a pretty momentous thing if that were to occur. And we should point out, this is all right now based on Dow Jones reporting. And we should point out, though, too, I mean, prior to the sort of slump that we've been seeing in oil prices over the last couple of hours, we were rallying pretty hard coming into today. And we've been rallying hard, really, for the last 6 months here. Are there dynamics at play right now that will continue to push oil prices higher, save whatever that story is out of Dow Jones?
Absolutely. And today there was the EU decided to push forward its ban on Russian oil, which it had been holding out for quite a while. And the big news of that is Russia created so much refined products, and that's something that we do not have in the market right now. Biden continues to tap the SPR, but that is crude. That is not gasoline. That's not diesel. And with refining capacity down so much before pre-pandemic levels, it's going to be very, very difficult to get those refined products back on the market. And you're seeing that with gas prices. They're, as you mentioned, up to record highs. So while there may be less crude on the market and that is tight, the real issue is refined products right now.
And I just encourage all our viewers, if you have a Bloomberg terminal, you can see the differential between the gains that we're seeing in the crude market and the gains that we're seeing in some of the refined products. It's outstripping it by a pretty big factor.
If you're a Twitter user, you can go to Romain's latest tweet, and where I think you're so impassioned by the price of gasoline, you're taking photos of gas stations over the weekend.
I'm just waiting until it hits $8 a gallon.
You know, give Romain a retweet while you're at it. I'll go do that after this.
Yeah, throw me a bone.
I want to talk about that headline from earlier that, you know, EU leaders agreed to pursue at least that partial ban on imports from Russia. What does that say about, you know, sort of this long-term push for EU to reduce its dependence on Russian energy? Where are we in that story?
And that's the issue right there. A lot of traders also were telling me, okay, we've been seeing Russian bans, but the big story is that EU is now phasing away from Russian oil, and Russia provided so much oil to Europe, and so that really is going to stretch the markets even more so, because this isn't about a short-term ban, and this is also going to be very inflationary for both Europe and the US as well. That is going to mean that while this might have been a good foreign policy, it's still going to mean a lot of higher prices that people are going to have to bear.
Julia, your focus on oil futures, but there's also, of course, the tit for tat that people then try to bake in, the move by Europe and then what Russia does in response. And already we're seeing the fact that they want gas priced in rubles. That's making it ever more difficult for Shell to be accessing its gas, or indeed a Danish utility. How are we expecting Russia to react to everything?
I think that's a good question. Also, something that was brought up is, could potentially this OPEC headline from Dow Jones be Russia reacting? Could it possibly mean that they're removing all of their oil output and they don't want to continue giving oil output to OPEC? That could be a possibility, but we really don't know yet. All we know is that they have been pushing forward, and there is going to be this tit for tat, so we are going to have to keep our eyes peeled.
All right, and once again, just to reiterate that headline out of Dow Jones and the Wall Street Journal saying that some OPEC members are exploring the idea of suspending Russia's participation in that main oil production deal. This, of course, as they sort of try to assess how the sanctions are going to affect Russia's ability to sort of meet their terms of the agreement, and maybe that frees up Saudi Arabia and some of the other countries to do whatever the heck they want to do. Julia Fanzaris of Bloomberg News helping us break down that news as well as the broader moves that we've been seeing in the oil market. And Katie, did you go see Top Gun this weekend?
I actually watched the original Top Gun
so
on Netflix.
You refused to actually go pay for a ticket?
No, I don't
just
really.
Never watched the original.
I'd never seen the original.
Okay.
The hype, I mean, I have watched it, but the soundtrack, incredible.
There you go. Katie Greifeld there, a lover of the Top Gun soundtrack. Unfortunately, I'm not sure that helps AMC, but fortunately for them, a lot of other folks did actually pay money for a ticket to see the new Top Gun movie, and we're going to talk about what it means, I guess, for the longer-term viability of some of these theater chains. That's coming up in our Stock of the Hour. This is Bloomberg.
CME Group, where risk meets opportunity.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can. What the world needs now is people. People who see healthcare a little bit differently. Where technology helps doctors provide more precise care, leading to faster, better outcomes, and puts improved health in all of our hands. Because seeing a healthier world isn't far in the future. We're building it now. GE, building a world that works.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction, all done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try. You're going to like the way it works.
What have we got to look forward to?
I always think about this William Gibson's quote about the future, that the future is already here. It's just not very evenly distributed.
I'm more interested in parallel versions of what might happen. My practice in art and research is just posing some of these questions to imagine more of these different singular possible futures.
Hyundai Motor, connecting art and technology.
Your time to invest in companies that make stuff like this hard seltzer and this jetpack is now. It's all on Start Engine, which has an investor community of over 500,000. Go to startengine.com today and start investing.
All right, time now for our top calls to look at some of the big movers on the back of analyst recommendations. First up, Estee Lauder regaining its top pick status over at Oppenheimer. This following some improvements in China's COVID-19 situation. The analyst there rating the stock outperformed with a $300 target, citing pricing benefits as well as a retail recovery. Estee Lauder shares up almost 2% on the day. Next up, let's take a look at Snap, getting a downgrade today to negative over at Vertical Group, with the analyst saying stagnant user growth amid competition from TikTok and Instagram is pushing advertisers to reallocate budgets away from Snapchat. Snapchat shares down about 8% on the day. And finally, Steel Dynamics getting cut to neutral from buy. This over at Goldman Sachs. The analyst says construction spend actually appears to be slowing industry-wide, along with home builder sentiment being depressed. Shares of Steel Dynamics down about 2% on the day. And those, Caroline, are some of your top calls.
And let's get into the nitty-gritty of the micro, the individual stocks a little bit more, because it's our stock hour. And AMC, we're just talking about it soaring again. This time, well, perhaps not all about a meme stock, more about a Top Gun Maverick, to be precise, which is the largest ever Memorial Day film opening, 36 years after the original. A cool 36. Abigail Doolittle joins us now. Please don't tell me you haven't seen the original either.
So I have not seen the original either, and I should have. It's certainly one of the top movies when I was watching a lot of movies. I've seen pieces of it, though, and it is great. But clearly, this is a blockbuster, you know, folks really going out. And I think that the bigger piece of this is that there's reopening trade hopes here, that you're really starting to see the pandemic come to an end with this blockbuster showing. I mean, beating all these other big movies that I haven't seen either, the Pirates of the Caribbean, Aladdin, Indiana Jones 3.
You've never seen Aladdin?
I've never seen any of these movies, actually.
Okay, so all these are just remakes. So Aladdin, Indiana Jones, Top Gun, there's no Jurassic Park. What else are we getting? Another Star Wars movie, another Marvel movie.
Those are coming up, and so that's really.
Is this a good thing?
Well, that's really the question here. Is this sustainable? Because here we have the best Memorial Day showing ever, but can we see more? And so let's bring in an interview that you did, because I think you know the answer to this to some degree, or at least what Rich Gelfond, CEO of IMAX, thinks about this. Let's take a listen to his thoughts on whether movies are actually back.
The movie business is back. I mean, Spider-Man did over $1 billion. Batman did $800 million. Doctor Strange is already at $800 million. And after Top Gun comes out, Jurassic World the tracking is as high as Top Gun was this far out. So, I mean, people are back. It's one of the few sectors that hasn't been recognized. But I think what this movie will do will bring a whole different demographic back.
So he clearly thinks that the movie business is back. But if we take a look at year-to-date business right now, $2.66 billion, really pretty good. But relative to 2019 year-to-date, we need to do another $2 billion. So we really do need to see the strength from these other potential blockbuster movies that he was just talking about. And, you know, speak about a payday. Tom Cruise. I mean, this is huge.
I just
$13 million.
Make, like, original movies. So, I mean, like, so I have all these movies from my childhood. I mean, poor Katie, she gets nothing. And I don't even know what the younger generation, your little kids, what are they going to watch? Just remakes of everything?
No, new musical highlights, such as, well, you know, there have been some Disney hits that are new.
Oh, yeah, there are a couple, right? Was it like Elsa? What's that one called? And then
That's
Moana?
Frozen. That's at least 2016.
What about dramas? What about thrillers? Foreign movies? I guess that's more where I go, so it's not really.
Oh, that's where you're like a little film
But Tom Cruise, definitely a good deal for him here. 100 times what he made in the original Top Gun.
Well, good for him. He always could use a little bit more money. Bloomberg's Abigail Doolittle with our stock at the hour. Look at AMC and some of the other theater chains. A great Memorial Day weekend here. We'll see how that sustains itself as we go through the summer. We do want to pivot from that to our daily segment highlighting the best of Bloomberg intelligence, which we do all year round. And today we're taking a look at the credit market. Joining us right now, Paul Goldberg. He's the Bloomberg Intelligence Senior Banks Analyst. And Paul, let's start off here with the idea of what private credit managers are telling folks right now, because I talked to a lot of these folks last month out at the Milken Conference. They were all pretty positive, at least on their prospects, despite maybe some more dour concerns about the broader economy.
Good afternoon, Romain, and thank you for having me. They still positive following after the second quarter earnings calls. The inflows are coming in. There are no material losses in the first quarter as compared to the first quarter of 2020, when a lot of the funds were hit about 10% and the performance and the assets came down. So they're doing reasonably well. And the credit business on the private side is a lot more diversified than the traditionally we used to think of 20 or 30 years ago.
And in that respect, I mean, overall, is the risk from your perspective well balanced at the moment? Are we expecting more stress to come into the system, or has it already really been priced in, Paul?
I don't think it's been priced in yet, but we do have to think about the system in several buckets. So there is a credit risk, and that's certainly an issue there. But the indices on the high yield side, for example, as the Bloomberg index shows, nowhere near where we've seen years ago. So that's reasonably stable. The private equity and private credit managers are not forced sellers typically, so they don't have to sell at a down market. That helps them out to ride out the storm. And one of the most important things is they're mostly floating rates, so they're not really exposed to rising rates. 80 to 90% of their assets are floating. So in fact, when the rates turn higher, they might actually benefit from it.
Yeah, I think that's an important point, that interest rate risk, in this case, it can be actually a benefit here. But tell us about sort of the credit exposure here in terms of ratings. Do we have any idea as to what tier is in these portfolios?
They haven't really explicitly disclosed the tiering in terms of the ratings, because they all get rated and evaluated by private companies, private services. But what it did definitely changed over the last 20 years. These are not distressed credits for the most part. A lot of the money on the credit side are managed for high net worth individuals. A lot of it is managed for insurance businesses, for annuity purposes. So these are high grade credits in many cases.
When you talk about this idea of how these companies, particularly in the private credit space, how much they've scaled up over the last few years leading up to that, does that end up sort of being the real difference maker? And when you look at some of the, I guess, the sort of mid-tier and smaller competitors out there, can they hold up? Can they hold up to the big guys?
They definitely can, but it's getting harder. And they can get integrated with the larger guys. So the business, the diversity of the business through the insurance and through all the other entities. So we've just seen Blackstone raising money from high net worth individuals on the credit side in Europe, KKR raising $1 billion Asia credit funds. So they're going into the areas where they haven't been before, and that's why the largest ones are getting larger much faster. But even for the smaller ones, there's still room, but they need to fight for efficiencies.
Paul Goldberg, don't we all, unfortunately? Bloomberg's Paul Goldberg, we thank you. You've got to get more research from Bloomberg Intelligence. And to do that, if you're lucky enough to have a terminal, you can go to BIGO and assess a little bit more. Meanwhile, coming up, we're going to talk about a key business mogul making a surprise surge in the first round of Colombia's presidential elections. We'll have all of the details next. This is Bloomberg.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This thing, it's making me get an ice bath again.
What do you mean? These drafts are mind-blowing. They collect hundreds of data points like HRV and REM sleep, so you know all you need for recovery.
And you are?
I'm an investor in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like wearable training, optimization tech.
How long
I'm done.
Become an agent of innovation with Invesco QQQ.
I'm okay.
Before investing, carefully read and consider fund objectives, risk, charges, expenses, and more in prospectus at Invesco.com.
Ask your financial advisor about BitW, the first and largest crypto index fund.
This is the planning effect. This is how it feels to know you have a wealth plan that covers everything that's important to you. This is what it's like to have a dedicated Fidelity advisor looking at your full financial picture, making sure you have the right balance of risk and reward, and helping you plan for future generations. This is the planning effect from Fidelity.
So I think the U.S. position right now looks reasonable, but I think we can't take things for granted. Things like our reserve currency status, I think that's not a given. And taking that for granted, I think could be perilous. So I think the U.S. economy is in reasonably good shape, as I said. I do think China is going to pose persistent challenges for the U.S. in the decades to come. But I think they're surmountable challenges.
Now, you and I have served as advisors to a New York Federal Reserve kind of committee. And what is your view of the New York Federal Reserve or the overall Federal Reserve? Do you think the Federal Reserve missed the boat on inflation and maybe they should have moved more quickly earlier on, or you think that they did the best they could?
In hindsight, they should have moved earlier. And I think they're doing their best to catch up now, and I think you're going to see them move really aggressively. So market already at 50 basis points at the next 3 meetings is already priced in. So I think you're going to see them rush to get rates up to the 2.5% range. And then I think they're going to reassess where the economy is. They had a hard job. They were obviously worried about inflation, but they were also trying to support a population coming through a pandemic.
Dawn Fitzpatrick there, Chief Executive and Chief Investment Officer of Soros Fund Management. It was an exclusive interview on Bloomberg Wealth with David Rubenstein. Go read it on the terminal as well, one of the most read stories. Meanwhile, we could pivot away from China, but stick very much on perhaps the emerging markets themes right now, particularly in Latin America, where Colombian assets absolutely skyrocketing today after an outsider, Rodolfo Hernandez, defied the polls, in fact, to secure a place in the election runoff. Joining us now with our emerging action conversation is Bloomberg's Ritika Gupta. So, kind of upending where we thought things would go and seemingly a big rally, certainly in the peso.
Yes, the peso, let's start off there. So up nearly 5% today. Best day since 2010. Colombian dollar bonds also some of the best the best performer amongst the EM peers. And Caroline, what they're calling this is the anyone but Petro election trade. So just to kind of break that down for you, is that Gustavo Petro, he'd been seen to be the first leftist leader for the country. But this caused a lot of uproar because he's got some quite radical economic policies. For instance, he wants to phase out oil and coal. There's a key exports there. And so we got a lot of the other candidates coming in and backing this guy who's come out of seemingly nowhere. This is Rodolfo Hernandez. He is a 77-year-old construction magnate, and he has now secured a place in the election runoff on June the 19th. But it's still uncertain. We don't know much about Hernandez's policies, for instance. He's also been likened to a Donald Trump, a Jair Bolsonaro, for being quite off the cuff with his comments.
Yeah, that's an understatement. 77 years old, and a couple of months ago really wasn't polling that high. So it really did seem to come out of nowhere. I mean, what really changed here for voters here? Because they could look at somebody like Petro. Was there a sense here that people found him a little bit too far to the left and they just needed something to fill that void?
Well, I think it was like you said, or like I said, excuse me, that his policies being so radical, the oil and the gas, he also wanted to upheaval the private pension system, raise taxes. This wasn't seen as good for business by investors. And it's not just Colombia that you're seeing making these quite unpredictable changes in leaders. You've had it in Chile, you have had it in Peru, or Chile and Peru, for instance, over the past year. So it's this inflation, it is the inequality, it is the pandemic. All of this has led to a lot of unpredictable political changes.
All right, Ritika Gupta there with our emerging action. A look, of course, what's going on in Colombia. You'll take a look at the Argentine peso there, where inflation is just a mind-boggling, what, like 58, 60% over there here. But a lot
we
of
complain on what, 8% here?
I know, but I mean, Argentina has been. How long has Argentina been like that? Yeah, Basket. We could do a whole hour of emerging action with Ritika Gupta on Argentina alone. We'll catch up with her soon, I'm sure. Meanwhile, I'll pivot back to the U.S. markets, and you take a look. This is the final day of the month, by the way, Caroline. I know last week you thought it was the final day of the month. This is the real deal.
This is the legit one, right?
This is the real deal. I guarantee you there are no more days in the month of May after this one.
And it looks like we're going to end on a down note. I mean, we've seen a real dive just in the past half hour. The S&P 500 turning negative, the NASDAQ 100 turning negative as well.
Why? Don't tell me it's rebalancing in the last hour.
Well, you took the words out of my mouth. I don't know.
Really?
It's a good
question. Rebalancing on Friday?
It's a process.
Yeah,
it's a process.
It never ends, truly. Bitcoin, though, still hanging on to gains. I'll just point that out.
All right, getting ready to reset and count you down to the closing bells. Just a little more than an hour away. Don't go anywhere. This is Bloomberg.
What do you see when you look at the surface? Just that, the surface. But dive deeper and new possibilities emerge. Essential intelligence from S&P Global takes you here, providing the data, risk assessment, and workflow solutions you need to plumb the wonders beneath. A better, more prosperous future awaits. It's yours for the seeking. S&P Global. Seek and prosper.
You asleep? Do we have enough life insurance?
Don't worry. Just go to ethoslife.com to get your personalized quote in seconds and apply online in minutes.
Hey, I just got my free quote from Ethos.
Get a free personalized quote at ethoslife.com.
What does the future of strength look like? It's a personal trainer that assesses your strength and adds weight as you progress. It's dynamic weight that adjusts for you in real time for a more efficient workout. Come on! And it's a roster of coaches that motivates you to get stronger, faster. The future is strength you can feel and results you can see. And you can only experience it on Tonal.
Learn more at tonal.com.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
I'm taking a quick work from home lunch break, so I just made these fried eggs with sourdough toast in my Brava. It took a few minutes, and all I had to do was press a button. Brava's cooking technology allows you to cook things that normally require very different temperatures, all in the same tray at the same time. So you get perfectly cooked chicken thighs or New York strip steak or salmon with vegetables that are tender on the inside and crispy on the outside.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Learn more at FuboTV.com.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close with 60 minutes left in the trading session, in the trading month. I'm told by one Remain Bostic. It is us and Caroline Hyde and Katie Greifeld, of course, in for Taylor Riggs. We're now joined by Carol Massa, Tim Stenovic, when we come together to go cross-audience, TV, radio, YouTube, to dissect what is a light volumes day, a lower stock market, but just don't call it rebalancing.
I won't call it rebalancing. I don't know what I'm going to call it. All I know is we're bouncing around again. If we're looking for some outperformance, once again, those Chinese stocks that trade in the United States, you guys know I like to go there a lot. At its highs, up about 5.5%, still holding on to about a 3% gain. This, as it seems like some of the lockdowns in China are easing, some better than expected economic news. Keep in mind the NASDAQ Golden Dragon China Index on track for its first monthly gain since October, snapping a 6-month losing streak.
Wow.
I know, WOA.
I want to talk airlines here because we're seeing some interesting moves. They were down as much as 3.2% earlier in the day. They did move higher just in the last hour, but now they're lower again, about 0.3%. The story throughout the day has really been about that renewed jump in oil prices, though we have seen a pullback this afternoon in oil prices, but they were underperforming the major indices earlier in the session.
I know some interesting headlines, of course, coming out of the Wall Street Journal, Dow Jones, about, well, the future relationship between OPEC and Russia, that taking the wind out of some of oil sales, but really it doesn't take the wind out of the overall inflationary concerns that the market has. That fed over from Europe, and we continue to see this S&P 500 off by almost 0.6%. We're 23 points lower on the day, the last day in May. Dow Jones off by 0.6%. Basically all of them off by about a 0.5 percentage point. The NASDAQ too. Really we're seeing volumes down as well by about 10 or 11%. The Russell 2000, lagged a choice, off by 0.8% today, Katie.
And as we watch that sort of drift lower in the big benchmarks as we hurtle to the last trading day in May's, the close, if you look at the sector level, you have some...
Are we really hurtling?
I'm hurtling. I don't know about you, Carol. But
Katie ran track and field in college.
Katie, you do hurdle. You definitely hurdle.
I did not hurdle, though. But in any case, if you looked at the sector level, we still have two sectors in the green. You can see consumer discretionary still hanging on to gains there. A lot of that is Amazon, though, still up 4.6%. But beyond that, it's pretty red. 9 of 11 sectors in the red right now.
Yeah, and we talk about sort of the moves that we've been seeing in the oil and energy space here. In fact, ExxonMobil was up as much as 2% here on the day, now down about 1.3%, still setting up for what's going to be a 6th straight month of gains here. AMC Entertainment also flipping into the red, had been higher a little bit earlier on the day on the back of a lot of optimism, if you will, about the results of that new Top Gun movie. Results at the box office here, $160 million pulled in just in North America alone here. Keep an eye on PepsiCo, though. There was an interesting note out a little bit earlier. Those shares are down about 2%. Jefferies had an interesting note about how there's a lot of concern here, specifically about Pepsi and some of the market share losses that it's been seeing here to some of its competitors here. The idea that Jefferies is saying through the channels that it's watching is starting to see a lot of other companies take some of PepsiCo's market share. And then Insulet Corporation lower by about 11%. Remember, the stock had actually rallied about 24% over the previous 7 sessions. Big maker of medical device products for diabetics. There have been a lot of M&A rumors here, including by Dexcom. Dexcom coming out and saying, no, it's not buying this company. Those shares down 11% right now.
Some of the individual movers. Let's just look at where we've come on the month, on the year. I mean, we are actually now just slightly in the red again once for the month, it would seem, on the S&P 500. And just look at the torrid time over the year. This is a great chart. Shout out to Dan Curtis. You really need to zoom in, though, if you're going to get your beady eyes on what years these charts are from. For our radio audience, I'm looking at the fact that we basically singled out the years where we've underperformed even more than the 12% sell-off we've had thus far in 2022, 13% sell-off, call it now. Only basically once in the last, well, I think it's only since 1970 we haven't performed this badly to start the year. And indeed, we're seeing the other times that we have performed this badly, about 5. In 1931, in the white line, we were off by 47% by the end of the year. In yellow, in 1940, you ended the year down 16%. In blue, in 1932, you ended the year 15% lower. In 1962, a lot of twos there, down 11%. So now we're currently down 13%. Could we be anywhere like the good year in 1970, where actually managed to power basically flat? The likelihood is not, it would seem.
Times are different this time around? I don't know. Boy, there's a lot there, right, to think about. And you do wonder, coming out of pandemic, like this is just like unlike any other times, and some of the geopolitical shocks. One thing that's interesting is we do know from day to day, right, guys, that today we're worried about inflation. Certainly, there's Eurozone kind of igniting those fears again. Sometimes we're worried about growth. And Dawn Fitzpatrick over at George Soros' company, Soros Fund Management, he's their top head. She's their top fund person, I should say. Caught up with Carlyle's David Rubenstein, who hosts Bloomberg Wealth here, and they talked about the prospects of a recession. Here's what she had to say.
There's a lot of discussion about a looming recession, and the bottom line is a recession is inevitable. It's a matter of when. And when you look at what markets are pricing here, they're pricing it fairly soon. So in the 2023 context, depending on which asset classes you're looking at, I actually think markets might be wrong. And the reason is the consumer right here is in extraordinarily good shape.
And that is Dawn Fitzpatrick. Of course, she is Soros Fund Management CEO and CIO. The one thing I would say, yep, okay, she doesn't think a recession, but right, how many times do we guys have a ton of stories every day about people saying yes or no? But the one thing I would say, if we're going to get one at some point, and then it's how deep and how long.
Yeah, and we should, and just for clarity too, we should point out that that interview was actually recorded in April 29th, the end of April, and a lot has changed over the last 4.5 weeks. So it's not to say that anything she says is not right, but of course the circumstances and the data have shifted.
Well, I do want to go to the data that she had at the time that she cites for why the U.S. consumer is in really good shape. She said that consumers have enough cash to pay down their credit card balances, and she also cited a conversation that she had with a big consumer bank in the U.S. Check this out. So before the pandemic, they had $1,000 to $2,000 in their accounts. Now she says the average amount in those same accounts, $7,400. Again, 4.5 weeks ago, gas prices are still high.
And we've seen a lot of
But the retail
evidence
CEOs,
that's come down.
the retail CEOs, right? Caroline, you had a conversation with the head of Macy's, still said they're not seeing bad debt. They're still seeing the consumer spending.
Yeah, and Brian Moynihan, actually, at Bank of America, was also citing the amount that they were in their accounts. But then you want to take the flip side of what corporates are feeling right now. And was it back in end of April that you first got Snap telling us that they were setting some sort of year-ahead targets, and but a month later came and unwound them all just last week?
And I mean, again, we talked about this a little bit on Friday, but that resilient consumer, I mean, is that good for the Fed? Probably not. If you think of the lag that monetary policy works with the data that we got today, U.S. consumer confidence dropping to the lowest since February, and consumers weren't exactly happy in February. At what point does that miserable consumer start to affect their actual spending?
Ask Tim how much he paid to fill up his gas
tank. I would love to know.
You know, they actually, it was weird. This has never happened to me before. They had me estimate ahead of time and enter what I thought it would cost.
Where were you?
I was in Brooklyn, Katie. I know you never make it
I've
to
never
Brooklyn.
been there.
Yeah. So I thought it would be $80, but it ticked past 80, and you know, it made me stop, and I had to enter another $20 in there. It ended up costing $90. But look, this is the fact is that, you know, people are commuting to work every day by car. This is what they're dealing with, and I think a lot of us here in New York don't necessarily see that day to day because we use public transit and don't drive as much. But there's real pain at the pump for a lot of Americans.
Romain documents it on Twitter every time he sees a gas pump.
Yeah, that's right. I drive a smart car, Tim. You got to switch down from that.
No, this was
350 or whatever.
Romain, this was the first time I had to fill up my tank since February.
Since February.
It's true.
Really? So
it's true. I never drive.
You just never go anywhere.
We never drive. It's true.
Well, I'm glad you were able to take the Stenovix out for a sort of a once every 4-month trip there.
Romain, what's your smart car? Is it an EV?
No, it's gas powered, but you know, I mean, it's like $15 to fill it up, and I fill it up every 6 months.
Okay. Sounds like a yabba dabba do, Fred Flintstone kind of car.
I want to see some pics.
All right,
please.
If you believe that, I got a bridge to sell you.
Yeah, what about the Maybach? I thought you were talking about that on Friday.
Or the helicopter, right? All right, we're going to come back in less than an hour's time. Our cross-platform coverage on radio, TV, and YouTube will continue. We will count you down, wrap up that month of May. We call it Beyond the Bell. We'll be back for that close.
All right, we continue to count you down to the closing bells here on Bloomberg Television. Pleased to say joining us, Jason Pride, CIO for Private Wealth over at Glenmead. Glenmead has more than $46 billion in assets under management. And Jason, let's start off, of course, with the elephant in the room. A lot of focus right now on Jay Powell and the Fed, a lot of focus on the White House, and a lot of focus on inflation and what either of those two entities can do about it. How worried are you about it, or more importantly, how worried are your clients about inflation right now?
Look, we actually think this is a pretty typical scenario where we're in the late cycle of an economic expansion. Late cycles do tend to encounter the exact pressures that we're seeing today, whether that's inflation or whether that's wages, pressing on corporate profits. That is a typical late cycle situation. But look, markets start getting unnerved in late cycle. Late cycle means you have a higher likelihood of recession. And it's exactly that figure, that inflationary item, that is the primary source of the tipping point. If the inflation remains too high for too long, it can create a kind of a recurrence of that inflation because expectations get built the right way. And therefore it puts pressure on the Fed to do the right thing. And the right thing is actually to kind of place a good amount of pressure on the economy in order to pull inflation back down to normal levels, reset expectations lower. And the question now is how high, how strong is that inflationary pressure? How much do they have to push? And does their pushing in and of itself force us into that recessionary situation?
Yeah, and what do you have odds on in terms of a recession, and whether it's a lasting one that then wreaks some sort of havoc on the unemployment level?
Absolutely. So number one, late cycle, we tend to see somewhere in the range of 30 to 40% odds of recession on average through a late cycle. Now, right now, we have our own recession model. That recession model is actually only gauging at about 10% likelihood at this point in time, but it's been going up. And every month it seems to increase like 1 or 2%. I suspect there's going to be a little bit of a spike upward once we start getting in a little bit more rate increases, because that's one of the inputs into it. So somewhere in that 20 to 30 range is probably our guess at this point in time. I think that really does reflect the likelihood of inflation not falling fast enough in reaction to the Fed's action that allows them to back off and not take us above neutral with their short-term interest rate hikes.
So, Jason, rising but still relatively low likelihood of a recession, but still, like you said, some of those late cycle valuations at the forefront. How do you structure a portfolio amid all those headwinds?
And this is the confusing thing, right? So in a late cycle, typically, even with knowledge that a late cycle tends to eventually lead to a recession, quite often stock markets price at a premium valuation to the longer term history during the late cycle. Once you hit a recession, though, there's a significant drop off back down to below fair value, longer term fair value sort of numbers. But late cycles don't always go that direction. They can kind of recurse back into mid-cycle. They can actually last for about 28 months. The longest ones have lasted 28 months on average. So we can actually hang out at higher valuations. What we're doing positioning-wise is we want to remain neutral with our risk posture until we see that likelihood of recession increase materially so that we know the odds favor being considerably more defensive within portfolios. We're not there yet, and therefore we're just kind of picking our spots, taking risk appropriately, but making sure we're not over our skis.
Talk to us a little bit about duration and the duration in some of those portfolios there, Jason. We know a lot of people scaled back on that duration in anticipation of potentially the worst here. Where do you kind of stand, particularly on that issue?
We're getting way more constructive on duration. Yields have backed up a good amount. It looks more attractive now relative to equity-oriented investments that it has in the past 3 years. So we're actually adding into fixed income. We've started on the shorter end of the scale, 2 to 5 years. We seem to get, we think we're getting majority of the yield in the 2 to 5 year space without taking the extra duration risk. And then as the curve normalizes, that back end picks up over time and normalizes out, we'll probably end up stepping out in duration. But at first, we've been bringing fixed income exposure up as we brought equities down to neutral levels. And then number two, within that, we've been shorter in duration for right now, playing the yield curve. And next step will be stepping out the curve.
Jason, what about alternative assets in this environment?
Look, alternative assets is one of the places to be to defend portfolio in a spot of inflation. Majority of your alternative assets tend to be inflation protectors, whether you're looking at real estate, resource equities, infrastructure, commodities, gold. Those are spots that can benefit in an inflationary environment. They provide some diversification right now. Some of that's been played out. Commodities have gotten a little bit ahead of themselves. We think one of the spots that still remains an opportunity is real estate. We haven't overweighted that at this point in time. And we are also diversifying with alternatives such as hedge funds or absolute return-oriented strategies.
And Jason, it's interesting to hear you say, you are looking at alternatives, great inflation diversifier. At the same time, stepping into duration, which would theoretically not do too well in an inflationary environment. How do you square those two thoughts?
It basically comes down to valuations. Look, commodities are a great inflation protector when the inflation is unexpected. Once it's largely expected, they get to the point where they're actually overpriced and they don't provide as good of insurance. Right? Fixed income kind of works similarly to that. Is when rates are really low, they provide very low protection, and when inflation spikes, they're not priced appropriately, but then they reset. And now they've gone through a reset process and arguably may now be providing a better protector in the portfolio. But in this case, it's actually a protector against the economic downturn that may come from a Fed over-tightening.
Jason, it's always great to catch up with you. Thank you so much for weaving it all together in the narratives. Jason Pride, CIO for Private Wealth at Glenmead. Coming up, well, we are counting you down to the closing bells. Christina Hooper's with us, Chief Global Market Strategist for Invesco. Plus more conversations from the White House. We're going to be recapping, an interview with Brian Deese, National Economic Council Director, on the administration's efforts to provide student debt relief. But do critics think it's enough? Be sure to stay tuned. Triple Take, we're discussing the Fed's balance sheet. Remember? Starting to run off. Andrew Patterson, Senior International Economist at Vanguard. Winnie Caesar, Global Head of Strategy for Credit Size. We're going to see and debate how it unfolds for the Fed. This is Bloomberg.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
At Empower, we believe in opening doors. Let us help move you towards financial freedom for all of life's moments. We've been helping over 17 million customers create the future they want, and we're ready to open some doors for you.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
To adapt in a fast-changing world, you could hire a professional pit crew.
All right. Oh, okay.
They deliver real-time data and business forecasts when you need it.
I think it was fine how it was.
To help you stay ahead of the curve. Or you could use Workday, the finance, HR, and planning system that helps CFOs make better decisions faster.
On the other hand, we had a great fourth quarter.
For an accelerate your decision-making world. Workday for a changing world.
Only at Vanguard, you're more than just an investor. You're an owner. That means that your priorities are ours, too. Our interactive tools and advice can help you build a future for the ones you love. That's the value of ownership.
You know real chili never has beans. You know which pizza is eaten with a fork and a knife, and which one is definitely not. You know a cappuccino is for the morning, and an espresso is for the afternoon. You know how to answer sparkling or still in over 12 different languages. You'll try anything that's not currently alive. Unless, of course, it's highly recommended. The Delta SkyMiles American Express card. If you travel, you know.
Earnings season continues.
There's so much nervousness in the market right now.
This market punches you in the face.
Bloomberg is fastest with the numbers and analysis.
Big numbers from Disney.
It just slammed expectations.
Bloomberg, the fastest numbers and analysis you trust.
This is the countdown to the close. About 41 minutes left to go in the trading day, and yes, in the month of May here in S&P 500. Right now, clinging to, I guess, a modest gain here on a monthly basis. It's down 0.3% on the day, up about 0.5% for the month of May here. So you talk about where these markets have gone over the last month or so. They've kind of been oscillating between gains and losses. The net effect really is almost unchanged, as a lot of folks really sit in a holding pattern right now, waiting to see where the economic data leads us. The Russell 2000 are a similar story. And talk about this two-year yield. Remember, we're coming off of 9 straight months through April of price declines that have pushed that yield higher and higher up to around 2.5% here. We're back down to about 2.53 right now, despite the fact that yields are moving higher here on the day by about 6 basis points. You flip up the board, you take a look at some of the individual movers here on the day and on the month. United Airlines has been down almost 4% on the day, pairing some of those losses, but still down 1%. This was largely on the back of that huge spike higher that we saw in crude prices a little bit earlier that eventually did moderate here on the day. Eli Lilly and a lot of the healthcare stocks are moving lower on the day, down about 4%. And two bright spots, at least on a daily basis. Amazon up 5%, a 4th straight day of gains for Amazon. In fact, something we haven't actually seen going back to March. And Coinbase up about 2.6% right now on the back of a modest resurgence here in Bitcoin prices. Time now for our Options Insight segment, which we do every day at this time with Abigail Doolittle. And Abigail, you are, of course, the master of the technicals here. When you take a look at the technicals, what have you been seeing?
Well, you're very kind, Romaine. Yeah. And in the world, the broader world, we would like to bring in one of the real masters out there, and that is Ari Wald of Oppenheimer, who, Ari, you always strike me, or struck me at least, as one of the ultimate bulls on stocks. You had a great call on stocks going higher, higher, higher. Even through 2018, you talked about that as a very brief correction to buy. And one of your colleagues, I won't really reveal who, separately had said to me that if you ever turned bearish, that he was going to sell his portfolio. So what is your view right now?
That's funny to hear that. Well, we had been cautious on the market for parts of this year. This was deeper than we thought it'd go, but I think we're at the point where we're trying to find a bottom, and I think May 20th was a low in the market, but I think it is too early to call it the low. For the S&P 500, I think this counter trend rally can continue into the index's moving averages. Its 50-day average coming in at 4270. With the 200-day average above that at 4450. So I think there is going to be a nice early summer rally. But with that said, I think more duration is required for this bear cycle that we think we're in. We think this is a bear cycle within a longer-term secular bull. And a bigger base should be required as well as we go into the third quarter.
Okay, so I have a low, excuse me, not the low. And when we bring the put-call ratio into it, talk to us more about how that supports that view. And if it's not the low, how much lower could we go after a nice summer rally?
Sure, yeah. So on options exchange, I think it's so important to bring up the put-call ratio and a lot of these option-based indicators, which do suggest and represent market conditions closer to a bottom than a top. The put-call ratio, I like to look at the 10-day average, coming off a reading of 0.97, which marks the most pessimism in that ratio since April of 2020. Ideally, like to see that reading get even below or above 1, excuse me. That's presented on an inverted scale, which that had marked the extreme for many years. Nonetheless, I do think that does provide contrarian fuel for this counter trend move to the upside.
And then when we bring the VIX into the picture, because the VIX, of course, has recently found some of the highs, but not quite to the highs, never really went back above 40. Do you think that it certainly would seem to support your summer rally at least, but in terms of the low, how much lower do you think that the VIX could suggest that could be?
Yeah, the VIX for me, the threshold's 35. I know a lot of strategists looking at 40 level. I think 35 was at the minimum level for me. December 2018, great example, only got as high as 36. So if you were waiting for 40, you never got it. Of course, there are episodes where you could get to 50, 60, 70, 80.
Right.
But in general, 35 was the level. I think, again, you need to form a base now after seeing such high levels of volatility over the coming months. So I think that was it. I think 3,800, if you look back historically, bear market in a secular bull, you drop 20% peak to trough, usually typically lasts over a 7-month period. We did that 20% decline in a 4-month period. So again, I think a larger W here through the summer months creates that opportunity in the third quarter. And I think 3,800 is more or less going to be the ultimate, the most downside we're going to get.
So more volatility and a new range here on the VIX. Ari Wald of Oppenheimer, thanks so much for joining us today for Options Insight. And from New York, this is Bloomberg.
Today's Options Insight is sponsored by Thinkorswim by TD Ameritrade.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
What could the father of the bride possibly be doing on his phone? Checking with his marital advisor to see if he's on track to do this again. And again. Did I mention she made the guest list?
Digital tools so impressive, you just can't stop. What would you like the power to do?
The moment you wake up, you're on your feet. But for the 1 in 4 adults who suffer from bunions, every step may be painful. And if left untreated, bunions only get worse over time. With the old way of doing surgery, bunions often returned. Lapiplasty 3D bunion correction is changing that. Lapiplasty's innovative approach realigns your toe and secures the joint to fix the root cause. There are risks associated with surgery. Find a Lapiplasty surgeon today and learn more about the Lapiplasty procedure at lapiplasty.com.
Greater constraints and tighter regulations are impacting the volatility of the commodities markets. Bloomberg's enterprise solutions deliver powerful end-to-end support for your commodities workflow. Gain deeper perspective on our planet's valuable resources. From data analysis to price discovery and beyond. Tap into the world's most advanced commodities solutions.
We are 34 minutes away from the close. You have the S&P 500 off its lowest levels of the day, but still about 0.3 in the red. This is Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
If you invest in the S&P 500, your portfolio may be too concentrated in big companies. This can leave it imbalanced and exposed when performance varies. Invesco's S&P 500 Equal Weight ETF RSP is spread equally across the S&P 500, which reduces potential concentration risk and helps keep your portfolio in balance. Stay in balance with Invesco's RSP. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
Fidelity, your dedicated advisor, will work with you on a comprehensive wealth plan across your full financial picture. A plan with tax-smart investing strategies designed to help you keep more of what you earn. This is the planning effect.
What does the future of strength look like? It's a personal trainer that assesses your strength and adds weight as you progress. It's dynamic weight that adjusts for you in real time for a more efficient workout. Come on! And it's a roster of coaches that motivates you to get stronger, faster. The future is strength you can feel and results you can see. And you can only experience it on Tonal.
Learn more at Tonal.com.
It's hard to believe that Brava can go from 0 to 500 degrees in under 1 second. Or that it precisely cooks 3 different ingredients at the same time. It's hard to believe that Brava tells you when your perfectly seared steaks are ready. Or that it roasts a whole chicken in half the time. But seeing is believing. And when you cook with Pure Light, the difference is as clear as day. See for yourself at Brava.com.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Paying for in-flight Wi-Fi for months before I finally caught it. Truebill uncovers hidden subscriptions and notifies you when a charge is upcoming. From there, you decide if you want that service. And if not, cancel it right from the app with one tap. Download Truebill, the money app that works for you.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat.
XLE 8250s, 17th. Tapping the Q 320s out 7200 something K. Fits like Alexa Mobile. Both double tap into JD.
My monthly purchase into one easy installment loan so I can avoid stuff like that. Where do I sign up? Get your upgrade card.
Sorry, single tap JD.
I was asked about it. I was just asked a question about the chart.
Apple continues to try to walk.
Now keeping you up to date with news from around the world, here's the first word. I'm Mark Crumpton. President Biden vowed to meet with lawmakers about gun control legislation following that deadly massacre at an elementary school involving...
Market on close, $214 million on the buy side.
Jacinda Ardern to the White House today. The president told reporters, quote, I will meet with the Congress on guns, I promise you.
So much of it is preventable.
Now 300 million now.
Is amazing. Yesterday, or not the day before, I was down in Texas, and people sat in the room, about 250 of them in a large room, with me for almost 4 hours. Nobody left.
Right up against that 15-minute.
Every single person in that room. Every single person. They waited to the very end. And the pain is palpable.
New Zealand also enacted a series of gun control measures after a 2019 shooting restricting semi-automatic firearms and magazines with a capacity of over 10 rounds. Russian forces aren't letting up in Ukraine. Officials say Russian troops are slowly advancing toward the center of one of the last remaining cities still under control by Kyiv. The move came after Russian President Vladimir Putin abandoned a more ambitious plan to focus on the Donbas area along the Russian border. Hurricane Agatha has made history as the strongest hurricane ever recorded to come ashore in May.
Put on NVIDIA. It's 2023, but still.
It made landfall on a densely, sparsely populated stretch of small beach towns. And
Apple's going to try to push vertical over that 15-minute. UBXY continues to dip.
The storm then quickly lost steam.
It's right about low a day and through here.
Tropical depression. But forecasters say Agatha's heavy rains still pose a threat of dangerous floods for Mexico's southern states. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120
the face page.
countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets, The Close, with Caroline Hyde, Romaine Bostick, and Taylor
Apple
Gray.
with a little bit of penetration over there.
About 27 minutes left to go. We count you down to the close.
I'm going to be honest, I'm not seeing flow to necessarily support this move higher. If I'm being totally fair, I'm not seeing it within the flow.
30 minutes, you've actually seen a lot of shuffling going on.
It's the second line of BitSide 420 calls that have come in the last few minutes.
Consumer discretionary up at the top again.
More BitSide calls.
Down at the bottom, though, remain. You of energy, healthcare leading losses.
Well, you talk about fighting their way into the green. That's actually the story.
And there's a put on UVXY. I guess that's good.
Cap tech stocks. Just a couple of sessions ago, Alphabet was actually down for the month of May with a 2.5% gain on the day. That's going to be good enough for a fractional gain for the month, roughly about 7 to 0.8% here. Still down more than 20% from that all-time high set back in November. But that was some of the dip buying that we saw in this month. A lot of people looked at some of those beaten down names, how much they got beaten down in April and at the beginning of May, and they swooped in and said, well, okay, maybe enough's enough. At the end of the day, though, it does come back to fundamentals, and fundamentals still in the picture. Believe it or not, earnings season is not over. HPQ going to be reporting after the bell, as is Salesforce, 23% growth. That's the number that a lot of people are looking at. That's the contract growth that they've had over the last 4 quarters on average here. Anything below that, based according to Bloomberg Intelligence, would be a bit of a disappointment. Keep an eye on that name because it's been under pressure since its last earnings report. And tomorrow after the bell, we get your favorite, Caroline. Remember when GameStop was rallying last week? What happened? What'd you do?
Did we stop talking about it?
I think so. Start talking about it.
Okay. Take all those shorts away. No investment advice here. But we are seeing GameStop under pressure. It was interesting, though. Take it back to the conversation we had at the top of the hour with Jason Pride over at Glenmead, CIO of the private wealth business over there, talking about duration, wanting to go actually into the longer end of bonds, looking to play the yield curve. Well, people have actually been doing that, well, for basically the entire year. And remember, bonds are having a really torrid time. US Treasuries having a very painful start to 2022 in the same way that stocks have, down about 13% for stocks. And indeed, money have been under pressure. But look, for 4 straight months, we have seen people buying in to the longer end of Treasuries. This is, once again, another sort of tie-up of the month, just to show how much inflows we've had into US Treasuries, longer end, in the month of May. Maybe, just maybe, with quantitative tightening, are we going to see any sort of outperformance? People liking to get that 40 back into the portfolio, it would seem, remain.
Yeah, all right. Well, let's keep an eye here on what's going on there and in the overall world of interest rates. And rising interest rates, maybe they could spell some trouble for some of the companies out there that have really been kept alive by cheap and plentiful debt. It's called zombie firms. This story really caught my eye this morning. Lisa Lee, Bloomberg's global credit reporter, actually wrote this story about zombies. And Lisa, let's just get to the brass tacks, because we've been talking about zombie companies for a long time now, primarily because of all the Fed support, the quantitative easing, and all the other measures out there that were making money just easy to get. And, well, if you were a company under stress, well, it was easy to borrow your way out of your problems. I'm wondering if that era is about to come to a close.
Hi, everyone. Thanks for having me. And yes, it is coming to a close. The era of easy money is over. And the era in which you can just sort of put off the pain of corporate bankruptcies is ending. And with Federal Reserve and other central bank policymakers having to fight inflation, the question is what happens to these companies? Because they're, as we define it, companies that do not earn enough to pay their interest expense. So they need more credit. They need to be refinanced if they're going to pay their interest payments.
And Lisa, what does happen to these companies? I mean, should we expect to see a wave of bankruptcies, a wave of defaults, perhaps?
Well, it's to be expected, but probably not immediately, because these companies took on so much debt and got so much liquidity in 2020 and 2021. They do have some runway, but it's not infinite. And they're going to have to come and refinance. And also, a lot of them got leveraged loans and other types of loans, which are floating rate. And so as the central bank hike rates, interest expenses will go up higher. And so that's going to put real pressures. And on top of the interest rate and interest expense issues, and inflation is going to produce winners and losers. So we have someone like Exxon, which we highlighted, which used to be a zombie, but exited with some of really robust earnings because of crude oil prices. Yeah. Well, other companies are going to have those as input costs, and not everyone will be able to pass them along. We did an analysis of the top 50 zombies, and already half of them are showing margin pressures.
Lisa, just remind us the technical definition of a zombie company, because we love to use the term phrase because, well, it's so sensational, but what does it actually mean when a company is a zombie?
Yeah, so there's different economists use it in different ways, and I think one generally accepted one are companies that you look for a certain time frame that do not earn enough to pay interest expense, let alone pay down their debt. So they're really using easy credit to keep alive.
All right, Lisa.
And other people seem to mistake them for like companies are on the verge of bankruptcy.
Mhm.
But it isn't. There are firms in there who are I-grade, who might last for a while, but they're using capital that they should be doing investments and productive growth to just pay their interest expense. So the problem with zombies is they do sort of weigh down on growth and economy.
Yeah.
On the other hand, if you have a wave of bankruptcy, that causes a whole load of pain too. So
Yeah.
once you get into this almost trap, there's no really great win-win situation.
Yeah, it'll be interesting to see if any of these companies try to come to market here. We are seeing some of the higher rated companies still make a go of it, but some of the lower rated ones having a little bit of trouble. Lisa Lee, great read on the Bloomberg terminal today, our Bloomberg Global Credit Reporter with a look at some of those zombie companies. Meanwhile, we are counting you down to the closing bells here on this Tuesday afternoon, a holiday shortened week here in the United States. Very confusing, but never confusing is Christina Hooper, Chief Global Market Strategist over at Invesco. On the last day here of May, we take a look at the S&P 500 down about 0.1% on the day. Looks like it's going to eke out a modest gain on a monthly basis, but most of the indices right now are under pressure.
Yeah, notable that small caps once again feeling the most pain. And really, this is a question of inflation. It came from Europe. We saw a worldwide sell-off after the moon music turned pretty good in Monday's trade over in Europe. We were more optimistic about China, Katie, but then, well, Europe, record high price inflation, 8.1%. It's kind of dulled our exuberance.
And as we re-worry about inflation, of course, you are seeing bonds sell off a bit. Again, the 10-year yield on U.S. Treasuries at 2.84%.
This is Bloomberg.
Welcome to Lenovo Late Night IT, where industry insiders tell us what they tell their therapists.
Is fog the new cloud?
We're going to have solutions that require some things to be pushed out to the cloud and some things are going to be in between, which is the fog.
Fog is a real thing. I was joking. What's next? Mist computing?
Mist.
Wait, is mist a real
Cloudy?
thing?
No.
Okay, thank you. This is Lenovo Late Night IT.
Fall, September, late September, 25th.
May I be of assistance, sir?
Please. I know the 2013 Bitcoin, but the rest, I really need something well-balanced.
Very good, sir. May I suggest a blend?
Crypto doesn't have to be overwhelming.
That's exactly what I was thinking.
Wonderful. I'll bring that over.
Great choice.
Ask your financial advisor about Bitwise, the world's leader in crypto index funds. What do you see when you look at the surface? Just that, the surface. But dive deeper and new possibilities emerge. Essential intelligence from S&P Global takes you here, providing the data, risk assessment, and workflow solutions you need to plumb the wonders beneath. A better, more prosperous future awaits. It's yours for the seeking. S&P Global. Seek and prosper.
What the world needs now is people. People who see flight a little bit differently. So it takes less fuel to bring people together and make faraway places feel a little closer. With engines that power planes more efficiently. Because seeing a better connected world isn't far in the future. We're building it now. GE, building a world that works.
Right now, we're all feeling the squeeze. But Walmart's got your back with thousands of rollbacks. So you get everything you need to keep your summer rolling. Because when you save money, you can live better.
Today's list is now Angie, and it's easier than ever to get your projects done right. Inside, outside, big or small, Angie helps you find the right solution for whatever you need done. With Angie, you can connect with top local pros and see ratings and reviews. Just search or scroll to see upfront pricing on hundreds of projects. And when you book and pay through Angie, you're covered by our happiness guarantee. It's easy to make your home an Angie home. Check out Angie.com today. Angie, and done.
Your record label is taking off, but so is your sound engineer. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
17 minutes until we finish this Tuesday trade, until we finish the month of May, and we're currently down about 0.1%. We're desperately trying to eke out just a slight gain for the month on the S&P 500, but it was sort of a sour moon music across the world today as we saw European inflation hit a new record high. You saw European stocks pull back and some of that euphoria over the story about China reopening coming out of the Asian markets as well. So all country world index off by 0.3%. Money moving, well, actually out of your usual haven of choice. You've got the 10-year yield actually backing up once again as we anticipate what a Federal Reserve might indeed do, and US dollar catching a bid as yields push up and as we perhaps see the talk about a more hawkish Fed. Christina Hooper's with us, Chief Global Market Strategist for Invesco. You know, she's got, I don't want to age you, but apparently more than 25 years of experience in the financial industry. Who'd have thought it, Christina? But what we know is, and love is your expertise. And what do you make of this month, and what do you make of this trading day? Because volumes are pretty light still.
Wow, this was some month. I would have liked to have been Rip Van Winkle and just slept through the month and woken up to pretty flat returns for the period. But of course, that wasn't to happen. And what we saw really was just a variety of different forces pushing markets in different directions. Of course, sentiment has just been so negative. So much of the month was just beating down stocks, a risk-off environment as concerns grew about how aggressive central banks would become, especially the Fed. And then, of course, I think that there were a number of different small pieces of positive data, news that pushed stocks higher last week.
Yeah.
Certainly a sense that there were oversold conditions. So really, quite an environment. And of course, today, unfortunately, we're capping off with fears about inflation.
I'm curious with regards to sentiment, Christina, do you think that the investor sentiment is more focused on what the Fed will do to sort of keep things under control? Or do you think investors are just sort of skipping over that and looking straight at the data itself?
Well, I certainly think investors now have more fears than just inflation. They're also, of course, concerned about growth, that central banks will just go so far that they will send us into recession. So I think there are a multitude of fears, but certainly centered right now on central banks completely choking off an economic cycle, given just how much inflationary pressure we're experiencing.
All right, sit tight for 1 second, Christina. In conversation with Christina Hooper, Chief Global Market Strategist over at Invesco. She's sticking with us as we count you down to these closing bells on this Tuesday afternoon. A mixed bag here for the major equity indices here, heading towards a monthly gain for the S&P, not necessarily for the NASDAQ.
No, not all winners for the month of May. And bonds, well, money flowed in, whether or not the yields did much. There's the Bloomberg.
That's right, Dan. You got broad passive exposure without triggering a large capital gain. Bye for now.
How'd you do that?
When most people think passive investing, they think
exchange-traded funds. Yeah, ETFs.
But my clients want broad exposure with active tax management, ESG screens, flexible charitable giving.
That doesn't sound like an ETF.
Now you're getting it.
Think passive investing is all about ETFs? Discover custom direct indexing with Parametric.
You know real chili never has beans. You know which pizza is eaten with a fork and a knife, and which one is definitely not. You know a cappuccino is for the morning, and an espresso is for the afternoon. You know how to answer sparkling or still in over 12 different languages. You'll try anything that's not currently alive. Unless, of course, it's highly recommended. The Delta SkyMiles American Express card. If you travel, you know.
Super excited to open up my diploma from Southern New Hampshire University.
I'm nervous, I'm excited.
Okay, let's see it. Let's see it. Oh my gosh!
Jesus Chisores. I did it. And it's here.
Yeah!
Next term starts soon. Visit snhu.edu.
Spend all your money on just one part at the typical auto parts store. When at rockauto.com, you can get all the parts you need with money left over to buy lunch. Go to rockauto.com.
All the parts your car will ever need, Rock Auto.
Are you overwhelmed with more than $10,000 in credit card debt? Is inflation making it even harder to pay down your debt? Did you know Credit Associates can help you reduce that debt? and save you thousands. First, there's the total amount of credit card debt you owe. Whoa! We can reduce that by almost half.
Those decades you'll be in debt?
We reduce that down to as little as 24 to 36 months, giving you up to 20 debt-free years back.
Lastly, how about the stress of being in debt while inflation just keeps climbing?
We can help reduce that too. It's easy to get started, so don't wait another minute. Call Credit Associates now. 1-800-900-3309. Reduce your debt by almost half and save thousands. There's no risk to call. The information is completely free, and you could be debt-free sooner than you realize. 1-800-900-3309.
I'm taking a quick work-from-home lunch break, so I just made these fried eggs with sourdough toast in my Brava. It took a few minutes, and all I had to do was press a button. Brava's cooking technology allows you to cook things that normally require very different temperatures, all in the same tray at the same time. So you get perfectly cooked chicken thighs or New York strip steak or salmon with vegetables that are tender on the inside and crispy on the outside.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Learn more at FuboTV.com.
This is Countdown to the Close from Caroline Hyde.
I'm Romaine Bostick.
And I'm Katie Greifeld. Tail Riggs is off today.
And she misses a May that's desperately trying to eke out some growth in terms of stocks, in terms of returns. But overall, look, we're set from some pretty small gains. You'll take it when you saw the monthly sell-off, of course, that we had in April, one to remember, or one to quickly forget if you're long these markets. But overall, we are seeing some slight reprieve from what has been a really tough, volatile month. Overall, we've actually got a little bit of gains.
Yeah, definitely a volatile month. There were a few bright spots out there. You're going to find that primarily in the home builder space and in the energy space. They're down on the day, as is much of the market here. Home builders down about 0.9% here on the day as measured by the XHB, but still up about 2% here on a monthly basis here. And then you go back and you take a look at what we've been seeing with regards to energy. That's been your outperformer really all year long. It kind of went on pause back in April as a lot of people sort of flipped out of energy into other things, but that reasserted itself here in the month of May. And then keep an eye here on some of the biotechs as well as the transports moving lower once again. A lot of softness in the biotechs over the last few weeks, and transports have just started to get a bit mid-month now that appears to be falling out of favor, at least temporarily. Still with us, though, never falling out of favor, is Christina Hooper, Chief Global Market Strategist over at Invesco, helping us count down to these closing bells. And Christina, let's start off here and talk a little bit more globally, because I am curious. There's been so much talk about what ails the U.S. economy, what ails U.S. markets, but we tend to forget that a lot of what ails us is also ailing the rest of the world. And when you start to look at investment opportunities here, is there any case to really be made that the U.S. or that there might be a better investment landscape other than the U.S. right now?
Well, certainly, Romaine, the U.S. looks more attractive than it did 2 months ago, simply by the big losses we've experienced. But you're right to ask that question, because there are more attractive valuations outside the U.S., and there's potential for real opportunity outside the United States. Now, again, I think there is real upside potential, because I think there's the potential for positive surprise for U.S. stocks. But if we look across the pond and around the world, emerging markets equities, in particular Chinese equities, look very attractive. really oversold conditions, and certainly there is a lot of negative sentiment. But let's face it, policy is in Chinese equities' favor, both monetary policy and fiscal policy. And of course, the potential for China to slowly move out of this wave of COVID.
Yeah, what did you make of the news over the course of Monday trading, really, when we got the optimism around China reopening? What does that bode well, or also there comes then the worry of further bottlenecks, further impact on ports?
No, I think that bodes well. China is still largely the world's factory, and so it's absolutely critical that we see that reopening take place. It's certainly more important for that reason than domestic demand. And so I do think that there's a lot of upside potential just because sentiment has gotten so negative. And really, if we look at Chinese equities, they've been beaten down, notwithstanding a somewhat recent resurgence. There's still a lot of potential there.
All right, in conversation right now with Christina Hooper, Chief Global Market Strategist over at Invesco. She's sticking with us as we count you down to these closing bells. Back to Christina in just 1 second, but over to Katie, who's at the board with our stock of the hour.
I'm taking a look at PepsiCo. You mentioned a little bit earlier, Romaine. Shares taking a little bit of a bath today, down about 2.3%. That's after Jefferies came out with a note and said that PepsiCo's U.S. market share losses becoming more concerning. They also said, to just make matters worse, that valuations look full here. That was good, again, for a 2.3% drop in PepsiCo shares. But let's stick with valuations and look at the index level, because BI's Gina Martin-Adams, she had a great note out on Friday, noting that if you look at the drawdown in the S&P 500's PE ratio, that correction happened 3 times faster than you saw in 2000. That ratio now at about 16 or so. And Christina, I want your thoughts on this. When you think about, again, this correction that we've had in valuations, do you see an opportunity here, or do you think there's more pain to come?
Well, Katie, great question. I think in the shorter term, I think there is the very real potential for more pain. We are on the cusp of the start of quantitative tightening, and this is turbo quantitative tightening. It's not like the last version that we experienced in the last tightening cycle. That combined with the potential for more negative news, the potential for inflation flare-ups in the shorter term suggests to me that we could still experience a leg down. But we shouldn't be scared. We should be sharpening our pencils. And actually, I think it's time to start dollar cost averaging in, either now or soon, into the areas of opportunity, and there are many.
Explain that a little bit more, Christina. I mean, a dollar cost averaging in, but particularly doing so at a time when the markets are down and could potentially go down further. Explain the benefits of that, particularly for longer-term investors.
Well, we'll never know when the bottom is until it's in our rearview mirror. But we do know that we've given up a very significant ground thus far. And so valuations are already attractive. And that's not just the U.S. As you pointed out, Romaine, we've seen similar situations in other parts of the world. And so many stock markets have experienced significant losses. So I think it's now time to start to re-enter or add to positions. But of course, we could be bumping along the bottom for a few months. We could see a leg lower, maybe 5-6% lower. So we want to start dollar cost averaging in, recognizing again that we don't know exactly where the bottom is right now.
And from your perspective, what's the next key market signal for you? Is it the latter earnings? Is it the data? Is it inflation? We've just had the PCE number. What is it that you look out for this week, Christina?
From my perspective, I think in the shorter term, we're not likely to see any kind of key catalyst for the stock market to send it in a sustainable rebound territory. To me, kind of the key time frame for that would likely be September. That then we might see a Fed that changes and gets a little less aggressive when it comes to its tightening path for the rest of the year. Right now, we know that the Fed is most likely going to hike rates by 50 basis points as it's at its next two meetings. But we know that we are then at a turning point where we could actually see a 75 basis point hike if you listen to Cleveland Fed President Mester, or we could actually see a softening. And so I think that that could be a real catalyst.
All right, we're going to have to leave it there, Christina. Always wonderful to catch up with you. Christina Hooper of Invesco, helping us count you down to the closing bells here on this Tuesday afternoon, final day of May. We're going to break down it all for you in just 1 second here with full market coverage right here on Bloomberg, as we do every day at this time, as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Katie Greifeld in for Taylor Riggs. We're counting you down to these closing bells here on this Tuesday afternoon, here to help take us beyond the bell. It's our global simulcast, joined by Carol Massar and Tim Stenovic. We welcome our audiences across Bloomberg Television, Bloomberg Radio, and on YouTube. And Carol, a relatively, I guess, limp end here to the month of May here with the S&P that actually had been clinging to some gains now, kind of falling flat here for the month.
You know, we kidded earlier about sell in May, go away. It's just like May, just go away, like we're done. And we're curious about...
refuse.
You refuse?
There are too many good birthdays in May.
That's true, my brother. No, but it is interesting, and I do think until we get through all the Fed actions and we get to see how that all settles in, we'll get a better idea on the economy. We'll figure out kind of what's the next, Tim, leg when it comes to market direction.
Yeah, speaking of direction, the S&P 500 really searching for direction today, moving between gains and losses more than a dozen times. At its lows, it was down as much as 1.3%.
And volume's still pretty light.
Yeah.
I mean, all of this...
Holidays?
Down 3.8%. I hope everyone's having a wonderful long weekend, but it does feel like there was a muted action returning to the desk today.
I do just want to point out, we talked a lot about the decoupling between tech and crypto on Friday. A little bit of continuation of that today. Bitcoin still up 1.2%.
Yeah, and look, I mean, still up on 1.2%, but where was that real embrace of risk assets, at least the way that we saw it last year and the year before, and et cetera, et cetera? It just seems like, at least for now, no one's really willing to jump in the pool whole hog, just not yet, right?
No one buying the dip. Maybe a little.
Well, there are your closing bells here on this May 31st, 2022. This is, of course, a holiday-shortened week in the U.S. in observance of Monday's Memorial Day here. The Dow Jones Industrial Average going to finish the day down about 0.6%, though it is clinging to basically what is an incredibly modest gain on a month-to-date basis of less than 0.1%. The S&P 500 higher by about 0.6% on the day, and for the month, it's basically just call it unchanged here. It had been a little bit higher in the green on a month-to-date basis, but the NASDAQ decidedly lower here on the day and on the month, 0.4% on the day. The NASDAQ Composite down about 2% on the month. The NASDAQ 100 down about 1.7%. And a quick look at the Russell 2000, which is going to finish the day lower here, though it did manage to eke out a modest gain of about 4 to 0.5% on a monthly basis, Carol.
Yeah, I was looking at that too, the Russell versus the S&P for month over month, and you're right, the small caps certainly beating the large caps for the month of May. Katie, do you want to guess what was the best performing major industry group in the S&P 500 for the month overall?
I would love if you told me.
Energy.
Energy.
It's got to be energy.
I feel like your answer, right? Like last year, this year, it's all about energy. It continues to be that trade.
It's actually so funny that you say that, Carol, because if you look what underperformed today, it was energy way down at the bottom, that sector losing 1.8% sort of as crude fluctuated. If you look at the winners, though, to keep it positive, you did have consumer durables, retailers making a break for it. Under Armour, in particular, did well. You also saw banks get a little bit of love, about a 0.3% gain there. Again, as you saw yields finally start to rise a little bit. Bonds had been rallying, but again, you had energy at the bottom, Carol. Materials as well, not doing too well.
All right, well, good to know. So let's get to some of the specific gainers in today's session, and just pulling it up on the Bloomberg terminal. There were a lot of Chinese companies. I mentioned the NASDAQ Golden Dragon Index was an outperformer in today's market trade, and some of the individual names, JD.com, Alibaba, among those in the NASDAQ 100 that were really outperforming. JD.com, we've got it up on for our TV guys, for our radio guys, it's up about 4.5% here at the close. Easing of some of those lockdown measures in China, and also some better than expected economic news out of China, giving some optimism, but keep in mind that if you look at those Chinese stocks overall, still under pressure this year. I want to mention Estee Lauder. This stock rallying up about 1%, up more than 4% at its highs, but settling just with about a 1% gain. Regaining its top pick status over at Oppenheimer following improvements in China's COVID-19 situation. So you do continue to hear that story. That stock's still down, though, more than 30% so far this year. And Mosaic, this was your top in the S&P 500 today. Fertilizer company. We know that Piper Sandler maintaining overweight, raising the price target to 85 from 80 a share. That stock closing at 62 and change. Stock is up more than 60% so far this year. And I don't know if you noticed, but Amazon was also top in the S&P 500, up 4.5% today.
Yeah, it was a big move and fourth straight day of gains for that company. Yeah.
Well, let's look at the decliners. Interestingly enough, Illumina, the worst performer in the S&P 500 today. Now, we should note healthcare did underperform, but I also want to point out that today's also the day that Ultima Genomics exited stealth mode. This is a company, it's venture-backed, it's developing a way to sequence genes for faster, cheaper, and at a bigger scale. They've been working on this for 5 years. There's a great Bloomberg write-up about this. They say they can do this for $100. It's backed by Andreessen Horowitz, Lightspeed, Founders Fund, and more. The space right now is absolutely dominated by Illumina, so just worth pointing out on a day where Illumina's down about 7%. Snap is finishing the day lower by 9.5%. Vertical Group downgraded Snap from buy to negative. Credit Suisse also lowered its price target to $59 from $77. Snap shares down more than 50% just in the month of May. And here's one that I haven't talked about yet today. This is a fun one. Goldfields Limited. Down 23%. They've agreed to buy Canada's Yamana Gold for about $7 billion in an all-share deal. What's that?
You got that right.
Yeah, South African miner.
I hosted our Bloomberg Canadian show today, by the way, filling in.
Oh, so and it is a Canadian company. Look at that. You know, I had to call them to make sure I got the pronunciation right. Yeah. It's going to cost me a Toronto call.
Did you?
Yeah, that's long distance.
Yeah, how many nickels did you have to put into the?
I'll find out in a month.
On Bloomberg's dime, potentially. Meanwhile, I mean, you go from gold fields over to the world of commodities, and actually, gold was getting a little bit of focus today as we see once again the Federal Reserve focusing in on inflation. In fact, we saw a strong dollar as well. But I want to look across the commodity spectrum because the real story of commodities was the flip-flopping that happened over in oil. We saw Brent crude now down by 1.4%. 115 is where we trade. Now, we had seen previously Brent at about $124 on the barrel. So we saw it pushing on higher as we worried about inflation. We worried, of course, about what finally Europe actually taking some of the toughest action yet seen on Russia in terms of deciding that they would bar some Russian oil imports. However, we then completely flipped reversed after a report coming out of the Wall Street Journal talking about potentially Russia being sort of moved out of OPEC to a certain degree. This is all very much early reporting, but could there be some sort of element that other OPEC members start to fill the gap in terms of production as Russia's stymied further and further in terms of its sanctions? We see, therefore, oil suddenly pull back from its previous gains, certainly on the Brent contract. We saw WTI basically finish flat. Natural gas was actually off by more than 5%. And we had seen a lot of exuberance around China, of course, the focus of a reopening, potentially coming back after the very torrid curbs that we've seen in terms of COVID, but we did overall see some hope coming from commodities into the FX market. The US dollar index actually up 0.4% there. That, as we see once again, focus from the Federal Reserve, Jerome Powell in a meeting with President Biden, therefore tackling inflation. Also, US Treasuries fed into that. But overall, it was a story of the euro going lower by 0.4%. Everyone worrying about the British pound from existential crises to a certain extent. Bank of America talking about that. And I look at sovereign bonds, the UK gilt actually yields pushing up about 14 basis points there. But overall, it was a story of yields going higher globally, Katie.
Going higher globally, going higher across the curve on U.S. Treasuries. You saw a sell-off across all maturities. 10-year yields in particular caught my eye. Those that maturity up 12 basis points. Really, money just getting pulled out of bonds today.
All right, we are still, believe it or not, still in earnings season. Salesforce reporting right now. Shares been all over the map here. It looks like their first quarter numbers did beat, at least on some of the main metrics. Sales overall, $1.63 billion in the quarter. Subscription and support revenue coming in at about a 24% jump in that quarter. We should also point out that a key measure, that the revenue that they look at with regards to those contract obligations did come in slightly above estimates here. But here's their forecast here. They're providing a slightly narrower range for their full year revenue of about $31.7 billion to $31.8 billion. That's a little bit lighter than the $32 billion that they had projected before. Similar story here with some of their EPS numbers. They are maintaining their second quarter remaining performance obligation, which is going to be down about negative 15%.
Well, talk about bouncing around here in the after hours. We did see some selling initially, but now the stock's up about 3.5% here. It's been on a downward move and trajectory here in 2022, down about 37%. But this is interesting because we constantly talk to CEOs and heads of institutions, and they're saying, you know, the tech spend, it's still there, but maybe, you know, initially having to adjust some of their numbers in terms of the outlook. The commentary on that call will be important here, Tim.
Yeah, we're getting a little preview of it. Mark Benioff, the co-CEO of Salesforce, saying, quote, while delivering incredible growth at scale, we're committed to consistent margin expansion and cash flow growth as part of our long-term plan to drive both top and bottom line performance. Once again, co-CEO of Salesforce, Mark Benioff, in a statement.
And let's just talk a little bit of idiosyncratic news, one that people care about from a trading perspective. Meta, of course, the artist formerly known as Facebook, is finally managing to change its FB ticker to META. It's all going to happen on June the 9th, of course. So adopting the new ticker after the name change came last October.
And this has been in the works since January. This ticker had been owned by an ETF, a metaverse ETF issued by Roundhill. They gave up that ticker. Facebook Meta finally has it.
So when do we get to stop saying Meta, formerly known as Facebook?
When do we get to find out how much Meta?
November, December?
I still just want to find out how much Facebook Meta Platforms paid Roundhill
I care very deeply about
this ticker.
that. I would love to get you that answer.
We
We'll
gotta
keep
find
working
that
on it.
contract. All right, guys, we got to run. That'll do it. Wrapping up the month of May, unbelievably, here in 2022. We will see you again on radio, on TV, and on YouTube. We call it Beyond the Bell, but we'll catch us same time, same place tomorrow. You okay?
No.
While Romain recovers from another whirlwind of a close, we see the market coverage coming up apace. We're going to actually flip asset classes for you. U.S. housing prices could be in the process of peaking as mortgage rates hover near the highest levels in decades. We're going to discuss housing in a moment. This is Bloomberg.
Today's countdown to the closing bell was brought to you by Fidelity Investments.
Fidelity, your dedicated advisor, will work with you on a comprehensive wealth plan across your full financial picture. A plan with tax-smart investing strategies designed to help you keep more of what you earn. This is the planning effect.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
When you work in IT, complaints are part of the job.
Bill says the coffee's weak today.
But since CDW helped us switch to Mac, everyone's happier. Dan from finance likes getting performance without a big price tag. Phoebe digs the power of the Apple M1 chip. Mac is easy to manage, compatible with all our apps, and came pre-configured by CDW. Now we're even getting compliments.
That was Bill again, says he loves his new Mac. He's right about the coffee.
Wow, we're crunching tons of polygons here.
What's going on? Where's Regina?
Hi, I'm LaDonna. I invest in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like real-time CGI.
Okay.
Yeah, oh, don't worry, I got it.
Become an agent of innovation with Invesco QQQ. Before investing, carefully read and consider fund investment objectives, risks, charges, and expenses, and more in the prospectus at Invesco.com.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? Can't forget about that, or that either. So next time you think print, remember, when you use Vistaprint, the print abilities are endless.
Well,
a relatively muted end to the month of May, but we'll take the very minute microscopic gain that we managed to get on the S&P 500 for the month, up 0.01%. Nevertheless, we were down 0.6% on the day as some of the concerns about inflation still very much front and center. We got European inflation, the consumer prices running at 8.1% increase year over year, the record high. So we're worried about where the Federal Reserve comes. Of course, Jay Powell meeting with President Biden today to discuss how determined the U.S. is at tackling inflation. The Nasdaq off by 0.4%, Russell 2000 feeling the heat, the small caps off by 1.25% in particular. And let's just take stock for a moment after our fifth month, and as we start to enter this latter half of the year to a certain extent, we're looking at what a rough start it has been over the first 5 months, because we're here in orange is where we are for 2022. We're off by about 13%. Now, only 5 other times have we sold that hard. And only once in those times have we managed to make a break in the red line for flat over the course of the trading year. That year being 1970. And the other times, I mean, in 1931, we're off by 47% by the end of the year. This white line really taking a downdraft. We know the sort of the reasonings why, but we saw in 1962 as well. We never made it up higher. We're down by some 14%. So overall, this isn't a great scenario playing out. We wonder whether or not the market can stage some sort of comeback. Many, like Mike Wilson over at Morgan Stanley, still saying this is a bear market rally. There is more pain to be had. Now, more pain to be had, interestingly, in oil at the latter half of the day. Now, we were talking about inflationary pressure all day. We were talking about oil driving higher once again, up at one point about $119 a barrel on WTI. We're up $124 on Brent as we see Europe really take action against imports of Russian oil. Then came an interesting headline out of the Wall Street Journal talking about potentially OPEC distancing itself, its relationship with Russia in some way, as in trying to offset some of the pullback in production, trying to perhaps make up some of the losses coming from Russia as many a country tried to sanction it. So actually oil prices dropped as many anticipate perhaps a little bit more production, a little bit more supply, but that is still very much early reporting, not being matched by Bloomberg, and thus far we did see the wind taken out of oil prices. Sales remain.
All right, let's talk housing prices because they've been going up and up and up. And, well, maybe they're in the process of peaking. This is mortgage rates now start to hover near their highest levels in about a decade. Now, Bloomberg opinion columnist Connor Sen is actually delivering this message to potential home buyers in his latest column. He says the housing market has turned in the past few weeks and we're probably looking at a cooling off period rather than something nastier. But both possibilities lead to the same conclusion for would-be home buyers. Be patient. Connor Sen joins us right now to talk a little bit more about this. And Connor, it's hard to be patient here. I've been living, above my parents' garage now for the last 25 years. Is now the time where I can finally get out there and get my own place?
Well, I think in markets more generally, we're asking the question right now, are we going to get a soft landing or a hard landing? And in stocks, because stocks can move so quickly, sometimes you have to jump in early and be willing to take a little pain to capture that upside. But housing is a much slower moving asset class. So if we're looking at least, say, the next 2 or 3 months of rising inventory levels, probably flattening out prices, is sort of whether it's a soft landing or a hard landing.
Victoria's Secret was 84 cents.
And Connor, what's the message for would-be home
Sales of
sellers?
1.484 billion is just ahead of estimate for Victor, Sandy, Charlie, Oscar. Sees Q2 earnings of 95 cents to $1.25.
Labor Day than you have in the market right now. I think maybe a lot of buyers don't realize how much the market's turned because it's only been a few weeks. So if you can get out the door now before maybe more of an adjustment, I would probably do so.
What about
That's versus
seasonality in
the
any of this? I mean, I feel time and time again we're struck by unprecedented
97-cent estimate
like usual, but people do tend to buy in
for
certain
Victor,
times.
Sandy, Charlie,
We're about to go through
Oscar.
sort of a summer lull.
Victoria's Secret forecasting Q2 sales to be up low single digits, down low single digits. HPQ, Hewlett Packard, HP reporting $1.08. Hotel Papa Quebec $1.08.
Look for more of a normalization in pricing, and we don't know what we're going to get. We know that
The estimate for HP was $1.05. Revenue of $16.5 billion is a beat for Hotel Papa Quebec.
And you don't know how far it's going to go.
And we should point out, we got that S&P Core Logic data.
Says for 2022, HP is updating its estimate of GAAP diluted net earnings to be in the range of $3.79 to $3.93, raising its previous estimate of non-GAAP diluted earnings to be in the range of $4.24 to $4.38.
Last month, back in April,
That is versus
PIMCO was
the
talking about this idea that he's
$4.25
similar to what he saw
estimate
during the big sort of
for
implosion back in 08, 09.
PQ.
And that yeah, if you're going to rotate out, meaning if you own a home, now may be the time to sort of go to the sidelines, rent for a while.